now.
Welcome back to Worldwide Exchange. As we close on the 6 a.m. hour, a check of a few big stories that we are following. The FT reporting the EU is preparing a list of potential tariffs on U.S. services, also reportedly weighing new export controls as part of possible retaliation if the trade talks fail. Multiple reports this morning, Anthropic has received offers from investors willing to value the AI startup at over $100 billion. That's compared to the more than $61 billion valuation just earlier this year. The reports say despite the enthusiasm, Anthropic is currently not formally fundraising. New details in the probe of last month's Air India crash. An early assessment of the plane's black box indicates the captain switched off fuel control switches, though it's unclear if that was accidental or deliberate. The Wall Street Journal reporting some Trump administration officials are holding up efforts to finalize a landmark agreement with the UAE for billions of dollars worth of NVIDIA's chips. The Journal says the move is due to national security concerns. NVIDIA shares up about 0.75%. And Bloomberg is reporting Walmart is cutting hundreds of store support roles in an effort to simplify its structure. Walmart shares basically flat, just fractionally higher. Week to date, up almost 1%. Turning back to the markets, one more check on futures. Bit of a mixed picture all morning long. Taking a look at where we're at right now, we're seeing the Dow looks like it would open about 45 points lower. The S&P and the NASDAQ both in the green. Let's bring in David Katz, Matrix Asset Advisors Chief Investment Officer. David, good morning. Good to see you.
Nice to see you.
David, your word of the day today, it's jittery. Who's jittery?
The market is basically jittery. You just had a 25% plus run off the bottom, and at this point, you've got a number of good things going on and a number of concerns. The Fed Powell being fired yesterday concerned, the ongoing tariff battle concern. So basically, you have a market that's very skittish. On any given day, you could see a few 100-point sell-off. Yesterday, you saw that sell-off, and then a recovery when the negative news does not seem to be playing out right now.
I want to tell you about the tech trade. We've seen a bit of a roller coaster ride. Tech went up when NVIDIA got the right from the U.S. government to sell its H20 shares, went down on the back of ASML. Now it's back up again on the back of TSM earnings. What's your view of the chip sector broadly and just the tech trade?
Well, that highlights the jittery also. People just don't know what's going on with the fundamentals. In terms of the tech trade, we've liked technology after the sharp sell-off. We thought it would be due for a sharp rebound. At this point, you've got a lot of that rebound. So we think you want to diversify more. We would not be jumping into the tech trade right here. We want to be focused on the broader market, lots of different industries out there, lots of different companies. We focus on really good companies that are laggards rather than chasing the leaders.
All right, so to your point, you are kind of getting into the tech trade. Your pick for us today is Fiserv. We're going to show the chart. Now, this stock is pretty interesting. It's a stock that did not recover in April after the low. It's down just year to date. Why is this a company that you're seeing opportunity in?
Well, that's a hideous chart. So we have owned Fiserv for a number of years. We actually sold it earlier this year in the 220 level when we thought it was fairly valued. They had some short-term setbacks we do think are transitory, and at the $166 level, you're getting a very good business that we liked at 220, but you're getting it at 166 at about 16 and a half times earnings. We think they have a good long-term growth story, but you're not paying too much for it. In some of the technology stocks, and we do own a lot of technology stocks, but in terms of new money, we like to buy reasonable valuations. In some of the technology stocks, you're paying 30 and 40 times earnings. In this case, you get a company with good long-term prospects, but you're not paying too much.
At a JPM conference a couple of months ago, they flagged some headwinds when it comes to their Clover business. They said those headwinds would be mostly in Q2. They expected to recover in Q3. So is the idea here that the headwinds are kind of been resolved and going forward, you see just more upside, or is this a longer-term play?
The headwinds have been fully discounted in the stock price. We think that they might have been a little bit too optimistic. So we think they still might have some issues in this current quarter, but we think by the fourth quarter, they'll be looking a lot better. And at that point, the stock will be a lot higher. So you've got to buy into some of that short-term uncertainty. We think longer-term, Clover is a good business, and we think longer-term, their earnings can grow in high single digits, low double digits, and you're getting it at a really good price.
Yeah, by the way, Clover's a point of sale management. It's about 10, 15% of revenues for that company. David Katz, your pick today, it is Fiserv. Always good to see you. Thank you very much.
Have a great day. Thanks.
All right, here's what to watch today. Several key pieces of economic data this morning, including the latest look at retail sales. That's going to be closely watched, import prices, and home builder sentiment. We also hear from 4 Fed officials across the day today. Remember, we have a Fed meeting coming up at the end of this month. Then on the earnings front, we get results from Netflix. We just covered it. Travelers, GE, Aerospace, Pepsi. That'll be an interesting one, especially after the president says he's urged Coke to put real sugar into its products. Also, U.S. Bancorp, another bank reporting its earnings. When we look at futures, we've been showing all morning long a bit of a mixed look at the futures right now. The Dow looks like it would open about 40 points lower. The S&P fractionally higher, the NASDAQ up right around like 0.25%, but fractionally higher overall. That's going to do it for us here on Worldwide Exchange. Squawk Box starts right now. I'm going to see you at 7 o'clock with your morning movers. Have a great day.
It's true. We're starting right now. Good morning. President Trump saying that he's not planning to fire Fed Chair Jerome Powell, despite polling some members of Congress on that possibility this week. Big bank CEOs speaking out on the importance of Fed independence. The House moving forward on an effort to pass cryptocurrency legislation following the longest ever vote in the lower chamber. Details on that story straight ahead. And President Trump says Coca-Cola has agreed to switch to cane sugar in its soda in the U.S. He says the taste is a lot better, but I think he drinks Diet Coke.
In Mexico, I think they make it with cane sugar.
No. But why are we saying he would know? Because he's a big fan of Diet Coke. So, well, anyway, it's Thursday, July 17th, 2025. Squawk Box begins.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We're live from the NASDAQ market site in Times Square. I'm Becky Quick along with Joe Kernan and Andrew Ross Sorkin. Anybody drink regular Coke?
You gotta be crazy to drink regular.
You used to.
I would if I could. I would if I could.
I like Diet Coke better than Coke.
You
I love Diet Coke.
You run on a, I don't
Love Diet
I don't
Coke.
like the F.
And I like my coffee,
You ever?
as you know.
I'm drinking Sprite Zero now, but.
That's good too.
Do you ever run on a treadmill? If you run, like, I don't run very fast, but in running is an operative term. If
Yeah.
you get 140 calories burned off, it takes like
a long
a half hour.
You should not be drinking Coca-Cola.
That's
Yes.
like, you can either drink a 12-ounce Coke or run for,
I'm with you.
it's empty calories.
Diet Coke.
You're crazy.
Coke
If-
Zero. Do it.
No, I know.
If you're gonna do it.
I know, but if I could, and if you ever feel like upset stomach, something
Yes,
like that,
very helpful.
regular Coca-Cola is amazing. I don't know, what is it? Fructose?
It's like
Yeah.
corn syrup, but I
It
think
is
we think,
good.
although the
But now
recipe's
apparently it'll
secret,
be-
that's the expectation.
Now apparently
But I
it'll
think
be-
I thought in Mexico they made it with.
I
real
believe in Mexico
similar.
it tastes a little bit different.
You gotta
and
love
maybe
it.
a little bit better.
You gotta love the president likes the Diet Coke.
Oh, they said real sugar in Mexico.
The Diet Coke.
Pure cane sugar?
I don't know if it's pure cane sugar. I just know.
No, she said yes.
The Diet Coke to wash down the Big Macs and the fries. I do that a lot. I do that. There's sometimes I've done that. Right? Give me those nachos, Diet Coke. Yeah, right.
But extra cheese.
Yeah, that's.
All right, let's take a look at the U.S. equity futures at this hour. Right now, it looks like the Dow futures are down by about 40 points. You do see the S&P slightly higher, and then the NASDAQ, which hit a new high yesterday, is up another 37 points this morning. I think the S&P closed less than 1% from an all-time high. The Dow is not far from it. If you check out Treasury yields, she said, the 30-year and the 20-year closed at their highest levels since May yesterday. Those yields are higher once again today. The 30-year is at 5.02%. The 10 years at 446, and then you've got Bitcoin with Crypto Week back on in Washington at this point, it looks like, and Bitcoin is close to $119,000.
Meantime, President Trump now denying that he has plans to fire Fed Chair Jay Powell a day after he asked a group of House Republicans if they thought he should proceed with that move. Here's what the president said yesterday about it all.
Completely ruling out the idea of firing Jerome Powell.
I don't rule out anything, but I think it's highly unlikely unless he has to leave for fraud. I mean, it's possible there's fraud involved with the $2.7 billion renovation.
Now, in that clip, President Trump was referring to an over-budget renovation of the Federal Reserve that has drawn criticism, but that many see as a pretext for President Trump ousting Powell. In a radio interview that aired later in the day, the president then said that he would love if Powell resigned, but acknowledged removing him would disrupt markets. Goldman Sachs CEO David Solomon, Bank of America CEO Brian Moynihan both weighed in on the Fed yesterday during interviews right here on CNBC.
I think central bank independence, Fed independence is very important, and it's something we should fight to preserve.
The stability of this country is actually necessary and important to the whole world, and I think a stable Fed and independent Fed is key to that.
Fed Chair Powell has been getting some support from an unlikely source. That's Massachusetts Senator Elizabeth Warren. She's been vocal about Fed independence, and we're going to speak with Senator Warren at 8:40 a.m. Eastern Time this morning. We're looking forward to that conversation.
I mean, I understand that the idea of firing Powell to get lower rates would make you question Fed independence, but I don't think anyone on the entire planet can make a case that the Fed should not be independent. Because it's the most obvious thing in the world that there are times when you need to take some tough medicine, and because we all lived through Paul Volcker and 21.5% prime rates when inflation was, we know that you can't just keep the good times rolling all the time or you're going to get South American inflation. So I don't even know why, we call it news when someone says that they think the Fed should be independent.
It seems like the president is saying it shouldn't be.
That's what I said. But the idea that you get rid of someone because you want lower rates, and I'm not saying we shouldn't have low rates. I'm not saying we should. Nobody knows.
Right.
And the Fed has a tough position. They really do. But when you're always waiting to see something before you do something, you're never going to be ahead of it. But there's, you know what I mean? You
Right, but do you think
if you had to choose right now, is inflation worse or is the possibility of a slowing recession or of a slowing economy?
Inflation.
Which is worse? You think inflation?
Well,
worse?
if it gets out of control,
Right.
I mean that's.
But either one, if you wait till you know, then it's going to be hard to stem it in the early stages.
But do you think that the FOMC has some magical insight?
I wish they did that. You need someone really. That's why guys that know things that are going to happen are money managers. They're not working.
But money managers aren't always right.
No, they're not always right either. Yeah. But you could, if you knew, you could make a bet now. But I kind of think inflation. Now I'm thinking that
here's a different question.
It's not the main thing.
I still go back to the idea that I think that the market's already seeing through the fact that Jay Powell is not running the Fed.
Oh, yeah, it's already a shadow.
Like that, I already think that there's a shadow Fed. And I think that these comments have already put the independence of the Fed, not in question, but sort of optically and just even psychologically how the market thinks about what's happening.
Yeah.
I think the bad news is I think that the Fed is going to be much less likely to cut rates because it's going to look like they're caving.
Well, that's the other thing. All of these things don't help.
I know. Well, we're three talking heads opining. We have Warsh coming on, so someone that might be in that chair someday.
And we're going to talk to him.
We can talk to him a little bit better about all of these things. He's on at 8 a.m. And amid President Trump's criticism of Jay Powell, we're hearing from other Fed voices on the economy. New York Fed President John Williams said yesterday that monetary policy is in the right place now to allow central bankers to monitor things before doing anything, taking next steps. He also warned the trade and tariff impacts are only just now starting to impact the economy. Meanwhile, Atlanta Fed President Raphael Bostic saying he still supports holding interest rates steady, though Bostic is not a voter on rate policy this year.
And the House adopting a rule late last night to bring forward cryptocurrency legislation. That vote took more than 9 hours as Republican leadership worked to win over holdout members. Originally, I think there were 13 Republicans who had voted against it. So it was a bit of a heavy lift. It did set the record for the longest vote in modern history. A bill to establish federal guidelines around stablecoins is likely to be the first bill that's passed. The Senate has already approved that. Also set to come under consideration is a separate bill to create market structure rules for crypto products.
And the Senate voting early this morning to pass a package of spending cuts that's requested by President Trump. It cancels previously approved funding of about $9 billion for foreign aid and corporations for public broadcasting, which of course funds PBS, also NPR. The vote 51-48, and then followed by a 13-hour series of votes on amendments. Republican Susan Collins and Lisa Murkowski voted no on that bill. Will now head back to the House, which narrowly passed it last month. It will need to be approved and signed by President Trump by the end of the day tomorrow for the proposed cuts to stand.
No one can cut anything, even Republicans. I mean, the margin was like 2 in the House, and barely did it here as well. The thing with where it takes 9 hours, do they know they're going to eventually, do they get something?
Probably.
Maybe
it's either you get something or it's a huge amount of pressure that's brought to bear. Like, hey,
It's
you're
almost,
holdouts, and I'm
it
going
looks like a
primary you
kabuki
next
dance.
time
It
around.
doesn't look like a kabuki dance. So this thing. I mean, you wonder why
What's
people.
a kabuki dance look like?
I
We use that all the time.
we
I
do.
have no idea.
I can't. I think it's the
Kabuki
costumes
dance,
that
like
are
a
more.
secret dance or something. Yes, no. It's
I know it's Japanese theater.
Yes, but I think
I
it's-
don't know what it looks like.
It's different than the horizontal mambo. I know that. United Airlines shares are lower, isn't it? I don't know what that is
looks
either.
like.
No, I don't either. Lower after the company reported mixed second quarter results. Company saying travel demand has picked up since the beginning of this month, thanks to less geopolitical and macroeconomic uncertainty. But United said it expects current quarter earnings to suffer because of problems at its Newark, New Jersey hub. Company now projecting full-year adjusted earnings at $9 to $11 a share. And don't miss a First on Squawk Box interview. United CEO Scott Kirby coming up next hour. I'm sorry I watched Shane Gillis in the ESPY Awards.
Was that in it?
No, but I figured, what the hell? Because he did, and every single thing he said, he goes, whoa, we talked about that. I knew it wouldn't work. It was.
Yeah.
Yeah, exactly. But he's getting a lot of play on social media. Some people think he went too far. Other people thought it was funny. But you want, check it out. You can see all these. You don't have to watch live.
I'm thinking, I'm gonna leave you out there in that lamb. I'd rather do the chicken dance.
Yeah.
I'm
Okay.
a little afraid.
But
I'll go
the
with chicken
kabuki,
dance.
can we see what that? I think it's costume.
I was looking at it. It's a big costumes, big
a lot of pomp and
makeup,
circumstance,
a lot of pomp and
but
circumstance.
nothing. It doesn't accomplish anything. I guess that's sort of a kabuki dance.
Maybe
Isn't it?
that's the. I don't know.
But you looked it up.
I'm gonna look it up too.
We'll talk about it later.
We'll have to figure a little bit more.
Maybe we get some video.
All right.
Not of the other dance.
No. When we come back, much more on the drama surrounding President Trump's public musings about getting rid of Fed Chair Jerome Powell. Noted Fed watcher Nick Timiraos from the Wall Street Journal is going to be joining us to talk about all of this, what the impact is on the Fed at this point, what the circumstances surrounding it may be. Stay tuned. Squawk Box. We'll be right back.
What's up? PepsiCo just reporting earnings of $2.12 a share, 9 cents better than estimates. Revenue $22.7 billion. That was in line with expectations for the full year. Pepsi says it now expects a narrower drop in annual earnings as demand for its energy drinks and healthier soda brands offset some broader weakness in consumer spending. Of course, we know that this company is more diversified. What is that, vertical or horizontal? And you understand that? No, I'm not talking about that. They got all the snacks. Not just different drinks. They've got a
snack lines. Frito-Lay North America revenue was up by 1%.
They have a lot of toes, Fritos,
that's
Cheetos,
not horizontal, that's vertical.
That's vertical.
I'm sorry.
Okay.
No, that's horizontal.
Okay, but they have
horizontal, right?
Yeah, that's horizontal.
And some people have criticized, what is right, Coke or Pepsi? That's you focused on the. No, I was not. I was not. And a programming note: PepsiCo CEO will be on Money Movers today at 11 a.m. in a CNBC exclusive interview. Did you get your bag yesterday?
I did.
Did you look in it?
I did. There was something spicy lobster Pringles or something.
Really? That's weird.
Yeah, that's what I thought.
Weird. That's like clam ice cream.
But there was also lobster ice cream. I've actually had. It's terrible.
Yeah, I can imagine.
Yeah. But there was something interesting.
You don't
in there.
get those.
Yeah, he does.
Oh, you do get them now.
I didn't open it.
You didn't look through it.
No.
I'm on a Scarsdale thing, so I'm not.
Scarsdale diet is what you're on.
I certainly am. And there's
That's why you're so.
Yeah, and there was a reason someone shot that guy. There was a reason because of this diet that he came up with. That's probably not why, but it is hard. 1,000 calories a day. President Trump. Enough about me. Now you talk about it. Confirming he has no plans to fire Fed Chair Jay Powell, downplaying earlier reports that suggested otherwise. Joining us now with the latest on this story and what firing Powell could mean for the markets. Nick Timrose, Wall Street Journal chief economics correspondent. Earlier, Nick, we were
Fed whisperer.
He is. He's got. If you read it from him, you probably can trust what he's saying. But my point earlier was, have you ever heard anyone argue that the Fed doesn't need to be independent? No one seriously that has any sense of history would say that, because we know what happens when you keep rates too low. You turn into South America, or country in South America.
Well, Joe, thanks for having me. I mean, this is not about buildings, right? We're talking about these building renovations, and you're right. This is about whether this institutional arrangement we've had in this country is going to continue. There's no law that says the Fed is protected in this way. We don't even know how a court would rule. So this is about the administration trying to put more pressure on the Fed and really win, not in a court of law, but in a court of public opinion. And buildings are salient. I mean, it's something I think it's breaking through. Everybody understands it. I get text messages saying, is the Fed really doing this? How did this happen? It reminds me in the 1970s, there were false stories planted about the Fed chair, Arthur Burns, by operatives of Richard Nixon to put pressure on him. They said he was seeking a pay increase at a time that the Fed was proposing income and wage and price control.
And that's why Arthur Burns caved.
They put pressure on him. I mean, they were pushing on an open door, I think, with Burns, and I'm not sure that's the case here with Powell.
Right.
But so this is really about just a maximum pressure campaign. Maybe it gives them a pretext to try to remove him if that's something the president wants to do.
Right.
But I'm exhausted just following back and forth.
The other example is the first Bush, who blamed Greenspan for losing it. But then whenever we talk about this and people go back historically, prior to the Nixon thing, there were some other really solid examples of unbelievable pressure from the executive branch on Fed chairs in the past. It's happened again and again. Is this the worst you think it's been, or sort of par for the course?
It's the worst in our kind of modern experience. I think the other point here is that we are going to have the most unusual Fed transition ever, since at least the Volcker one, because in '87, Volcker to Greenspan, in '06 when Bernanke came in, Yellen in 2014, Powell, they all pledged continuity with their predecessor. They said, I'm going to step into the shoes of my predecessor. I'm going to try to be the same Fed. And now we have people who are running for the job who are saying, I'm going to be completely different. And so it's going to be a very unusual transition, even if it happens on the normal May 2026.
Right. So what do you make of the argument that actually the independence of the Fed is already over? I mean, that the market already recognizes that Jay Powell won't be in that position. It's unclear who will be, but whoever will be will have made some kind of blood pledge to the White House to lower rates by default. And by the way, whether they have or haven't almost doesn't matter, because the perception is and will be that that's the case.
Well, so it's obviously what the president's doing here is putting the next Fed chair in a very difficult position, right? They're going to have to prove to the market that they're not what everybody thinks they are. But you still have 11 other people who are going to vote on monetary policy. So I think the risk here is that, Jeb Bush said you have to lose the primary to win the general. You may have to win the chair and lose the committee, and you become a chair in name only if you push this too hard. So I think that's the risk here. And a lot of the the things I was hearing a decade ago when I started covering the Fed, Taylor rules, we need to get rid of discretion, low rates are bad for savers, and now you have a president demanding, negative real interest rates. And so it's just, it's a remarkable situation, the switch, the back and forth that you're seeing here.
And the big transition you're talking about, biggest ever, is the guy that's picking the new Fed head is the same guy who picked the last one that we're having the big transition from. So it's the same president that is going 180.
But Andrew, to your point, I mean, people saying the Fed has already lost their independence, I don't hear that. I mean, you don't see the reaction yet in the bond market that would suggest
we can't run a Fed that way.
But let's just play it out. Play it out. And I bet you the
president
president
is going to be like Mayor Adams.
Well, no. Let's just play it out though. In the following, maybe that's actually a good way to think about it. I don't know. If in fact tomorrow the president were to announce that he was firing Jay Powell for cause,
right,
because he believes that he had found something in the way the building is being created, whatever, and it's even if it's all totally made up. Let's just I don't know made up or not, but let's just say that's what happens. What happens in the bond market that day?
And with the dollar.
Right. They have to announce who's the new king going to be. So they'll have to put that out. The market will have to assess. I mean, I think it's very unlikely Powell would go in that situation. All of his body language. I mean, go back.
Right. No, I understand that. But let's say we got the picture of Kevin Warsh here on the screen. Let's say they announce Kevin Warsh is getting put into this spot. Jay Powell is going to be fired. Jay Powell says, "I'm not going to be fired. I'm going to go to court over this." The bond market reacts. And by the way, if they actually think that for some reason Kevin Warsh, if you think he's going to lower interest rates, or whoever it is getting in this role, like, what do we actually think happens? Because I think in truth, and this is the interesting part about President Trump, I think he thinks to himself, play that whole thing out. Does the bond market decide, like,
and was yesterday an interesting test?
Yeah, we're just not doing this.
I think we don't know. I mean, I talked to someone yesterday who said the danger here for people who believe in the Fed independence is that the market actually doesn't react all that much, that it reacts over time. You get into some situation where the Fed needs to do the unpopular thing, and that's when you see the long end sell off. But the danger here is that, as with everybody saying, oh, we're going to have all this tariff inflation, and then you don't see it as the CPI. Same thing here. What if the bond market doesn't?
Well, that's where I think President Trump actually is. And
that's the
he sees through a lot of these kind of things too.
Look at the candidates that are there. The two Kevins, Scott Bessent, Waller, whoever the candidates may be. Is there an Arthur Burns among them?
Not for me to say. I mean, it's awfully hard to tell how the next chair is going to step into this position.
It actually is for you to say, by the way, since you're the guest.
No, I'm not the opinion guy of the Journal. I don't work for the opinion page. It's hard to say. I mean, what does the economy look like in the second quarter next year? I mean, maybe by then, what if we've gone into a downturn and the Fed has had to cut? It's very hard to game these things out.
I mean, that's what Bank of America was saying yesterday. Brian Moynihan, when he was on, was saying, look, we believe in the independence of the Fed. Their own internal expectations of the Bank of America is you're not going to see a lot of cuts until the second half of next year, which would be when the new Fed president's there anyway, Fed chairman's there anyway. Then they're expecting 100 basis points of cuts at that point.
Yeah, you see some of that priced into the market right now, but these arguments around
just that
fiscal,
the economy would then be arguing for rate cuts.
Well, there's some people who think, June next year, maybe the new chair comes in and tries to provide some additional restraint.
I mean, Nick, if you don't have someone who's willing to act on experience or intuition or to try to look around corners, you might as well have the Taylor rule. If all you're going to do is wait for data to tell you what to do, you're never going to be ahead of it, and you're probably going to be behind like they were a couple of years ago when inflation was going to run hot. Now they could be behind in trying to get ahead of an economic slowdown. They may be behind again.
Well, you're absolutely right, but let's not ignore the tariffs here, putting them in a difficult position after we've had 4 years above the target. So there's some worry here. Are you going to see the second round affects
But your paper, every time they talk about inflation, they say it's not from tariffs. It's from too many dollars chasing too few goods. They always say it can be a price increase, but not the second derivative.
I think that's the challenge here for the administration in arguing for cuts. The most persuasive arguments that I'm hearing for rate cuts right now is that tariffs are going to destroy demand. So the consumer is not going to be able to accept higher prices. Companies are going to have to compete. They're going to lose market share. Everybody's paying attention to goods, inflation and goods. Well, what about services? Let's watch services over the next couple of months, because if this is going to get passed through, if it's a relative price adjustment, then services is going to continue to disinflate, and that'll take some of the edge off here. Exactly. But they can't make the argument that our policies are going to weaken the economy, so you need to cut interest rates.
Is there anyone in the world that could do the right thing a year before it happens?
It'll be obvious. It'll be obvious in hindsight.
If you wait to see the whites of their eyes, you're definitely going to be behind the curve, almost every time.
This is all about making the mistake that's easier to fix, right? That's one way to think about risk management. Are you going to get off sides? If you think you're going to get off sides, you just want to make sure that you don't have to jump too far back.
That's just like golf. If your worst thing you do, you don't reach a green, but you keep it in the fairway instead of
You want to avoid Rob Kaplan made the point to me. You want to avoid mistakes that take a year to fix.
Right.
If it takes a couple of meetings to catch up, you have to cut a little bit more. Okay, right. But if you're off sides and it takes you a year or 2 years to get back on sides, that's what you're trying to avoid here.
So we don't want predictive behavior.
What's the mistake that's easier to fix?
Yeah.
Right.
You're very wise. You're very wise, but you look very young. But you're very wise.
Thank you very much.
You think that's a golf thing? I was going to say that's an Amazon thing. Because Jeff Bezos used to always talk about one-way doors and two-way doors.
Definitely a golf thing.
If you have a one-way door, you got to take your time to figure it out. If there's a two-way door, go quick with your decision. It doesn't matter.
Because I know, but if your really bad shots are like you get a 9, it's bad. If your really bad shots are that you don't get a par. I've done both, obviously. Nick, thank you.
Nick, that was fun.
First class problem.
Thank you, sir. Come on back.
You're going to wait for Walsh? If you got your VCR?
Yeah, I'll stand right out here trying to get him on the way. He
Are
talked
there VCRs around?
VCR.
There's not even TiVo.
No, just play it back on your Betamax. Have it on an 8-track.
Thank you. Shares of Elevance Health are falling. Earnings coming in at $8.84 a share. That's 7 cents below the street's expectations. Revenue came in at $49.4 billion, and that was slightly above expectations. But Elevance did cut its full-year earnings outlook to about $30 a share. The street had been expecting guidance above $34 a share, the company citing a broader industry trend of rising expenses impacting healthcare providers. And right now, it looks like that stock is off by about 5.1%.
Coming up, President Trump teasing a potential change in the ingredients of Coca-Cola. This would be a very big shift for the company if true. We'll bring you the if true details right after the break.
President Trump says Coca-Cola will be updating its American ingredients list. That news coming in a Truth Social post from the president, who is a noted fan of Diet Coke. He said, "I've been speaking to Coca-Cola about using real cane sugar in Coke in the United States, and they have agreed to do so." He added, "It's just better." U.S. Coca-Cola is made with high fructose corn syrup, at least as best as we know. It is a secret recipe. Archer Daniels Midland is one of the biggest producers of that ingredient. The shares for Archer Daniels are down by about 5.7%, much lower in the pre-market. When asked later yesterday about the president's claim, Coke didn't explicitly say that it would make that switch to cane sugar. In a statement, the company said, "We appreciate President Trump's enthusiasm for our iconic Coca-Cola brand. More details on new innovative offerings within our Coca-Cola product range will be shared soon." So if you're reading through the corporate speak here, it sounds to me like, oh my gosh, he made public comments that we were making to him kind of privately with maybe something we're planning. I would almost wonder, based on that statement, if they're just going to do a different line of Coke that says pure cane sugar and keep the old stuff there too.
In fact, they go on to say that they're thinking about introducing something called New Coke. Do you remember that?
Yes.
Like one of the
It was
greatest.
during the Cola Wars
and it
with
tasted
Pepsi.
like,
Pepsi.
yeah. I mean the reversal on that was.
That
is
was
that like
really
30?
great.
Is that like 30 years ago?
No, it's like 40 years ago.
Like 40
Yeah,
years
but
ago.
it was back in the 80s.
Huge hoopla.
Maybe 35
Huge
years ago.
campaign. And
Big campaign, they did it.
Like,
but
why?
it's also been written up in business schools because they thought they were losing out to Pepsi. They wanted to catch the Pepsi generation was going on at that time. They wanted to capture the younger generation. It's also the fastest about face that you've just about ever seen.
Yeah.
Where this is a marketing stroke of genius, or actually corporate governance that is still studied to this day in Harvard and other places about how quickly they pulled it and said, never mind, we made a mistake, we're going back to the old stuff.
But here we are now with 10 different versions. Like Coke Zero, and they kind of did introduce a bunch of new Cokes, but they just
Yeah.
didn't.
But a different name,
they
a
didn't
different
get rid
name.
of the old
Yeah, but they
That
didn't.
makes a
get
big
rid of-
difference.
Yeah.
I would be
Classic
shocked.
versus-
Oh, in fact, then they started calling it Coke Classic.
Coke Classic.
Yeah.
It's
Yeah.
Coke Classic.
Exactly.
Coming up, a lot more on Squawk Box this morning. A report out saying that U.S. strikes on Iran's nuclear program may not have been nearly as effective as the White House says. We're going to talk about that report and what it might mean. And as we head to a break, a look at yesterday's S&P 500 winners and losers.
overwhelm and make it count.
Good morning. Welcome back to Squawk Box. We're live from the NASDAQ market site in Times Square. And if you take a look at the futures this morning, right now the Dow futures are off by just over 60 points, but you do have the S&P up by about 3 points and the NASDAQ indicated up by 33 points after it closed at a record yesterday.
And GE Aerospace out with second quarter results. Phil LeBeau joins us now with more. Hey, Phil.
Hey, Joe, check out shares of GE Aerospace. This is a beat on the top and the bottom line and a beat on both by a pretty good percentage. GE Aerospace in the second quarter earning $1.66 a share. The street was expecting $1.43 with revenue coming in at over $10.1 billion. The street was expecting $9.59 billion. And these metrics, these are year-over-year metrics. Listen to these because this speaks to the strength of the second quarter for GE Aerospace. Operating margin, 23%, roughly in line with where they were a year ago. Free cash flow, $2.1 billion, more than double the free cash flow in Q2 of 24. Commercial engine orders up 28% year over year. Commercial engine revenue up 30% year over year. That's because the number of engines delivered, commercial engines delivered, jumped by 45% in the second quarter. As a result, GE Aerospace raising its guidance for full year earnings, going up to $5.60 to $5.80 a share. Previously it was at $5.10 to $5.45. Free cash flow now expected to be $6.5 to $6.9 billion. That's up from $6.3 to $6.8 billion. And they are now putting a target out for 2028 free cash flow of $8.5 billion. Lots to discuss with Larry Culp, CEO of GE Aerospace, on a big quarter. He's going to be here with me. We're in Evendale, Ohio. Joe, your hometown.
Yes,
We're going to be talking with Larry in just a few minutes about what was really a huge quarter for them. Really starting to see the supply chain kick in, and you see that with the Q2 results in terms of commercial engines.
Yep. I can almost walk there from my house, Phil, in Evendale. I guess, you know what? Can we say it? I think Larry Culp might have been the right guy. Good God. $29. Within the last
Joe,
5
put
years.
up a chart. Put up a chart.
I'm looking
at the
at
last 3 years of GE Aerospace versus the S&P 500. That's impressive by itself. Now compare it to the S&P 500.
Let's go 3 years or 5 years. Yeah, go 3 or 5 years.
Yep.
Too, would be better. And sick. Yeah, really.
Sick.
Sick. Just sick.
Like the kids say sick?
Yes.
Yeah.
Yeah.
Like sick burn?
Like that is.
That's bad.
That is one fat return there. Phil, too. I'm looking at the market cap. I mean, I didn't think it was possible. Market cap's almost $300 billion. It was under $100 billion, well below $100 billion.
Sure.
We know because we still had some shares,
Joe,
which I luckily sold at like 12.
Yes. Everybody at NBC had those GE shares. Look, these guys were out in the desert. And when Larry came in, he first had to organize things and say, okay, what are we going to spin off here? We're better as just a commercial engine, not just commercial engine, but an aerospace division, separate from healthcare, separate from renewables. Once he got that figured out, then the stock was off to the races. But it's taken some time with the supply chain. And Larry Culp has talked about that time and again when I've had conversations with him. It's going to take some time, but it's starting to kick in. And this all speaks to the moves they've made with flight deck in terms of driving greater efficiency, et cetera. We'll talk with Larry about that in a few minutes.
Maybe our options. We had options that also all expired worthless at 40 because ML didn't reprice ours. He just repriced his. Maybe he signed it with an auto pen. When he, is that possible?
You're just throwing it all out there.
How does my mind work? It's insane. I know, you're looking at me like did he use an auto pen? Do you know?
What's in the coffee this morning?
I was thinking about what Larry Culp did.
I don't drink coffee.
To turn this around, and he came back. I don't think his wife wanted him to take the job originally. He got hammered with so many things that happened, and then to have to deal with the pandemic and all of the stuff that came from that. And now he finally gets to see everything he pulled together. And
I know you're looking right now
how
to see
great
if
that
there's
was.
any chance those options are still good. I see you typing.
Andrew and I don't have those.
You didn't have any from G?
That predated us.
Well, we're all equal then, because I don't have any either.
Well, no, we're not all equal because we don't have a spite.
Yeah, you're not
got
bitter.
angry.
You're not bitter. But Welch,
party
when
of
Welch
one.
gave us those, it was such a big deal. You were so proud. Thank you, Mr.
Faber has talked about it on
Yeah.
here too recently.
I've got a whole wallpaper with. Yeah, Faber has.
Coming up,
He's bitter. He's
we've got
Oh,
a
he's
bitter
not
party of
bitter.
one over here, and we're going to continue that party. We're going to talk more about Congress's effort to pass stablecoin legislation after that 9-hour vote in the House yesterday. Do not go anywhere. Squawk Box coming back right after this.
Viciously.
Welcome back to Squawk Box this morning. Crypto legislation clearing a hurdle in the House. This after a 9-hour vote to establish the rules of debate, though, on the bills finally passed. Now joining us to talk about the potential regulatory framework for crypto and what it all means is New York Department of Financial Services Superintendent Adrian Harris. Back in 2022, Harris passed stablecoin guidelines here in New York.
Wow.
We've made a lot of this, and I guess the biggest question is just how important is this bill ultimately? And if this all happens, what happens? I don't think people really actually even understand.
Well, right now in the United States, there aren't really any rules of the road for crypto or stablecoin outside of New York and what we've done at DFS in the past 4 years. So it's really important that we have a national framework to govern this technology, especially when it comes to the supremacy of the dollar as the reserve currency. So putting this in place is going to be good for innovation, good for markets.
But just drill down, because I think people talk about Genius Act all the time, and they don't even know what they're talking about here. I mean, we have conversations on the set recently about tokenization. People are tokenizing private company stock, for example. I don't think this bill addresses whether that's legal or not, technically.
No, so I think it's really important to distinguish crypto assets, tokenization of real world assets, and stablecoin, which is what Genius addresses, right? So Genius really takes from what we did in New York 3 years ago to put in place guidelines. There will have to be rules written, but things like one-to-one reserving. So to make sure there's $1 for every stablecoin that a stablecoin issuer issues, right? So that's backed one-to-one with cash or cash equivalents. That a consumer can redeem that stablecoin within a timely timeline. So
are you of the view, so right now Circle is the winner of the game.
Yep.
They're the only game, really. Do you see over time there being multiple circles as a result of all of this, or is this a winner-take-all proposition?
I think that's a really important question. I do think the regulatory framework coming into place nationally makes it easier for people to come in because there are clearer rules about what's going to be expected. But Circle, for instance, is one of our regulated entities. So they are already subject here in New York to the one-to-one reserving, T+2 redemption, the public attestations of reserves. So all of that is stuff that Circle complies with. Others will now have to comply with it nationally.
I don't know if you can say this or not, but would you short, for example, all of the credit card companies, anybody who owns one of these networks, anybody who's engaged in financial transactions of any sort, given the idea that if stablecoins were to work the way they're supposed to work, you would think the margin compression on all of these fees would go to basically zero.
All the credit card companies, the superintendent of the Department of Financial Services. And you don't mean her, actually. You mean if you were a person who could.
If you were a person trying to understand where this all goes directionally, if this works the way it's supposed to work, you would think that it would take out a lot of margin. And then the question, who is going to capture that margin?
So that is the promise of stablecoin, right, is that it is redoing the financial infrastructure. So things can move more quickly, they can move more cheaply, faster, right, across borders and all of that. So I will stay away from giving investment advice
or doing it yourself,
or doing anything myself. I don't do that. But that is the espoused promise, is that this is going to remake the financial infrastructure in a way that's digitized. You can have smart contracts, right? So everything becomes more efficient.
Do you believe that's the case?
I think there's a lot of hope for that, but there's a long way to go. I think one of your guests earlier this week was talking about we're in the first inning when it comes to digital assets, right?
You were watching?
Of course I was watching.
What is the biggest risk of all of this?
That's good.
What's the thing you worry about and you say to yourself, if the bill gets passed and all the things happen, this other bad thing could happen?
Well, so one of the things in the bill in Genius is they allow for foreign issuers to issue into the U.S. unregulated for 3 years. I think that's a really big risk here. It essentially puts U.S. companies that are coming through the front door at a disadvantage. And I was watching earlier this week when Bob Diamond said, look, the mature companies want to be regulated. Right? By giving this 3-year exemption for foreign issuers. Yes. Right? It's a really big loophole in Genius. Part of it is just there's time between enactment and when the act becomes effective. That's 18 months. And then they've built in another 18 months.
Why would we give overseas entities a break that you don't have to meet the same standards that you do if you're doing it from the United States?
It's an important question. I mean, it's something I think a lot of regulators and others have been highlighting as a real important defect in the bill.
That's a good question. Yeah.
Come on back and keep watching. We'll get Nielsen box, the whole thing. We'll appreciate it.
Yeah.
That's fun.
Thanks for having me.
Thank you.
All right, when we come back, GE Aerospace CEO Larry Culp will join us following the company's latest results. Stay tuned. Squawk will be right back.
InfoWars.com.
Coming up, GE Aerospace CEO Larry Culp next on the company's earnings. We've got him right here on Squawk Box. Don't go anywhere.
GE Aerospace beating second quarter estimates on the top and bottom lines. And Phil LeBeau joins us now with the guy we were just talking about, CEO Larry Culp. Hey, Phil.
Hey, Joe, Larry, thank you for joining us on a big day, not only for reporting Q2 results, beating on the top and the bottom line, but also Investor Day starting in about a half an hour. I want to talk about Q2. Much better than last year, much better than Q1. What's driving that?
Well, Phil, thanks for coming to Evendale, Ohio. We're thrilled to have you here. I think anytime you've got orders, revenue, and operating profit up 20% plus, earnings up nearly 40%, and free cash flow doubling, there's a lot that's going right in the business. And I think it's fundamentally a function of having $175 billion of backlog to serve, both in commercial services, which was up 29%, but also a new make for our commercial and our defense customers. And that being put to better use with Flight Deck, our lean operating model, which is allowing us to improve safety and quality while at the same time quickening deliveries. And that's really what our customers want to see from us. I think they saw that in the second quarter.
I want to talk about Flight Deck with relationship to quality control, because the Air India crash, the GE engines were not implicated in any way, with at least initially in this investigation, in terms of the crash. Yet at the same time, this has been an opportunity for you and your team to say, okay, how do we ensure quality control clearly is front and center in terms of we've got more engines in service, we're delivering more engines, and how do we do that and keep margins over 20%?
Well, Phil, first and foremost, I think what happened with Air India 171 was a true tragedy. Obviously, our sympathies are with all of the survivors and the loved ones who lost family members. For me, being still relatively new to the industry, it was a moment to once again see how the industry comes together in these situations. The industry does not compete on safety. And for us, you mentioned flight deck, that's really our operating model that reminds all of us that our priorities start with safety, then quality, and only then do we talk about delivery and cost. SQDC always in that order, whether it be with respect to product safety and employee safety. So this is something that we do every day. These unfortunate situations are a reminder for us to double down, to look, to learn, but the GE Aerospace team is focused on safety as job one every day.
When we talked last quarter after your results after Q1, you talked about the uncertainty that potential trade wars might be developing. For you guys, for the rest of this year, do you feel a little less uncertain? I know that's a strange way of phrasing that, but do you feel more certain in terms of what the implications may be of tariffs and trade wars?
Well, Phil, when we spoke in April, a lot of this was fresh, right? But here we are in mid-July, coming off a quarter where orders were up 27%, both in services and in new make engines, so demand continues to be robust. I think we've got better clarity as to where we're going, at least with respect to aerospace. We've been advocating, as you know, for a return to the tariff-free construct in aerospace that dates back to 1979. We saw that captured in the US-UK agreement. We're hopeful that that will be replicated in the other trade deals that are on the table in the days and weeks to come.
Well, you were with the president in Qatar when he announced a massive order, not just for Boeing wide bodies, but obviously, more than 400 GE engines that will power those aircraft, including the 777X, which has yet to be certified. But are you confident that goes into service next year as Boeing is planned?
Well, that was a big day for us in Doha to have the president there, Kelly to his right, I was to his left, announcing the largest wide-body order in the history of the industry. Thus, both our companies were thrilled to be under wing. We know customers love that product. The win rate against competition, I think, is in the 60% range. So we're working, it'll be the most tested engine and aircraft in recent memory. And we'll leave it to Kelly and the Boeing team to talk about the introduction schedule, but we're working hard toward that 26th date.
But when you talk with the president and you say, look, the tariff, the agreement that we worked with the UK, we should have that worldwide. Are you confident that sticks?
Phil, I'm optimistic. I really am. When we're talking with the president and others in the administration, I think there's a real recognition that the U.S. enjoys that $75 billion annual trade surplus for a host of reasons, not the least of which has been this tariff-free regime. The president himself understands the industry very well, right? He had his own airline. He flies his own 757. He understands this industry, I think, in great depth. And we're, again, optimistic that as the other trade deals are reached, that what we saw in the UK agreement will be in place.
You have your investor day starting in about a half an hour. And you've put out guidance for 28, I think free cash flow in 28, target of $8.5 billion. But you hear the skeptics, I'm sure, who sit there and say, you look at this stock performance over the last 2 years, it is overvalued. The valuation is stretched. They can't grow into this within the next couple of years. What do you say to the skeptics?
Well, we're focused on the customer first and foremost, and those things that we can control. But we're delighted to have the opportunity today, albeit in a short form. We were hopeful to do the long form outlook back in Paris to not only raise the 2025 guide, but as you say, talk about 28. And with respect to 28, we think we're going to be able to grow at a double-digit rate now. We're targeting $11.5 billion of operating profit. That should allow us to drive earnings at a mid-teens level, and that should drive $8.5 billion of free cash flow. So we're also taking up our return of capital to shareholders, Phil, by 20% to $24 billion today. Again, with a $175 billion backlog, with demand being strong in the aftermarket, let alone with respect to fleet modernization and expansion, coupled with everything that we can control within our four walls with flight deck, more optimistic about the path that we're laying out today.
Larry, Becky's got a question for you. Becky, go ahead.
Hey, Larry, good to see you. Thanks for joining us today. Just to go a little more into depth on the tariffs, I know that GE Aerospace partners in a big way with Boeing, but you've got partnerships with Airbus and lots of other places too. If the tariffs continue to focus on Boeing, like we're watching with the EU, where they're putting them on the target list of things they would go against, does that mean that your business with your other partners would step up? Would it impact you in a big way?
Becky, good morning. Good to be with you. I think that we're at a moment where the industry on both sides of the Atlantic is really advocating for the same thing, this return to this tariff-free construct we've had since the 1979 agreement. If you look at Boeing, you look at our other airframe competitors or customers, basically the industry is sold out into the 2030s. So in the short to medium term, I think we're all focused on making sure that we fulfill that demand, those orders that are in place. I think the tariff construct could go a number of different ways, none of it, frankly, helpful to the industry supporting the airlines. And I think in turn, that's why you have all of us singing from the same songbook with respect to a return to that zero for zero construct. We see that in the UK agreement, again, advocating for and optimistic that we'll see that in the upcoming trade deals.
Larry, I'd like to thank you also for coming on. It'd be great. We wish we would have had you on all along, every earnings report, and thank you, Phil. But GE, in my life, I think of Thomas Edison. It was one of the 12 original Dow components. It was continuously in the Dow from 1907. It was heartbreaking for me to have been sort of a GE person in 2018. Replaced by Walgreens. And at the time, it was because of the market cap. It come down, and supposedly the U.S. economy was now consumer and healthcare and no longer heavy industrial. You're back to almost $300 billion now in market cap, and maybe there's a renaissance for heavy industry and something like GE. Is it too much for me to hope that GE could ever get back into the Dow?
Well, Joe, we're going to focus on performance first and foremost. That's what we do in Cincinnati, Ohio, as you know well.
I know.
But we couldn't be, I think, more proud of not only the GE Aerospace performance, but what's happened post the spins at GE Healthcare and GE Vernova, right? We're really proud of our shared history that dates back, as you say, to Edison. But you've got these three businesses now fully focused on the future. And whether it be aerospace, healthcare, or energy, we couldn't be better positioned with more tailwind than we are today. So we look forward with a lot of confidence as to what all three businesses are going to be able to do in the future.
I think that would be quite an achievement for you. Maybe you won't say it, but you're not going to put them back together, are you? I got some investment bankers. They just were calling me. They think it's really a great. What do you think, Andrew? Put them? No, probably not.
The build it up, break it up, and build it back together is a bad model.
But you got anything?
I think we've got three companies that are going to have their own futures.
All right. I'm done.
Hey, Larry, one last question for you. When you look at the overall demand for air travel, when we talk with CEOs, and primarily here in the U.S., but also in Europe, all of them say the same thing, which is we see nothing that is slowing it down internationally. There may be a few hotspots here and there, but whether you look at the Middle East, whether you look at Asia, whether you look at North America, that demand is robust, at least as far as they can see. And I know that's no more than maybe 6 months to 9 months out. Would you agree with that?
We would. We look at our daily departures by region, by platform, every single morning. I probably have my 6 a.m. Note in my inbox. We saw in the second quarter, departures up 4%, basically in line with the first quarter, what we thought we'd see in the first half. Our updated 25 guide today, Phil, will talk about a low single-digit increase in departures this year. So we're taking maybe a more conservative posture to the second half. But I know you've got Scott Kirby on from United. What they put out last night seemed to suggest they've seen a nice uptick here just in July. So we'll take the conservative posture relative to our investor commentary, but fully focus on making sure we're able to deliver whatever comes.
Larry Culp, CEO of GE Aerospace. Thanks for coming on right before they have their Investor Day here in Evendale, Ohio. Guys, we're going to send it back to you.
Phil, thank you, and great to see both of you. In the meantime, insurance giant Travelers just out with quarterly results. The earnings there coming in at $6.51 a share. That beat the street's expectations. It was driven by lower catastrophe losses and higher underlying underwriting gains. Revenue on a net written premiums basis grew to a record $11.5 billion with growth in all three segments, but that was below expectations of $11.7 billion. Total capital returned to shareholders was $809 million during the quarter. The knee-jerk reaction from the market right now down by about 0.8%.
Coming up, we're going to go much deeper into what's going on in the markets right now. Plus, the future of the Fed. That's the big debate right now. President Trump versus Chairman Powell. What replacing him right now could look like and what it would mean to the bond market, the dollar, and everything else. And then later, one of the top candidates that could very well be the next Fed chairman, former Fed Governor Kevin Warsh. That's at 8 a.m. Eastern Time. Don't go anywhere. Squawk Box. Come right back.
Download Dave.
Welcome back to Squawk Box on this Thursday morning. Take a look at the futures right now. We got a bit of a mixed picture. We got some red on the Dow and the S&P. Dow off about 82 points this morning. S&P 500 just off about 2 points, but the NASDAQ powering higher, about 10 points higher. For more on the markets and how investors may want to position themselves in the second half of the year, we are joined now by Charmaine Mosavar. I always butcher your name. It kills me. It kills me.
Kills all of us.
I know it's horrible. Chief Investment Officer for Goldman Sachs Wealth Management. Good morning to you.
Good morning.
we've gotten.
I'm happy to go by my first name. That's okay
I
too.
know.
You can
It's
just say
we've
Charlene.
known each other a long time, and every time you know what it is? It comes up in the teleprompter, and it's just like,
It's
Out
a
of
lot
nowhere.
name.
it's a lot. It's a lot. We're seeing some of these earnings reports. Obviously, the banks look better than ever. The question is whether you think the rest of the economy looks the same way.
Well, we actually think earnings will continue to surprise to the upside. So we've already seen plenty of that, right?
Right.
So to date, you're looking at about 8% of companies have reported, and we think that consensus earnings is actually too low. Consensus earnings actually expects a slight decrease in the actual value of earnings per share. That happens so rarely. 90% of the time, earnings per share sequentially between Q2 and Q1 go up, including recession periods. So the pessimism, in our view, sets a low hurdle. So that's generally going to be good for the equity market.
And do you have any?
And with the economy weakening, especially in the second half, and people have already downgraded their growth expectations. So in certain ways, that's already priced in the market. Initially, we went into the year, people thought 2+%. Some were at 2.3, some 2.5. Now people are plus or minus around 1.5% growth. So clearly, from an economic perspective, there is.
Do you think it's already
a
baked into
slowdown.
the cake that we've got a problem?
Well,
I don't know if it's a
call
problem.
1.5% a problem.
Well,
You want a little bit of a slowdown so you have less inflationary pressure.
Right, but where are you ultimately on the tariff story and whether that's going to start to impact things? I mean, it was very interesting to just even look at CPI and then PPI and whether you think that, by the way, that could be the margin right there.
So one of the interesting points about inflation, and we encourage clients to think a little bit about what it was like during COVID. Everybody was, is this transitory? Is it persistent? And it took quite a long time for the economic numbers to get over the noise from COVID. We think the same thing is going to happen with tariffs, right? Tariffs, we started the year at about 2.5. We're now at about 14.
Right.
And the reality is nobody knows exactly where we're going to end up. Somewhere between maybe 15 and 20%. That's what our expectation is. Let's take the midpoint. And so we know that will create its inflationary pressures, but we don't exactly know in the entire supply chain who will absorb how much. So the assumption is the producers can absorb about 20%.
Did you come out with a report that said 40% was going to be borne by the U.S.
Consumer.
Consumer?
Our colleagues in global investment research have 20% producer, 20% U.S., 40% U.S. businesses, and 40% the consumer. But over time, that number might get to 70%. So that would create some inflation.
He was looking at other things, and I always look at, what you've been saying when you come on, and you started the year bullish, and you never really wavered, even, and no one knew about the tariffs necessarily, and even in April, you're telling me you actually, I don't know if I call it doubled down, but you even got more bullish at the lows in April, and added to positions, right?
Yes, that is correct. We encourage clients
That's no
who had
small feat. That's no small feat through this.
Well, we think in this environment, trying to separate the noise from the signal is very important. There is just so much noise out there.
Without Shep Smith.
And when you look at the actual reality of what's going on, there are some valid points, no matter what people's view are of this administration, there's some valid points.
Is there an opportunity to get another April low, you think? Or have we seen the end of that sort of an opportunity if somebody is waiting to get back in?
Well, in some ways, we've seen the playbook, right? So
Yeah.
people are going to be cautious about saying,
You're not
let's
gonna see the
sell,
stock pick up,
because
right.
it rallied so quickly, right? It got to its pre-liberation day levels in a month.
Mm-hmm.
It got to the previous highs in just over 2.5 months. And so the idea that anyone could time it exactly, sell at the right time, buy back,
What are you feeling for
and pay taxes in the
2026?
interim is unlikely.
What are you thinking for 2026?
Generally positive earnings.
Still,
We have our
positive
US
market, not just
and positive market, yes. So,
Really?
but our views are always driven by the earnings. What will the earnings be? And then our view is prices follow earnings. There might be volatility around it, but
you
if
like
you have
this
good
bill,
earnings,
this OBBB thing? Did you think
there's
it's
some
positive?
good points and some not so great points.
I got a different one for you.
Yep.
Yes.
We're going to have a whole segment on it in just a moment, but if in fact somehow Jay Powell was pushed out of his job for whatever reason, rightly, wrongly, we could debate all that. What do you think actually would happen to both the equity market and also the bond market and the dollar?
So obviously markets don't like uncertainty, but when you think of the two leading candidates and you think of the entire FOMC group and the Board of Governors, will any one person make such a dramatic change one way or another? You've had so many people on the program who have said it is hard to make a call whether another cut is justified anytime soon.
Right.
Our base case is they would cut 2 to 3 times, maybe starting in September. And so would it make that big a difference in terms of who's there? In reality, in terms of the earnings of the U.S., no. In terms of market sentiment, probably a quick drop and then things will settle down and recover. If that were to happen.
But that's so interesting because you have all of these CEOs, including, by the way, your own, calling for Fed independence, Fed independence, Fed independence. But when you start to look through like the actual implications of something like this, and I'm not encouraging this, by the way, I just wonder whether you actually would have
some lower rates.
Well, and then the question is longer term, though, does the Fed independence piece of it get sort of undermined in some kind of terrible way?
Well, the president's already come out again and said he's not going to do it. He said that multiple times. Being controversial is part of the nature of this administration. Right. And so I think people underestimate the extent to which, since Lyndon Johnson, presidents have tried to pressure the Fed chair, right? Even President Reagan.
I remember.
Right? Called
Volcker
in. So it has been very typical of presidents to do that. So that part is not that unusual. Again, separate the noise from the signal.
Just doing so publicly.
The style of it is not so great.
Right.
It's not so effective.
I don't know if we've had a president who's threatened them to say, I will fire you, though.
No, they did behind the scenes, and they were even more furious.
Well, I think they've screamed at them.
I can't remember, there was some anecdote about, I can't remember what it was, but it was even worse than what we're hearing right now. Do you remember? I don't remember.
I think Lyndon Johnson was pretty public about it.
Yeah, he said something about
his white Cadillac having the secretary.
I mean, nasty. It got kind of ugly. Like this is ugly now.
But the problem with
for Trump,
public, it
makes it impossible for them to cut.
If the Fed to actually do, even if they want to cut rates, to
Right.
actually do it, because it looks like they're caving to it and thereby giving back the independence, which is so important.
Thank you.
Thank you very much for having me.
Good to see you.
Coming up, if President Trump did decide to replace Fed Chairman Powell before his term was up, what would the process actually look like? Is it even possible? That story's next. And crypto legislation clearing a hurdle on Capitol Hill after marathon negotiations. We're going to talk to Representative Josh Gottheimer about that next step in just a few minutes. Squawk Box returns this moment.
Time now for today's Aflac trivia question. What theme park opened on this day in 1955? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. What theme park opened on this day in 1955? The answer, Disneyland.
Welcome back to Squawk Box. I'm Frank Holland with your morning movers. We're going to start off with shares of Taiwan Semi. You can see a big pop right here. Shares up almost 3.5% after it posted a Q2 beat this morning, including a 61% profit growth year over year. Current quarter revenue guidance also beat estimates. Again, shares up just about 3.5%. The chip sector higher overall in that report. Take a look. The SMH Semiconductor ETF moving up about 0.25%. NVIDIA up 0.5%. AMD also up just about 0.5%. Meantime, Shake Shack and Starbucks, both of those stocks are falling after they were downgraded to hold from outperform at Jefferies. Jefferies saying for Starbucks, the foot traffic and credit and debit card data show a weaker consumer. Shares of Starbucks pulling back about 1.75%. They also said the potential sale of the China business would likely be lower than what's been reported so far. Analysts are also looking at Shake Shack's high valuation, about 90 times forward earnings, also the run-up in the stock, and they say there's just a bit too much optimism baked in around its improvement in same-store sales. Shake Shack shares pulling back about 1.25%. And rounding out things with PepsiCo, higher after it reported a beat in Q2 and reiterated its full-year outlook. However, U.S. and worldwide volume, the products sold, those actually fell in the quarter. Shares of Pepsi, they're up just about 2% right now. For much more in the quarter, be sure to tune in to Money Movers at 11 a.m. Eastern for an interview with the PepsiCo CEO, Ramon Laguerta. Back over to you.
President Trump says it's highly unlikely he will fire Fed Chairman Powell, but if the president, in fact, did want to remove Powell from his position, what would the process look like? Joining us with more on that, Jonathan Cantor, former Assistant Attorney General in the Biden administration. He's also a CNBC contributor, and our senior economics reporter, Steve Leisman. I would, Jonathan, I would say, well, he said he's not going to do it, but about a month or two ago, there was some conjecture, and he said he wasn't going to do it. Then, if you hold up a letter that says this is asking for his resignation, what do you guys think? So just saying that it's unlikely that I would do it doesn't mean that a week from now he's not going to again start threatening. Is it possible? Since with that in mind, otherwise why are we talking about it if he says he's not going to do it? But with that in mind, that he could change his mind again, what would it take? Is it possible?
Yeah, it's possible. So he's certainly laying the groundwork by suggesting that these cost overruns at the Fed headquarters and the construction projects are a basis to remove the chairman for cause, meaning neglect, abuse, malfeasance. It's a very high bar legally, but there also haven't been really any historical precedents for it. So it would get litigated in court, probably be quite a bit of a circus. But yeah, the standard is very high. It has to be for cause, and it has to be for neglect, malfeasance, abuse.
Would he would Chair Powell stay in the position until it was settled, and would it take longer than May or whatever it is that he's going to leave anyway?
Well, that's exactly right. So the expectation is that the chairman would sue and ask the court to stay the firing because it was illegal based on the statute. And that would result in two processes. First, there would be a dispute in court about whether the president has unlimited authority to fire the chair. That would quickly go up to the Supreme Court. The Supreme Court has signaled it would likely side with the Fed chair. It views the Fed as historically different than other independent agencies. And then it would kick the case right back down to a district court, which would determine whether the president had a basis to fire the Fed chair.
Steve, for some reason, I think people assume it's taxpayer money that's being used to build, or what is it, a remodel or something, or a
renovation?
Renovation.
Renovation is the word.
But it's not taxpayer money, is it?
Well, it's sort of the Fed's money, and to the extent that the Fed has extra money, it goes back to the taxpayer in this thing they call seniorage. So to the extent the Fed has less money to give back, it ends up being, I guess, not taxpayer money. It could have been, I guess, is the way to put it. But you know, my understanding of this thing, Joe, is it is something where they dug underneath the building and found lead contamination. I was talking to somebody yesterday. They had to raise up the building, literally raise it up to get stuff out of it. And these are historic heritage buildings. So, and by the way, every single, I think the members of the board of governors all voted for what's going on. So I think what we're talking about here, Joe, and I don't think you have any disagreement with this idea, is essentially pretext, right? And maybe John wants to weigh in on this, but one of the important things here is the president's own prior comments are part, I would imagine, of Powell's defense. In other words, he comes forward and says, this issue is not an issue at all. This is a made-up issue. And he has the president's own comments where he said, I got to get rid of Powell because of the idea that his rates are too high because he's costing the government money. So all those comments, and there was a case where the president's own words ended up hurting him in another case where it was shown to be pretext.
That's
John,
exactly right.
Go ahead, John.
Yeah, no, that's exactly right. Powell will say it's pretext. And what the court can do is hold an evidentiary hearing, meaning it can get internal documents, it can get public statements, and determine whether these cost overruns, which seem unlikely to satisfy the legal standard, are the actual basis for the firing, or whether it's a dispute over policy, in this case, interest rates. And the chairman would have a very strong legal case.
And obsessing about Fed independence. Steve, obsessing about Fed independence causes the Fed to be less independent because lowering rates is almost taken off the table because it would look like the Fed was folding to pressure from the executive branch. So in its own perverse way.
It's interesting you say that, Joe, because I'm looking at the September Fed fund futures, if my data is correct, down to 57%. So the market backing away from that. But there's another idea worth talking about, Joe, and that's the extent, you got Kevin Warsh coming up. It's the extent to which Powell may have been helping Trump. We keep talking about how all the tariffs are not showing up. Maybe it's tough Fed policy. If you look at, for example, inflation expectations, while these tariffs are in place, they've been pretty well well behaved essentially over the last on the 1 and 5 year horizons. And look at what Kevin Warsh said. I know he's coming up at 8 o'clock. This is from his January editorial in the Wall Street Journal op-ed. He says, it's the Fed's duty designated by Congress to ensure that changes in relative prices don't become embedded in the economy. The Fed's job is to stop second-order effects of price changes. And who has adopted this whole attitude of Kevin Warsh, which is, by the way, essentially religion in the central bank community? Jay Powell to Congress on June 24th said, our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. That's exactly what he's doing. So I'm not sure that the president really has a beef when it comes to policy. His tariffs are coming through. There is inflation related to it, but it's not runaway inflation.
You know, who knows with the president sometimes. I don't know whether it's three-dimensional chess or sometimes I think, he's got a horseshoe in his pocket or something, but he can, if we do have a slowdown, he can say, see, he's going to have that in his back pocket to talk about. Right. That I was telling you that's going to happen. But you're right. What we don't need probably right now, if you're worried about inflation, like the president doesn't want inflation. You don't need a rip-roaring economy from lower interest rates to put a bunch of additional pricing pressure, Jonathan, in addition to the tariffs. So that he could be doing the president a favor.
Absolutely, and I very much agree in terms of the whole scapegoat concept, notwithstanding the fact that he might be doing him a favor. There's a lot of history, your previous guest was talking about it, but there are it seems like every president has a beef with the Fed chair. Yeah. It's Reagan, it's Eisenhower, Truman, Johnson, notably. And so, I think Trump is setting it up so that there's a sort of Damocles hanging over Powell's head throughout the rest of his tenure. And then second, if there is a sustained period of inflation or stagflation, Trump has the ability to say, well, it's this guy's fault because he didn't lower interest rates.
Steve, I was trying, or Jonathan, maybe one of you guys, there was some anecdote that was beyond the pale for one of the presidents that either he said something, I don't think it was, he didn't say it on Twitter.
Apparently he grabbed, one of the presidents grabbed a Fed chair and kind of like put up against the wall. I think it was Johnson who did that. I have to go back and check my notes.
Johnson,
but it's worth pointing out, Joe,
physically,
the senators and congressmen in the shens with his cowboy boots when he was trying to get a bill passed.
I'm feeling a book, Steve. I'm feeling a book. For you on things that have happened in the past between presidents and Fed chairs. Why wouldn't you?
Actually, a really good idea.
Why wouldn't you do that?
Quick,
well, you could do that, but I want to point out something much more clinical. I'm sorry to go away from that.
Too lazy.
Here's the thing. In 1935, when Congress passed this bill, the Federal Reserve Act, it left out the phrase, specifically it considered and left out the idea that the president could fire the Fed chair, quote unquote, at will. They got rid of that. And I think one of the things that might happen if they end up having a discussion about what Congress intended and can the president fire the Fed chair, this 1935 track record on Congress saying, no, we don't want the president to fire the Fed chair at will, may be something that's relevant.
All right. You already making that pitch to some publisher, Leisman? Did I mess that up for you? I'm sorry. Nobody needs to know. Thanks, Jarvis left. Jonathan, you're free to pursue that as well. I'm not going to use it.
Well, maybe I'll team up with Steve. We'll do it together.
37-cent royalty.
Yeah, you guys. If I could do AI, you think AI could do that for me, Andrew?
Yes, badly.
AI could write my book, 100%, and I'll make up like a pseudonym for AI. Thanks, guys. We have much more on the future of the Fed with former Fed Governor Kevin Warsh. That's at 8 a.m. Eastern Time.
All right, coming up, the next move on crypto legislation. Representative Josh Gottheimer will give us an update after more than 9 hours of negotiations on Capitol Hill. Squawk Box will be back in just a moment. House adopting a rule late last night to bring forward cryptocurrency legislation. That vote took more than 9 hours as Republican leadership worked to win over holdout members. A bill to establish federal guidelines around stablecoins is likely to be the first bill passed. And joining us right now to talk about this is New Jersey Democrat Congressman Josh Gottheimer. Congressman, first of all, welcome. Normally what
Thanks
we
for
see...
having me.
Great to see you. Thanks for being here. Normally what we see is Democrats kind of blocking some of these bills that the Republicans have wanted to get through. But in this case, you and a couple of your Democratic congressmen sent a letter to your colleagues suggesting that they actually vote for this bill because even though the bill's not perfect, you think it would be worse to have no progress made.
That's right, Becky. You know, we've been working on these bills in some form or another for years to finally bring some certainty to the marketplace, to protect consumers. So you've got two really good bills that are the result of lots of bipartisan work over the years, and it's time we actually get these done. It's not only good for the economy and making sure that America leads, but to finally protect consumers from a lot of these snake oil salesmen and other crypto that's out there that, you know, as you know, is not exactly on the up and up. It's finally time to actually have not only certainty from a regulatory perspective, but to have protections in place.
And what's the feedback you've gotten from your Democratic colleagues?
I mean, you've got two bills, right? The Genius Act, which we'll vote on first, as you mentioned, which defines stable coins, ensures that they're backed one-to-one by dollars or equivalents, and guarantees that in the world, the dollar remains king. That bill, I think you're going to see really strong bipartisan support for, and we've gotten very good feedback on that. The other bill, called the Clarity Act, will also get at least a few dozen, in my opinion, members on the Democratic side, in addition to a lot of Republicans. And that bill sets up the oversight, the market structure, right, from CFTC and the SEC, and says who's in charge of what, which has been missing from the space now for many years. You're seeing a lot more Democrats over the week understand it, come on board. You've got some people on the outside who want to make everything about Trump, as you brought up, as always an issue. I think the big thing I keep saying to my colleagues is, do you want to make sure that consumers are protected and that the Trump family coin, the meme coin, has some regulatory structure, has some oversight versus just the Wild West, which is what we have now? And if we do nothing, you'll just be right in the place where we are. There'll be absolutely no oversight, no protection for consumers, no certainty in the marketplace, and that's unacceptable. So I think you're going to see great movement here today, finally, after the Freedom Caucus, has spent the last days throwing tacks on the road and trying to do what they do, which is just obstruct and cause problems. We're finally going to see some movement today.
Just in terms of some of the weaknesses with the bill, we did have the financial services superintendent from the state of New York, which has been regulating crypto for a decade at this point, on with us a little earlier this morning, and she's concerned on a couple of places. The first is that the states are going to lose their ability, that preemption to the states weakens the state's ability to do this. Her point was, we've been doing it for a decade and we know a lot of these things. The thing that I think she was really more concerned about was something like foreign issuers. There is an exemption here for foreign issuers where they can issue into U.S. markets unregulated for 3 years. And I realize there's 18 months once this goes into place that none of this will happen. So it's really 18 months of unregulated. But why was that exemption put in? She seemed to suggest that it's because Tether just had really good lobbyists.
Listen, I think they will ultimately, as you just pointed out, fall into the regulatory structure, and if they're foreign issuers, they will come under, and they want to play here, they're going to have to come under our oversight. Listen, these bills are not perfect. There's lots of parts of these bills that I'd like to fix. But at the end of the day, you want to make sure the perfect's not the enemy of the good. You want to have some certainty, which we've been fighting over now for years, of who's in charge of what between which regulatory agency. And as a result, there's been no oversight. And if we do nothing, you'll continue to have no oversight, no clarity. And that to me is unacceptable, and it's going to hurt consumers. You've got a lot of consumers now who are operating in the Wild West, and we've got to change that. These bills will do that, Becky. Again, nothing's perfect. There are things that I would like to have gotten in here, but I've learned a long time ago, I'd rather get progress, get something done. We'll come back and do more versus doing nothing because you can't get everything you want. And listen, the Freedom Caucus, the far-right extremists, that's what they always do, right? They were looking for anything that they didn't love about this bill and trying to stop it. We got past that, and now we say, listen, there's going to be a good bipartisan product here. We're going to move forward. America can lead the way versus, letting other countries be in charge.
How many Democrats are on board with this? You can point to the Freedom Caucus, but there's a huge number of Democrats that will not support this.
On the Genius Act, I think you'll get numbers over 70 or so, and see what the final tally is. Again, you'll have a couple dozen or more on the Clarity Act. So those are very strong bipartisan numbers, especially as you know right now in this environment where bipartisanship is tougher and getting people on board on these things, no matter what, is tough. But this is going to be seen as two great bipartisan products that move over. One will go to the president's desk. The Clarity Act will go to the Senate, and we'll continue to work on that and hopefully get that done this year.
You're like on that purple committee, or what's the name of it again? You're trying to
problem solvers, Joe?
Yeah,
Problem solvers.
Problem solvers. And like me, you live in New Jersey. So that's my latest thing. It's like, this is not my problem.
God's country.
Right, the Garden State, where everybody would like to live if they could. Anyway, where I'm going with this is, this is not my problem, what's happening with New York in the mayoral race. But I see a lot of your peers, I don't know what it is, Josh. I guess the inevitability that they see they don't want to be on this guy's bad side or something. But they are twisting themselves into pretzels to say, well, he's discouraging the global intifada thing, and I know capitalism has problems, and a little bit of socialism hasn't been done right. Maybe we can try. Are you one of those, or can you just? Don't you think the Democratic Party is?
You'll hear no ambiguity out of my mouth. We do not need a job-killing socialist, and we don't need a job-killing socialist who wants to raise taxes and supports anti-Semitic rhetoric. Right, in a city with the highest taxes in the country and the largest Jewish population in the country.
Are you surprised?
I don't get it. That's not
how
what
mainstream Democrat, like Chuck doesn't know what to do, but some of them are like, I heard Axelrod. It's a big tent. We have to welcome it. I mean, you should be able to say where the state of the Democratic Party right now. You should be able to say we don't need to go further left. To just where you're almost coming around on the right.
We need, Joe, you know what I believe? We need common sense Democrats who are willing to solve problems, make life more affordable for people, take on higher taxes, and actually make sure that places run, and whether it's rent or mortgages, we do everything we can to make life more affordable for people. We do not, listen, let me clear. Socialists, Democratic socialists are not Democrats. They're not in the Democratic Party. Bernie Sanders is an independent. He's not even a Democrat. Right, so I don't know why we would follow that approach. We want common sense, reasonableness, and that's what we need in our country. It's what we need in our cities. And obviously, we don't need socialism or tax increases or people who condone anti-Semitic rhetoric, which I find loathsome.
It's not our problem. But if we work here, don't we have some?
What's that?
Yeah.
You're paying some city taxes.
Yeah.
Yes, you are.
So it is my problem. It's not Josh's problem.
It's your problem.
You just don't have a
Come to Jersey. By the way, they should all move to Jersey. We should all move to Jersey. Move to Jersey. You won't have
makes Jersey look good. It makes Jersey look good. No,
Jersey looks good.
No small. I know. I'm kidding. I love New Jersey. I do. I love the Short House Mall.
Congressman Gottheimer, thank you for joining us.
Good to see you. Good to see you. Thanks.
You too. Squawk Box is coming right back.
You download Dave.
Coming up, United Airlines has a new forecast for the rest of 2025. CEO Scott Kirby joins us next. Plus, one of the contenders for the Fed's chair, Jay Powell's job, former Fed Governor Kevin Warsh, is going to be our very special guest this morning. You do not want to miss this conversation. Don't go anywhere. Squawk Box returning after this. Welcome back to Squawk Box. I want to get to Phil LeBeau and United Airlines' CEO this morning, Scott Kirby. Good morning, guys.
Good morning, Andrew. Scott, thanks for joining us from United's headquarters this morning. I'm curious about your results when you look at the second quarter. Yes, you beat in terms of earnings per share, but you also narrowed your guidance when you look at the full year results. Yeah. What are you seeing with the economy right now?
You know, we're really proud of the results for the first half of the year. It grew earnings, grew margins, but more importantly is what's going to happen going forward. And we did that despite everything that's happening in the macro environment. As we looked at the end of June, we see both an inflection in supply and demand. So for the airline industry, much like last year, starting in mid-August, there's a lot of seats coming out of the industry, which is going to be a tailwind for us. But probably more importantly, we've seen a step up in demand, particularly business demand. I think that's related to less uncertainty in the economy as the tax bill got settled, as the situation in the Middle East got more settled, and as tariffs, while not yet settled, narrowing the range of the outcomes and the market sort of zoning in on what's more likely to happen. You see more and more businesses kind of coming off the sidelines, getting unfrozen, and I think getting back to business and getting back to normal. And we're a pretty good real-time indicator of the economy, and we see that happening just really like a light switch got flipped at the end of June, particularly for business travel.
But then when you look at your guidance, Scott, you back in April, you said, look, in a stable economy, and that's the wording that you guys used, you think you'll earn $11.50 to $13.50. You're out with your guidance now after yesterday's results, and you say it's going to be 9 to 11. That's the range that you're targeting. Yeah. I mean, that's a step down compared to $11.50 to $13.50. Is this all because of Newark, or are there other issues here?
Well, we had Newark, but the biggest change is really we try to build conservatism into our guide because stuff does happen. A lot happened in the first half of the year. And so our guide right now, if nothing else happens this year, and a lot has happened to start the year. And if demand stays as strong as it is right now, there's going to be upside to the guide. But we try to consciously build conservatism into the guide. We were explicit in the last quarter saying, given everything that happened to start the year, there was no conservatism left in the guide. But we built that back into the guide now.
When you look at Newark, obviously you have a much more stable environment with fewer flights for everybody overall, including for you guys out of Newark, and you've improved your on-time performance there. But do we have to adjust, the investor, I should say, does the investor have to adjust their outlook for when you will be able to get Newark back up to the level of flights that you would like, where it was last year? Because it's going to take some time for air traffic control.
You know, I feel better about Newark than I have in my entire career here at United. May and June were tough. You know, what happened to Newark was really hard. But because of that, the FAA in particular has taken the steps needed to put Newark on a permanent, better footing, particularly with slot controls. And they're doing all the work to get the fiber optic is in now, the runway construction is done, all those things are done. And if you look just at June, Newark was the most on time of the 3 New York airports. And particularly what we've been asking for years is to manage the capacity at Newark. Have the number of flights equal to the capacity of the airport, and the FAA is now doing that. So it's going to step back up as we go through the year, but it's going to end at a level that is the best for customers. That will be the best for our profitability as well. You know, when it's overscheduled, it's much worse. So we're going to step it back up. So financially, by the time we're to the fourth quarter, I don't think it has any impact on us. And by the time we're at this point next year, I think Newark will be better. I'm certain it will be better for customers, and that will be better for the profitability of United Airlines. So we feel better about the future for Newark than we have in my entire career here, because we finally fixed the fundamental issue of matching the airport's capacity to the airport's to the number of flights.
Scott, when you look at transatlantic travel, because you've done so much expansion, not just to Europe, but some other transatlantic areas, when you look at that and the demand that has been there, are you worried about the lower dollar and the fact that it's become more expensive for many people to go to Europe? Or are you not seeing that reflected in the booking so far?
You know, really for U.S. point of sale has been strong. Actually, it's up year over year. European point of sale, as widely reported, is a little bit weak. So fewer Europeans are coming to the United States. But U.S. point of sale is 80% of our international business. And that has remained strong despite what's happened with the dollar.
Scott, thank you very much for joining us this morning. Scott Kirby, CEO of United Airlines, joining us from the company's headquarters. Andrew, we will send it back to you guys. Becky and Joe, back to you guys as well.
Thank you very much, Phil.
Thanks, Phil. It is 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And among today's top stories, the Senate passing a bill formalizing the Department of Government Efficiency spending cuts, clawing back nearly $9.5 billion in spending on public broadcasting and foreign aid. That legislation now heads back to the House. Sticking with Washington, the House adopting a rule late last night to bring forward cryptocurrency legislation. The bill will establish guidelines around stablecoins. Now it goes back to the Senate for approval. Also set to come under consideration is a bill to create market structure rules for crypto products. And Pepsi reporting better than expected earnings and saying that it expects a smaller drop in annual earnings as demand for energy drinks and healthier soda brands offset broader consumer spending weakness. Our next guest is here, and he has been widely mentioned as someone who could be leading the Fed. Joining us right now is Kevin Warsh. He was a member of the Federal Board of Governors from 2006 to 2011, frequent guest here on Squawk Box. And Kevin, we are very glad to have you here with us this morning.
Becky, it's great to be with you. It's a slow, lazy summer day on a Thursday. I don't know what could possibly be on your mind.
By the way, we booked you before a lot of the blow-up that came yesterday with what was happening. But you are here, and you are somebody who has been mentioned on the short list for people who would be headed to the Fed. We've thought that for a long time. We've had people like Ken Langone, who was here earlier this week, talking about how he is a huge fan of yours. I just wonder what you're thinking right now, where you see things.
Well, I think Ken's a great man. He's an American hero. I came to know him when I started to work for Druckenmiller about 15 years ago. And I talk to him all the time, and I usually ask him what's going on in the real economy. Almost everything he touches turns to gold. And over the last 6 months, every month, he would just sound a little bit more positive about what was happening. And he told me something's happening out there that's different. And I said to him once, I might sound a little like Joe, I said, why aren't you more supportive of the president then? This is because of policy. And I think, listen, my sense is that this is, we're at the forefront, we're at a transformational moment in US economic history. This is, as George Shultz told me before he passed, a hinge point in history. I think the president's language is this could be a golden age. And frankly, I think they all could be right. Good policies could advance this US economy, what we call AI, in a couple of years we'll just call business. And AI is going to make almost everything cost less, and the U.S. can be a big winner. That's my argument to Ken. I think Ken's now come on to the president's side.
That's what he said when he was here.
And it's a hugely exciting moment. If I were to step back for a minute, if I were the president, what I'd be worried about is a central bank that doesn't see any of that. A central bank that is stuck with models from 1978, governance from a prior period, and don't recognize we could be at the front end of a productivity boom. And if I were the president, I'd be worried that they might not see it. And they might think economic growth is somehow going to be inflationary. I think we were probably in the early innings of a structural decline in prices. Ken sees it on the front lines of real businesses. And I think if you look over the period of the next year or two, it's a pretty special moment.
We've been talking today about how far the Fed should forecast, how predictive they should be, if they should be dependent on data that's coming in. And you know, there's one school of thought that says it would be better to have somebody who sees this and can anticipate in advance. That's what great money managers do, but great money managers don't always get it right either. We spoke earlier with Nick Timmerose, who made the point that, look, sometimes it's better to wait so that if there is a mistake, you can recalibrate much more quickly.
So I heard a little bit about that interview, and I heard Nick say something like, well, what we need is continuity. My goodness, I think that's the last thing that we need. The broad conduct of monetary policy has been broken for quite a long time. The central bank that sits there today is radically different than the central bank I joined in 2006. I don't think we need policy continuity that brought about the greatest mistake in macroeconomic policy in 45 years, that divided the country, that caused a surge in inflation. I don't think we need continuity when the central bank doesn't have credibility. Last September, Becky, as you'll recall, the Fed cut interest rates 100 basis points, 50 basis points before the election, 50 basis points after. Inflation was 50% higher then than it is now. And what did the bond market do when they cut rates? Long rates went up 75 basis points. That's a credibility crisis. So listen, this isn't the first time you've heard me in the last decade say we need regime change at the Fed. It's not just about a person. It's about an approach to economics. It's about an approach to what they're doing. And I'm troubled when I see them moving the goalposts. It is very puzzling to me, Becky, how you could think that we should do emergency rate cuts last September, and now all of a sudden you stand there like a hawk. That's not good for the institution. I don't think it's good for the economy to be changing the goalposts like that.
Let me ask you, as somebody who's been there before, how much power/influence the chair ultimately has if you're in a room with 11 other voting individuals who may not agree with that person? Historically, there's been sort of an alignment. Everybody's tried, I think, to come to a unanimity on most things. And whether you think that the Fed, I don't know if in history there have been times where there's been, complete and utter distinctions between views on the Fed and what it ultimately means.
So there have been exactly those times. Paul Volcker, when he came in, not only have 12 years of experience in government and 6 at the Fed, I've got some knowledge of Fed history. Paul Volcker came in and said, we don't need continuity, we need regime change. And it was that regime change that brought inflation back and reestablished the Fed as this beacon of credibility. But the president at the time put in some members under the Volcker team afterwards that forced what some thought would be a coup. It hasn't always been pretty. In fact, my own view, Andrew, is what the Fed needs is more robust discussion of ideas, less groupthink. I don't like it that everyone's following the same models. To give you just one simple example, the dominant models at the Fed, which might have been the best models there were in 1978, what do they think, Andrew? They think inflation comes if the economy runs too hot and workers get paid too much. That's not my view. I think we could use a new idea, a new theory of inflation, so let me practice one for you.
Okay.
Inflation happens when the government prints too much, spends too much, and lives too well. That theory that money has something to do with monetary policy, is nowhere in the central thinking at the Fed. I think if those ideas were imported into the discussion, we could have a good family fight about it.
You don't get to decide how much is spent. That's up to Congress, and the president has to sign off on those things. Would you support them? And I guess the biggest question, Kevin, is people are wondering, the next Fed chairman, is he going to be independent? Is he going to say, and I say he because right now the candidates that we're hearing are all men, is he going to be independent? Is he going to do what he thinks is right, despite what the White House may advise or think, what the administration thinks?
So in a word, yes. So I've strongly believed for 20 years, and history tells us that the independent operations in the conduct of monetary policy is essential. But that doesn't mean the Fed is independent in everything else it does. In fact, if I look at the track record of the Powell Fed over the last 6 or 7 years, they've tried to say, how dare you be critical of us? We're independent in everything. Well, that's nonsense. They wandered into climate change, a subject upon which they have no comparative advantage. With a change of this administration, they said, just kidding. They wandered into another political area of which they were never assigned. Diversity, equity, and inclusion. They changed the remit that Congress gave them about whether they were in the business of full employment or full inclusive employment. This change in their definition in 2020 is one of the key reasons why we had the great mistake, the great inflation. And on spending, Becky, during the period of the last administration, what did they say to Congress? Spend, spend, spend. So like you, I think they should stay in their lane. But it's very strange to me that they're asymmetric. Spend a bunch of money when it's popular, and now if you get asked about spending constraint, what does the leadership at the Fed say? Oh no, that's not about us. You should establish what the rules of the road are and stick with it regardless of the administration. I think the Fed has done a very good job of blaming others for their mistakes. It's been very popular to blame the president because he's being so mean to them. Well, most of the Fed's mistakes are because of choices they've made. They've done a very good job in the business of politics. The inflation that has done huge harm to the American people. First, they blamed Vladimir Putin. It was because of the war. Then what did they do next? They blamed the pandemic. Supply chains, they would say.
Well, supply chain was legit for a lot of inflationary.
Well, it changed the level of prices because that's what happens in a market economy. But that's not what inflation is. Inflation is what happens to the Fed. The Fed is responsible for inflation. The Fed makes a choice about inflation, and the problem is the Fed has made that choice poorly. So they've got someone new to blame for all these mistakes, and a lot of their co-conspirators in the media seem to believe it. The new mistake is the reason why they're not doing the right thing on rates is because of the president and those tariffs.
Well,
He's being so mean to them.
I will say changing
but
the goalposts.
that's not the cause of inflation. The Fed controls that.
The changing of the goalposts that you mentioned earlier, where the Fed cut 50 basis points right before the election, 50 basis points right after the election. What was different was we have a new president, a new administration, and the tariffs came in. And I think even you, back in January in your op-ed piece for the Washington Post, pointed out that, look, the Fed's job is to make sure that the tariffs don't turn into an inflationary pressure.
I think that's right. I believe that. But here's what's happened. The Fed now says, well, we'll make a decision about interest rate cuts depending on whether prices of goods in the next month or two go up. Well, what that's really saying is they must be doubting their own inflation-fighting credibility. If they were a very credible central bank, they could say, we're looking past this one-off change in prices. And so their hesitancy to cut rates, I think, is actually quite a mark against them. It's as if they've lost some of the credibility. Truth is, in economics and inflation, bygones are not bygones, Becky. The specter of the miss they made on inflation, it is stuck with them. So one of the reasons why the president, I think, is right to be pushing the Fed publicly is we need regime change in the conduct of policy. And I hear from Andrew, I heard from another speaker that was on, well, will the new Fed chairman, regardless of who it is, will he have credibility because the president's being so mean and pushing them around? The credibility deficit lies with the incumbents that are at the Fed, in my view.
Well, let me ask you a related question then. So we saw yesterday David Solomon, and we also saw Brian Moynihan came on, and they said, look, the independence of the Fed is critical. The market, the global investing community needs to believe that whoever's running the Fed and everybody involved in it is independent from the president. That's conceptually, do you agree with that idea? And then if that's true, and this is a sort of very interesting sort of behavioral science sort of experiment, to some degree, whoever gets this job is going to obviously be appointed by the president, so they're connected to them in some way. But at the same time, as Nick was saying, and maybe you'll disagree with Nick, Nick said that person needs to somehow demonstrate to the market that they're independent of the Fed, otherwise they won't have the credibility.
So I hate to agree with Nick, but I guess I have to agree on one small part here. The good news is I have a track record. I have a track record going back 20 years, including in the darkest days of the financial crisis at the Fed. The track record makes me understand who's really talented at the Fed and who do we need to elevate, and who is sort of holding on to 1978 models who we need to relegate. Credibility comes through tough times. In the 2008 financial crisis, books that you wrote about with all this outrage, I can't find anyone at the Fed who was more aggressive in trying to get to the bottom of that and pushing radical new things that you might even describe as dovish. In the 2020 pandemic came, there was a huge shutdown to the economy. A month before Chairman Powell and the group over there said, well, maybe we should be cutting rates, I spoke and wrote vociferously that the U.S. should be leading an international effort to cut rates. They were slow there. In 2018, Jay Powell and his band of brothers put out dots that they were going to continue to raise rates through a market meltdown. I said they were out of their minds. They ended up cutting. So I think experience does help. Experience means there are times to be dovish and times to be hawkish. I'll give you one example of a time to be hawkish. 2021, 2022, interest rates were zero. The Fed was buying 100 billion of assets every month. Payrolls were going up by 500,000. Congress was spending 5 trillion. And what did this group say? This group then said it's all transitory. So I don't know, there's a time for a bird to change his feathers, and it's with the times. It has nothing to do with who's president.
Anyone ever said just shut up, listen, and learn? That because I said that to myself before you started. But for anyone that's Kevin wants to cut rates now because he wants a job. I mean, you just put out a sort of a dissertation on what your feelings are. That totally, for me at least, you explained yourself fully. I don't know if you get the job, but after listening to that, I'm ready to at least say you should be seriously considered. That was a master class.
Well, listen, I appreciate it, but this isn't actually about one person. This isn't about getting a job. I mean, what I just harangued Andrew about, that might be the greatest hits. These have been my views since the beginning of time.
The classic thing, Kevin, is President Trump, whatever his reasons are, he wants to cut rates. It could be because he's a real estate guy. But somehow you two arrive at kind of the same conclusion, maybe from totally different places.
Yeah,
but if you're right, you're right.
I'll say two things about that. One is we created the second monetary instrument called quantitative easing in the darkest days of the 2008 financial crisis. It's a second monetary policy tool. When we created it, we had cut rates to zero, so we said we're going to start buying all these bonds and all these mortgages from Fannie and Freddie. Now, if you listen to the Powell Fed, they say, oh, that big balance sheet, that has nothing to do with monetary policy. The real reason why we can begin reform at the Fed with a rate cut, which is just the first step to regime change, is if you look outside this window, financial markets, financial conditions, they are hot. IPO markets are back. Credit spreads are narrow. SPACs are back. Financial conditions are very loose here. What about the real economy? It's the real economy I talked to Ken Langone about. We're near a housing recession. Real households, first-time home buyers, small businesses, they're having a hard time getting credit. So at the same time, what can we do? take a little of this looseness out of financial markets by getting the Fed out of the fiscal business, out of the political business, shrink that, and then redeploy some of that liquidity to people that need it most in the real economy. I think the Fed has the balance wrong. A rate cut is the beginning of the process to get the balance right. A strong real economy is what we need, so this can be a golden age.
You know, I was thinking about what you said about AI and the productivity gains we're expected to see and why that is part of the reason. And it reminds me of the other side of the Fed's mandate, which is full employment. Do you worry that the productivity gains that we see in AI will lead to a much weaker jobs market? You look at Microsoft or any of these companies that are talking about how they can do a lot of this work with fewer people at this point.
Yeah, so the amazing thing about this revolution, I think, is it's coming very quickly. In that ways, it's a little different than the internet or cloud or even the combustion engine.
Yeah, far different than the Industrial Revolution.
So I'm very open-minded about the speed of the change here. But I'll say something else. I think humans are underrated. I think humans have this incredible adaptability. If you look at the things that we all call work, 50 years ago, they wouldn't have considered any of this real work. What will be real work in 10 or 20 years will be different. So if there's a thing that bothers me about this speed of the transition, it's not that the U.S. will fall behind. The U.S. is going to be at the forefront of this. The relative growth between the U.S. economy and the economies around the world will widen. The president is right. The U.S. will be a big winner. My own judgment is this will be America's century again because of these policies and because these technologies are born here. I think that's all true. But if you said to me, what's a lagging worry? Technology is moving up and to the right. The K-12 education system is moving down and to the right. We need to make sure that these tools can be plugged into the most talented young people, regardless of where they are, so that they can achieve great outcomes. And the educational system, I would say, is an Achilles heel. That's why the work that Secretary McMahon and others doing are so essential.
I agree with your point that quantitative easing has seen its time and its moment. If you shrink the balance sheet quickly and really push things back to where they were before all of this, there's still a question of what that means for credit availability and what that does to the economy in turn too. This is an experiment we're still trying to figure out how to get out of and what the impacts are.
Yeah, so I totally agree, Becky. If you did any of these things quickly, regime change in policy shouldn't be done overnight. Quantitative easing, all this Fed purchases, we did in a dark weekend when we were making things up.
And I would argue was very necessary at the time.
And so do I.
Yeah.
We had an exit plan in 2010 and 2011 that once I left the Fed, they sort of forgot about. So there needs to be an exit plan to get the Fed out of the fiscal business, to give powers back to Secretary Bessent and to the President and Congress on fiscal policy. But it can't be done in a rushed way. It has to be done deliberately. So I'll just make this up. We need a new Treasury Fed accord like we did in 1951, after another period where we built up our nation's debt and we were stuck with a central bank that was working at cross purposes with the Treasury. That's the state of things now.
Well, let me ask you,
Fed and Treasury. So if we have a new accord,
Right.
then the Fed chair and the Treasury Secretary can describe to markets plainly and with deliberation, this is our objective for the size of the Fed's balance sheet. The Treasury can say, this is our issuing calendar. And by the end of, let's say, this administration, we'll be at an equilibrium rate on the balance sheet so that markets will know what is coming. None of this should be rushed.
But that would not, just to follow up on this, that would not be working in conjunction with the administration. It would be working with Treasury on goals that the Fed, it thinks, are important to try and pursue, and how you would present that to the markets as such.
Well, it'd be in conjunction, but here's a distinction that my friends at the Fed don't make. What we talk about independence, this is the independence in the operations of monetary policy. QE and QT is part monetary and part fiscal. And it is there that we have to work in concert. The reason why I think the Fed is in such hot water isn't because of buildings and isn't because the president's mean. It's because they've wandered outside of their remit and they dare to say anyone who criticizes them is criticizing independence. The Fed's a powerful institution, but it's a narrow institution, and when it decides to spread its wings, it intrudes on other parts of the Constitution, other parts of our government.
We got to take a break. We're going to come back with you in a minute.
Are you making me come back?
Yes,
Yes,
but,
we're making
but
you
here's
stay.
the tease. The tease is going to be, here's the question. How would you feel about Treasury Secretary Bessent being both the Treasury Secretary and the head of the Fed?
Is it too late to walk off?
Don't answer the question.
You feel horrible about it. He wants to be a
Well,
guy.
I know, but one of the things he's talking about is the Accord. I want to get back to Kevin Warsh with the question that we just asked, which was around this idea that, and you talked about an accord between the Treasury and the Fed, which raised it in my mind, this speculation just last week that potentially Secretary Bessent could also become the head of the Fed at the same time, and what that would portend.
So I don't know if I'm supposed to say this on air, but I love Scott. I think Scott's doing a great job. He and I have a similar pedigree. We both worked for the finest investor in the world in Stan Druckenmiller. So if you're going to try to goad me to say something bad about Scott, I simply can't
that's
do
not
it.
the intent
I think
at all.
he's doing a great job, and I think he's serving the president well.
The question is whether you think that the same individual, not whether it's Scott or somebody else, could do both of those jobs, and what that would mean to this whole independence concept, and how people will feel about this accord even idea in that context.
Well, it would make the accord easier if the same person was on both sides of it. But listen, I guess I'd describe it to you this way. When I was a kid and I went to the Fed 20 years ago as a governor, I went downtown to see Paul Volcker, who was the great man. I think I brought my autograph book. I was so excited to meet him. I was a child to become governor. I asked him these narrow questions about the Fed. And he said, Kevin, listen, I'll support you. I'll tell the Democrats that you're going to be fine. But the job of being chairman of the Fed is two things. It's one, you got to get interest rates about right. And two, he said, you got to make sure you look like you know what you're doing. My view is the group that's there. They're well-intended, I am sure. There's huge amounts of talent. They haven't had interest rates about right for a long time, and they don't really look, as they change goalposts, like they have control and a deep understanding of what's going on. Credibility is the coin of the realm. If the same person is in both of those jobs, you're going to have a bit of a credibility deficit, the kind of credibility deficit that the Powell Fed has right now. So what I'd rather have are two people that understand that we have one government, that interest rates are part of it. The Fed has operational independence for that narrow area, and we work together seamlessly because we are on the verge of this transformational moment, and these two people can be on the same team even if one of them is independent interest rates.
The last really effective chairman of the Fed that we had was who?
So, God, you're asking me to pick which. I'll say this.
I'm just asking you to go back about 4 of them but to get
All right, well, let me say this.
Greenspan?
I don't know if this is in my interest or against. Ben Bernanke in the darkest days of the financial crisis was brilliant. And here's the thing he did that I thought was impressive. He put the likes of me and Tim Geithner and Don Cohn in his room, and we disagreed then and now about everything. And he wanted to hear us fight it out, and then he would decide. So during the darkest days where we're making stuff up, he broadened the discussion instead of narrowed it. And here's another thing he did in the crisis period. He was humble about what we know. No silly dots and silly forecasts, no placing blame on other people, no taking responsibility. And I know it's very common now to say the problem is the president's being so mean to these guys. Most of these Fed's problems are because of Fed mistakes. The Fed needs to stop defending their mistakes and vindicating their critics and get on the right track. I'm a Fed guy, Joe.
Yeah.
I think it can be fixed. It was a great institution. And to use a cliche, I think it could be great again.
You're going to stick with us for one more second? I'm sorry, but we are. Can you do that? We're just You can't leave. We're just seconds away from jobless claims, retail sales,
Chained to the desk,
and the Philly Fed manufacturing numbers. Rick Santelli is standing by at the CME in Chicago. We are straight up at 8:30. Rick, the numbers, please.
Yes, and boy, there's a litany of numbers coming out here. I guess the best place to start would be retail sales. These are advanced readings. They're going to change in a couple of weeks. Headline number expected up 1/10. Zoom, 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 up 0.6, up 0.6. That would be the second best number of the year outside of March, which was up 1.5. And of course, that does follow a -0.9, so a nice rebound there. If we look at X autos, it is up 0.5. If we look at X autos and gas, it's up 0.6. This is really holding up rather well. If we look at the control number, or what we call core retail sales, that's coming in at 0.5. Very strong numbers here. 0.5 equals where we were in March. To find a higher number here in February when it was up 0.8. Now, let's look at initial jobless claims. Initial jobless claims come in at 221,000. That's down 7,000 from a very slightly revised 228,000. Boy, these things are awfully well behaved. And if you look at initial jobless claims as your best kind of contemporary real-time indicator of the labor market, it's certainly not looking very tired on this number. And that would be the lowest jobless claims number going back to the second week of April. If we look at continuing claims, 1,956,000. You know, they're all clustered here. We've been above 1.9 million since mid-May. Now, let's look at export and import prices, shall we? On the import price side, we're looking at up 1/10. That's lighter than we were expecting. In the rearview mirror, a huge downward revision from unchanged to down 0.4%. If we look at the ex-petroleum number, it is unchanged. If we look at year-over-year import prices, down 0.2. That's about 0.5% below what we were expecting. If we look at export prices on month over month, they're up 0.5%. Now that one is on the high side. It is following down 0.6. That was originally down 0.9, up 0.5% there. That would be the highest since February when we were up 0.7. We started out the year up 1.4. And finally, if we look at export prices year over year, up 2.8. That's definitely on the warm side as well. 2.8 would be equal to where we were in January. These have been on the high side coming down. They're popping back up again, as you can see. Now, that would be the highest level going back to the end of 22. Finally, one number left. Philly Fed Business Outlook. Okay, this is not the manufacturing. It's the other side of the street. Boy, this is a nice number. 15.9, 15.9. That would be the best read since February when we're at 18. Now, after all of that, what are the markets doing? Interest rates, well, we're definitely getting a bit closer to 4.5%. We're at 447, 448, so up a couple basis points in tens. I think the export prices have caught the market's attention briefly here, but all things considered, continue to look at 4.5% on a 10, continue to monitor 4% on a 2-year, which obviously is well below there, which does underscore the curve has been steepening, and 2-year rates, well, they've been siding with some of those inflation numbers, especially after PPI and all the stories yesterday about Powell. They're definitely been on the upside in price, downside in yield compared to the rest of the curve. Back to everyone on the panel there, and boy, Mr. Warsh, what a great guest. Everybody, of course, is glued to the screen.
And for more on those numbers and analysis, let's get to Kevin. No, we're not gonna do that.
I need a letter from Becky addressed to Stan that says, Mr. Druckenmiller, I'm sorry Kevin is late for work today, but we didn't let him leave.
But we're gonna do that now.
This is like he's watching. He's seeing the letter.
We'll wrap things up with Kevin Warsh. So just philosophically, so you like Bernanke in those dark days. I think Greenspan almost reached the level of demigod, but one person almost reached the Mount Rushmore of Fed chiefs was Paul Volcker, in your view?
Paul Volcker reestablished Fed credibility after it had been squandered after a bad period of economic policy and inflation in the 1970s. That needs to happen again. I need to just put in a final word for Alan Greenspan. Alan Greenspan was a deft and effective chairman who kept the Fed in its lane and didn't wander out of its lane. Part of the reason why he was successful, he knew the Fed was powerful, but it wasn't all powerful, and he worked with governments regardless of who was in the White House to make a stronger economy.
And as I said off camera, you don't like a lot of guidance. When Alan spoke, he said a lot, but you never knew what the hell the guidance was anyway, because he was so good at being sort of
inscrutable.
Yeah. But that's the way a Fed
It's best when a leader of an organization doesn't reveal all the things they don't know.
Strategic ambiguity.
If you don't know, it's better not to look silly with a bunch of forecasts that will turn out to be true. Keep your cards a little close to your vest and make sure when you speak it matters, because I'll end with where we began. Fed credibility is everything. It's more important even than the printing press.
We got 20 seconds. Should the president fire Jay Powell?
You're going to send me off with that, Joe?
Do you think he will?
I'm not in the politics business. That's why I tried to stay to central banking. Okay. I think that regime change at the Fed will happen in due course.
In due course. Thank you.
Thanks,
Kevin
Joe.
Warsh.
Great to be with you.
Good to be with you. Coming up, banking committee member Senator Elizabeth Warren. She's been a supporter of Fed Chair Jay Powell. She's going to join us in just a few minutes. Squawk Box will be right back.
Welcome back to Squawk. EV maker Lucid announcing a global robo-taxi program created exclusively for the Uber ride-hailing platform. Now, Uber aims to deploy 20,000 Lucid vehicles, and they will be owned and operated by Uber or third-party fleet partners. Now, all this expected to launch in major U.S. cities next year, but that city has yet to be announced, so we got to wait. Lucid has been testing the auto drive system at its closed-circuit facility in Las Vegas. Lucid also announcing plans for a 1-to-10 reverse stock split, so we'll keep our eyes on all of this. I don't know how well their system works relative to Tesla, relative to Waymo, so there's still a lot more to unpack here.
All right, up next, Senator Elizabeth Warren on the fate of Fed Chair Jay Powell, why he should stay, and the president's economy. We'll be right back.
Welcome back to Squawk Box. President Trump saying he has no plans to fire Fed Chair Jay Powell, though he has been toying quite publicly with that idea. Senator Elizabeth Warren has been defending the chairman's role at the FOMC. Senator Warren joins us this morning. She is the lead Democrat on the Banking Committee. Good morning to you. We just had a guest on in Kevin Warsh, someone who folks have speculated about potentially taking that job. He openly talked about the idea of regime change. And so I just start with this very question. In a very practical way, if in fact Jay Powell were to be fired, pushed out, or otherwise dismissed, what you think would genuinely happen to the bond market, the dollar, the equity markets?
I think they crash. Remember, the way the independence of the Fed works, it provides a signal both to our country and to financial markets around the world that on a couple of key points, particularly monetary policy, what we've done in the United States is we put someone in charge who's supposed to filter through all of the economic data and then make a decision independent of politics. Our Fed chair's term does not run coextensive with the term of the president. The president does not have the authority to fire the Fed chair. The Fed chair is different from all of the cabinet officials. All the cabinet officials can say, as they have, I will do whatever the President of the United States wants me to do. I will do what is in the political interests of the President of the United States. The Fed chair sits in a different box. He has different tools, and he is supposed to be independent and make those decisions. I disagree with him often, in this case, about how he's made those decisions, but the independence itself is a value. It's a value to the United States. It's a value to our markets. If Donald Trump destroys that, then he brings down those markets. He burns something of value to the United States.
So, Senator, we were talking to somebody else actually from Goldman Sachs this morning about the practical implications and whether there would be an immediate crash, whether it's just a slow sort of a slow credibility issue that somehow impacts things over time. And the question, the reason I'm even mentioning that is the idea that, you know, no matter what, come next May, there will be somebody else in this seat that is not Jay Powell. And whether the markets have already even started to look through where we are today to then. And by default, whoever's put into that role is likely, as I keep mentioning on this broadcast, is probably going to have made some kind of blood oath to the president to say they're lowering interest rates. And so, you know, you talk about the independence of the Fed. I wonder whether the quote-unquote independence of the Fed is already in question.
Actually, I agree with you entirely on this point. I think there's a real cost to what Donald Trump has been doing by threatening to fire Powell. Disagree with Powell, that's fine. But threatening to fire him over and over, waving around a letter that purportedly would fire Jay Powell, talking with other senators about firing. The next time around, when we get ready to have a new Fed chair next spring, who's going to believe that Donald Trump picks someone who's going to be independent? So I think you're right. I think that Donald Trump is burning the credibility of the independence of the Fed's decision making. And look, you can't cheat the markets over time. People get that, and that just means that the system as it works in the United States is not as strong and independent as the rest of the world.
But Senator, here's the complicated part. If that's true, if the independence is already in question, the market is not crashing. It has not reacted that way. And so that's what I'm grappling with, because we have a lot of people who come on our air, you included, but we've had CEOs, the head of Goldman Sachs, the head of Bank of America, say the independence of the Fed is sacrosanct. And yet, if the independence of the Fed is already up for grabs, you would think the market would have reacted already.
Well, the question is how immediately. You know, people can decide, I'll stay in this bond market, for another 6 months. I'll stay in this bond market for another 9 months. But how much erosion is starting to take place? Look, it's the same thing that's happening around tariffs right now. Donald Trump says he's in with tariffs, he's out with tariffs, he's in with tariffs, he's out with tariffs. And you have to measure two different things. One is how much are the tariffs actually directly increasing prices? But the second is, what is the cost of creating this kind of uncertainty and chaos? And the answer, we know for certain, is that there are a lot of businesses that are not investing. Who's going to build a factory? Who's going to buy expensive equipment? Who's going to train up a workforce when you don't know what your inputs are going to cost, because you don't even have a sense of what the tariffs are going to look like, or whether you're going to get dinged when you try to ship this stuff overseas. Plus, Powell himself said he would have lowered interest rates last February, but for the fact of Donald Trump's tariff chaos. So that means here in America that people who have credit cards and who have car loans and any other kind of consumer credit have been paying more for 6 months now because of one human being, Donald Trump, and the chaos he causes. Markets force an adjustment for chaos.
Right. Yeah. He is one human being. President of the United States, Senator. Last time, can I talk about this mayoral race again? Because last time I asked you about Mamdani, the candidate, And you didn't endorse him, I don't think, but you said some positive things about a lot of the issues facing New Yorkers and how he might address some of those aspirationally. I've characterized some of the response from Democrats that since they see the inevitability of it, they're twisting themselves into pretzels to try and make it look okay for this guy. I asked Josh Gottheimer earlier, the congressman, about that. Here's what he had to say. Just give this a listen.
You'll hear no ambiguity out of my mouth. We do not need a job-killing socialist, and we don't need a job-killing socialist who wants to raise taxes and supports anti-Semitic rhetoric, right? In a city with the highest taxes in the country and the largest Jewish population in the country, I don't get it. That's not what we need.
Could you just, I don't know, expand on what you said last time about that, whether this is good for the Democratic Party? It seems like it got pushed pretty far left for the taste of the rest of the country in recent years, and this just goes further. Is this the right time to take it even further left?
Look, Mamdani ran a grassroots campaign. He went to the people of New York City and he said, I get what's happening. And we need to run the city so that it works better financially for you. And here are some ideas I have, some new ideas I have about how to do that. I want to make city government work better for you. I think the idea that if you want to run a food truck, instead of paying $400 to the city, you got to pay $20,000 to some middleman because the city can't get itself organized just to issue those $400 certificates so that you can operate. And people said, hey, I hear that. And I like that. And he pointed out that if we did that, or if they did that, you could actually lower the cost of the food that's sold at those food trucks. He said, we've got a problem with entire food deserts where people can't get access to grocery stores. Said, I'd like to take a look at whether or not we can have some kind of, like we do on military bases, you have some kind of support from the city government that says we're going to get some food grocery stores in areas that right now are food deserts. And by the way, it's a new and fresh plan for New York City, but it's been tried in other cities around the country and has had some real successes. So what I hear Mamdani saying is, I want to try things to make it work for working families. And you know what? This is how democracy works. A lot of people in New York City said, that sounds good to me. I'd rather try that than any of the other alternatives available to me. I support that.
What do you think of he was asked repeatedly to condemn, or whether he would condemn this phrase, globalize the intifada. Obviously, there are a lot of Jews, I'm Jewish, live in New York City. A lot of folks concerned about his inability or unwillingness to condemn that phrase. How do you feel about that phrase?
Look, it's not something I would say, and I think he has said that he will not say it. He will discourage others from saying it.
Would you condemn it yourself?
Look, I don't do that. I'm not in any part of that. But
you don't condemn the phrase?
Of course I do. Look, this is not the way we should talk. If this encourages violence in any way, then I am opposed to it. I am a no violence person. I think it's a very, very bad idea, but let's be clear. Mamdani ran this race because he said, I can make government work better for families on the ground. I'm willing to try new ideas to bring down costs for people who live in New York City. And I understand that big time investors are freaking out about that because they can't quite understand how somebody is going to maybe make it to be mayor without having come and bent a knee to them. But that's not what he did. He went directly to the people. He told them what he wanted to do. I think he's going to do it.
As a New Yorker and somebody who does talk to a lot of the people you're describing, the thing that I keep hearing over and over again, frankly, starts with the concerns about anti-Semitism in New York and an unwillingness to really come out vocally and condemn, and actually use the word condemn. In fact, I would argue some of our viewers probably
Can I
would
say
like
it for
you to...
you right now? I condemn violence.
Right.
I condemn those who encourage violence.
But
there you go. Can
and
we
then-
talk about what Mamdani has
Right,
done
but what I
that
was
is
gonna suggest-
bothering the Wall Street boys so much?
Well, but I was also going to suggest, I think all New Yorkers would agree that there's an affordability problem in New York, no question. And I think he did a great job of articulating that affordability problem. I think the question is, how do you address the problem, right? And I think there's two ways to address the problem. One that some people think is more effective than others. He's suggesting things like rent control on one end, and I think that a lot of folks, the investor class that you're describing, would say, you know what, you need a lot more supply of housing. That's the ultimate answer. At best, it's a Band-Aid to do rent control. At worst, it's going to make things worse. And ultimately, what you need is to change regulations and restrictions on, building heights and everything else. And I'm curious where you land when you actually start to think about even those two options.
So, look, I'm the person who's been preaching increased housing supply for years and years and years now. I actually have a housing proposal that would build 3 million new units all across America. I want to see us do more housing. We need more
Senator,
housing in
I
urban
agree with
areas.
you, but
We need
but I
more
think to
housing
Andrew's
in
point-
rural areas.
But to
We need
Andrew's
more
point, when you
housing
have rent control,
for
you don't
first-time home
incentivize people to
buyers.
come
We
in and build
need
new
more
houses.
housing for seniors. And yes, I think we need
but
to
does
make
rent-
big
does- is rent
investments
control-
to build it. And I think that we need to make changes so we can get that housing built. You know,
But does it go hand in hand with rent control, or is it something that is
no,
antithetical
this is
to have increased housing?
You ask, what do I think is the problem? I believe the problem is a
Well, what's the
housing
solution?
supply problem. Build more housing. That's like
But can you
Econ
do, if you have,
101.
I guess we're just talking about rent control. Do you think that rent control puts it in a position where the private sector won't build more housing? Or is it antithetical to have additional housing if you have rent control?
I think what we need to do is put much more into building more housing. And yes, it means we need to change regulations around housing. There are a lot of different things we need to do to get more housing built. And that's where I've put out the proposal. So don't ask me how I feel about it. Take a look on my website, and take a look, by the way, I am the ranking Democrat on the Banking, Housing, and Urban Affairs Committee. And right now we are working on a housing bill that is very much, I don't want to overpromise here in
Senator,
terms of how much it'll deliver, but it's
Senator,
all directed toward building more housing,
We're up
supply
against a hard
side.
break. We need to thank you very much. We hope to talk to you again very, very soon. Thanks.
Up next, Squawk on the Street.
Yep, we're done.
Self to apply.
Good Thursday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. Faber has the morning off. Futures were mixed as the data runs hot today. Retail sales, second best print of the year. Jobless claims down 5 straight weeks to a 3-month low. Yields are higher across the curve as we get one last day of Fed speak before the blackout begins tomorrow. Our roadmap begins with the earnings parade. GE Aerospace, Taiwan Semi, United, and many more. The president says he's unlikely to fire the Fed chair as bank CEOs now defend Fed independence. And Pepsi with the beat, although U.S. demand is weak. CEO is going to join us live in a few moments, talk about earnings and the president's comments about Coca-Cola. Let's begin with the earnings, though. Jim, there's a lot to, and you call them halcyon in some cases.
Yeah, well, we've had 2 quarters now that really kind of are shockingly great. This GE number today, I spoke to Larry Culp, the CEO. He's not even done. There's much more, and yet Phil LeBeau is the best in the business. Going back and forth about how amazing. I mean, we just can't believe how amazing it is. And then yesterday, unheralded, unsung, but I'm going to change that. Johnson & Johnson.
Yes.
Johnson & Johnson delivered a quarter. I counted 15 separate surprises, line by line. 15 different things that they beat on, all sorts of different metrics. It was such a tour de force that you'd think to yourself, is something happening in corporate America that is where everyone's been unleashed? Now, I asked about artificial intelligence in GE, and sure, there's some, and Larry should tell you there's some. And I asked for artificial intelligence in J&J, and there's some. But what there really is just there's some companies whose price earnings multiples are too low that are just delivering amazing numbers. And I go back to something that Ted Pick was talking about in his amazing conference call. He's the CEO of Morgan Stanley, and I think he's a very, very smart man. He is talking about the board, that the boardroom is adjusted to Trump. Boardroom's adjusted to these things, and there's adjusted in a fashion that is quite extraordinary. They're ready, and I think that the other day I said that the institutions on Wall Street aren't ready. They don't seem to realize that the CEOs have figured Trump out, and for the most part, I know this is something that there'll be people who hate Trump won't want me to say, for the most part, they're really happy.
Well, Jim, corporates thought they understood him in January, and then they got surprised in April. Now they understand him again. What makes you think they won't be surprised again?
Because they're working with him now. They're talking to him. And I think it's harder to have a dialogue than to have no dialogue. I think that they were quite surprised. I think they thought they had Trump won, and they were very smug, CEOs. He came in and he said, listen, it's not going to be like that this time. You're going to work hand in glove with me. One of the things that Larry said very, very carefully to Phil in the interview was that, look, the president understands planes. And when I spoke to Larry, just look, Jim, you have to understand, it's a different world. To a person, not to a man, to a person, they're all starting to come clean about Biden, saying that they had no relationship. There was nothing. It was really very, in many cases, frightening that that president didn't care at all about them. This president wants to speak to them. Do they agree?
Again, Jim, we had back-to-back 20% years, so none of that got reflected in stocks.
No, and I think that the institutions liked the fact that there was no other place to put money. We were the best place in town. There's a huge transference of $100 trillion going from the baby boomers up to the current people, and I agree. I mean, I always push back and say, well, yeah, but we made so much money. What's the deal? Maybe we didn't make as much money as we thought we could. I mean, I know it's obscene. We're so blessed. But when I talk to these companies, they're always saying, the big, beautiful bill, it wants them to build more. J&J directly referenced it. Say, listen, we're going to put a lot of plants up here. Plants that wouldn't be here. And because of the bill. Now, you can say the whole thing is a Potemkin village. Everything's being done to make it so that the president doesn't get upset with him. But when I look at the quarters from the financials, oh my God, the Goldman quarter?
Yes, we mentioned the quarter they had on equities. The backlog at GE, $175 billion.
And I mentioned that to Cole. You're talking to Larry. It's like, I don't know, it's at 5:50 a.m. And I say, look, I have all my questions, and they're all worthless. Because I'm looking at a quarter that is so insane. And I said, I know this flight deck. I thought that was all for show. It's probably really working. And so I said, the only question I have is, can you really find the people to do all the things that you need? And will you have to use robots? And he said, no, there'll be a lot of artificial intelligence, but we'll be able to do the people. But the backlogs we're talking about, it's just such a bull market in travel and flight that makes me say, like, raising numbers, Marriott, United Airlines, of course, had to go wreck things.
Yes,
right?
yes.
Scott,
Now, of course,
Scott, get with the
we
program.
don't operate in a vacuum, and Culp did talk about how the Europeans are viewing the United States when it comes to some of these trade negotiations. Take a listen.
I'm optimistic. I really am. When we're talking with the president and others in the administration, I think there's a real recognition that the U.S. enjoys that $75 billion annual trade surplus for a host of reasons, not the least of which has been this tariff-free regime. The president himself understands the industry very well, right? He had his own airline. He flies his own 757. He understands this industry, I think, in great depth. And we're, again, optimistic that as the other trade deals are reached, that what we saw in the UK agreement will be
as we look for more codification of the UK deal. Jim, they do set a 2028 goalpost now of 840 at GE.
No, and his when he does that free cash flow analysis, I mean, you're not supposed to be able to give it 28. I mean, I told him, why are you risking it? Why are you bothering to put out a 28?
Well, it's a long cycle business.
Right, because he says, because I have the business, right. Jim. And I said, but that's so optimistic. He goes, because we are optimistic. That's the kind of train of thought that I'm trying to get my arm around. I am so used to everyone saying, well, I'm circumspect and there's uncertainty. No, he's not circumspect, and there isn't any uncertainty because the demand is so unbelievable. You have to go back to Jim McNerney to hear this kind of thing, where he just said, listen, I got orders, and it's just up to me how much I can make money. They're all talking to each other. He's got orders, he's got backlog that's amazing, but this service is great. And what he told me was, he said, we're not there yet with defense. Defense could be amazing for us. Yeah. Defense is finally coming back. Defense was an afterthought when he first came over because he's got so many things that were wrong. But defense is now strong. Free cash flow doubling? I don't think people at home understand. You can't. It's brass to gold with this thing.
Yes. They got a little relief, both them and Boeing, on these apparent clues in the Air India probe where they are looking at the pilot and these fuel switches, even as the first officer apparently was panicked while the pilot was calm.
Yeah, it does seem like that in our country, they were talking about how, the journalists talking about how the FBI would be involved in our country because it's obvious that the plane had nothing to do with it. So it was obviously that something happened, and it looks like India's being very open-minded about the investigation, which is very good.
Yeah, we're going to get to a bunch of earnings today. There's some exciting ones. GE's one of the big ones. Of course, we do want to discuss the White House and the Fed chair yesterday. The president was asked about ousting the Fed chair. Here's what he said.
Completely ruling out the idea of firing Jerome Powell.
I don't rule out anything, but I think it's highly unlikely. Unless he has to leave for fraud. I mean, it's possible there's fraud involved with the $2.7 billion renovation.
And some of the bank CEOs, David Solomon on our desk, sort of defending, even Leader Thune, saying the markets want an independent Fed.
Yeah, I when I ask them off and on, I say, look, will you come on? They're happy to talk about an independent Fed. No one feels like that they're not fearful of Trump for that. They feel that the retribution is unimportant versus an independent Fed. When I listened to Kevin Warsh this morning on Squawk, I didn't hear a lot about independence. I heard a lot about cooperation, and he had a kind of an ahistorical vision of things. And they say ahistorical, and I know exactly that is fire. I don't care. I think that the notion of a Fed that is subservient to the president was the undercurrent of what I heard from Mr. Warsh. I don't know the man. I think he's out there calling for this new regime. And I don't like new regime because, you see, we have a current regime. It's called the United States. Worked pretty good. I dated to 1776. I carbon dated it.
Well, Warsh says he says continuity at the Fed's not a good thing. And his general view is that they're missing the ball game, meaning this disinflationary nirvana that we're going to get out of AI and technology.
Well, I do think that there is going to be disinflationary AI, but I also think if you have rising goods prices and you have lowered service prices, as you've been saying to me, well, that's not exactly nirvana for America. We have people making less and stuff costs more. That is not good. I went over every single item of the CPI last night, just point by point, put them all through. You know, I'm not talking about like oranges. Look, there's some inflation coming. There is, and we're rich.
So we don't feel it as much? What? I mean,
I think that there's a time when I lived in my car, I looked at every penny, and I'm very lucky now. When I say I'm rich, I'm not saying like, hey, I'm saying that a rich person doesn't understand this stuff. They don't know why then people go to Aldi or Dollar General versus going to King's and going to Cinderella. They don't understand it. But this stuff is real and it's meaningful. And I think that the wealth of the people who are on TV betrays us. We're not in touch with the way when people go to the store. I mean, you had to have that $10 underneath the clock when you were growing up and your mom and dad were fighting about whether it should be Chuck or whether it should be Hamburger Helper, and you're listening, you're thinking, oh, at least
don't
I
be
got
talking
something.
hamburger, man. $7 a pound.
Well, we're out of touch. I mean,
it ain't cheap no more.
Mr. Wash may be out of touch. If you're going to keep wages lower or have them continue to go lower because of artificial intelligence, but you're going to have things go up in price, that is how you don't get reelected. But President Trump, maybe he can't get reelected. I say maybe because the Constitution seems to be very much in flux.
We'll get into some of the, I would argue, inflationary signals, certainly out of Philly Fed this morning, and retail sales.
You know, you
When we
idiots.
come back, though, a live and exclusive interview with Pepsi's
Why didn't you raise hell when inflation was at 21 to 40%?
International strength, but some weakness in the U.S.
No, Raymond's got it together.
I don't get it. I'll never get it. I mean, I get it because they're one-sided political hacks. I mean, I rate sell about it, but no one else would. Back then. It's me like we've got new highs going on. I had some guy on here this morning says he's staying away from tech, and I said, "Are you an idiot?" Looks like Lucy got a partnership with Uber. It hit my resistance level of 335. I think I called this out the other day. Okay. Hmm. Feeling good. Okay, well, I think I'll wait for a pullback on SPY. It's kind of mood I'm in right now. I mean, I'm listening to CNBC. They just don't know what to do. They keep looking for imaginary numbers, and they're not getting what they want. It's just weird how these professionals can be so wrong all the time. I got to where I just do the opposite of what they say. I had a real good day yesterday. Just caught in one trade. We've got 2 minutes left. We're about to hit my support here on /ES. I had 63.0525. So we'll see here if we get a reversal. I'll be looking at the SPY first thing. Unless we break down on the SPX. which I don't think we will, but it'd have to be in here somewhere. Here we go. Right off the bat. Right to the VWAP on the /ES. So the 625 strikes. That's 77 cents. And it's kind of risky, but I'm giving it a shot. There's 93. Profit, 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 profit. Bingo. I'm ready to go to the beach. 99. 102. Profit, profit, profit. A plus. Magnificent. Where's my grade, buddy? I mean, I nailed that support level. Mister, watch Mister. The video, a little knife on the video. Things got a little bit out of hand yesterday. AMD at support. And what was that one yesterday that I was screwing around with at the end of the day? Circle. Listed, I got 335 resistance, so it can pull back and keep retesting that. And we got circle. Watch circle here. This one had one hellacious run yesterday too. But I had this support level at 221.54. Yep. I think it's going to be a good day trading. Just let them come to you. Don't chase. Because we need to consolidate after yesterday's run. We have symmetrical flag on circle, or ascending triangle maybe here. Get ready for the breakout. Let's see right here within each second. I had to, what did I have yesterday? I traded at the end of the day, I traded, what was it? Damn it. 250 strike. Now I don't want to trade that one now. So the 230 strike on circle. There it is right there. And watch AMD. AMD's been on fire. These here are 380. weekly. And there's 430 right there. 450. Profit. 475. Woo! SPX, yay. Right off the VWAP, off the 200 SMA. /ES. I'm out. And I sold the rest of my SPY at 129, 127. Well, the inflation numbers were good, and CNBC, all they could argue was recession. So I don't get what they're doing. I really don't understand. It's like they're trading old school or something. We got 3 white soldiers here on the SPX. Circles back down to 4 1/4. The 62.55 puts. Give that a shot. At 380. Now this is a little risky here. Come on. I'm trying to remember that. I don't know if it was Jim Morrison. Come on. I think it was Jim Morrison that said that. Coin. Very good job. I took my profit too. You just got to get these things to drop. I see it drop back down here at 63.0985 and respect that, and then come back up and break a triple top. And I'm gonna go warm up my water. I'm gonna have a little shot of coffee. I got some beet juice. And today, there we go. With my burger, I'm gonna put some canned seasoned onions on it. God, what the heck? Thought I was going on here. Wonder if CNBC will ever learn their lesson on their. Yesterday they were tripping out. They were really smiling and had a shit-eating grin last night on that fake news that came out. Well, this ain't working. I got to add on here, I think. Damn. $310. You got 310 and 370. They got 9. 330 average. Got a reversal on NVIDIA. Apple's down here hovering at support. Slash ES had a new high off the 200 SMA. This thing doesn't hold. I'm going to stop out real fast because I ain't down that much. Baba new high. NVIDIA new high. Interday. Three white soldiers on NVIDIA. Oh, there we go, 320. Drop, 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 drop. Now we're to the top of the orb. See, this is what I said. I hate getting stuck in stocks and then come to a support level. So, I mean, what to do? What to do? Jim says hold it. I'm gonna hold it. I'd like to see a little bit more drama. We got a 1-2 triple top right here. So let's draw that in. They'd be right there off that double. We got a double confirmation, triple confirmation at the 63. We could hit the 21. So we'll see what happens there. I might just sell a mirror. Yeah, I didn't get what I wanted though. Need a little bit more. I was $90 off when it hit that 320. I would have almost got out even, but we'll just see here. I'm not completely sold yet. Now, in my mind, market's very bullish, but I think we are at a place where we got to kind of not get carried away. And dips are a buy. QQQ has a double top with a new high. Jimmy called out Mr. this morning. Woo! And I sold mine. You're back to 320 on the puts. Let's drop it. So we're retesting the orb. I'm gonna write a song about a girl that I want, but I gotta hold my tongue. Ain't it funny, you know, I was in high school and I met this girl at the bar, and she says, "Jim!" It was 15 years after high school, and I couldn't recognize her. She says, "Jim, don't you remember me?" And I said, "No, I don't." She said, "I'm la la la," and I said, "What?" And she said, "Yeah, I'm so and so. Let's use the name Sarah." And so we sat down and had a beer together, and probably within 3 minutes of buying that beer for her, she spilt it on me. So I said, girl. So I went to buy her another beer, and if she didn't spill that damn thing on me. I said, like, you spilled 2 beers on me in a matter of 15 minutes. I'm just so excited to see you. And so I bought her another beer. And guess what? She moves her arm to the left and bam, another beer on me again. I said, Jesus, are you a klutz? I want you to put your beer in front of you from now on. I don't want it to the side of you or anywhere. I want it 2 feet in front of you, and when you want to have a drink, you can grab a drink and put it right back in that spot. I don't want this coaster moved. I want it right there. And she said, well, I got to tell you something, Jim. She said, when I was cheerleading back in high school, I had the biggest crush on you. And I said, well, why in the hell didn't you tell me? I said, why didn't you tell me? Oh, because I was shy and you were so good looking. And I said, God, I'd have dropped everything for you back then. Because I had a crush on you too. And I tried to hint to you, but you never did say anything. So we ended up dating for 10 years after that. But you ever have a girl? I mean, I got one in my yearbook. I'll read it to you here in a second, what she wrote. And it's what gets me about girls. They have this huge crush on you, and then 10 years, 20 years later, they tell you, I had the biggest crush on you back 20 years ago. I said, jeez. You know how hard it is to ask girls out? And then the chick, when she signed my yearbook in college, she didn't sign her name, so I had to wonder, who in the heck was this? She signed it XX.0 or something. We got a double top on SPX. Not looking too good on this trade right now, so we got to come back down. If we break out, I think I'll just cut it. And I'm going to go get my water on. Damn, look at Mister. Well, that would have been a good trade. Cryptos are flying. $2.40. No, it's not the trans. Although I did see the trans 30 years later, and he wasn't mad at me no more. I thought he was going to whip my ass so when I saw me. Are you Jim? You Jim Howard? And I said, yeah. Do you remember me? And I said, no. I'm Aaron Appleton. I said, oh. You mean we almost got in a knife fight? It'd have been the fight of the year. You couldn't trust him, man. If a sucker would have a knife on you and stab you to death. He was just someone I didn't want to mess with. He. Okay, well, I'm about even on these things, but I'm going to hold on to them. I still think we're going to drop. We're at support right here, so I could buy a call and offset it and get out of these. Take a small loss. AMD hit the 200. We got a triple top on /ES. New high. Coined up $11. Oracle had a good day yesterday. Here's one we missed. And they've been talking about Oracle. Oh, bitch, I forgot my mop. Hello? I don't remember putting my mop back up. I think I'm gonna run up there and check. Dadgummit. I sure don't remember it. I'll tell you what, I gotta get checklist going. I'm going to hold on to these puts, and I'll be right back. Or I should wait a second here. We got the 63 at 627477. So it's either the orb holds I'm gonna go run and do something real fast. I don't know if it's so stupid having to leave and do this. Yeah, I'll be right back. God darn it. Pick up here. So here's the thing I got in my college yearbook. I can't tell you who I am. Please forgive me. I've watched you from far for a number of weeks. I often imagine our relationship. Skip, autistic, athletic, hot. Someday, when I am free, I guess you had a boyfriend, I'll come to you. Something to go. Someone is coming. Forgive me for borrowing your book. XX something D question mark. The chick wouldn't tell me her name. I have no clue who she is. And that's probably not the only one. Can you imagine a woman telling you about being athletic with you? At least I hope it's a woman. That's what it said. It looked to me like she said autistic. SHIP, artistic, ARTISTIC. Artistic, ARTISTIC. So women, what's that mean? When a woman says she wants to be artistic with you, ARTISTIC. Angel, tell me what it means. Getting naked? You know what it means. I'll find out here. ARTISTIC. Generally describes something related to art, artists, or possessing qualities associated with sex. Ah, here it is. The term also encompasses the artistic qualities of art as the ability to invoke emotions and appreciation for beauty. Probably, yeah. We're at 270, baby. Let's drop. Drop, 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 drop. We're at support again. This could go on all day long. I'm gonna go check that, see if I left that stupid bucket out. I know I probably didn't, but there goes nothing. I'm gonna turn on the TV. Take over, Funky. Here we go. We don't need to do shit. We need to go downhill. $340, baby. We're at our other resistance level. Support level. Good job, Sheba. What? Damn. How dare you? Darn it. I wish I didn't have to do this, but then I gotta go back here in a little bit after I have lunch. So it's going to be a busy day for me today. We'll put these idiots on for right now.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I gotta go check to see if I left something out.
No politics, no noise, from Bell to Bell and beyond.
Billy
Available
Long.
anytime, anywhere, on any
Jim.
device for free. Schwab Network.
With you in this mop bucket.
Welcome back to Morning Trade Live. Time to focus on Block. We look at the digital payment space. There was a lot of high hopes here, but this particular stock has not done particularly well. In fact, it's been down nearly 20% this year. But we have a bullish take here. Tony Zhang, Chief Strategist, Options Play, is with us. So what are your thoughts on this name?
Yeah, Nicole. Block has gone through recently a rebranding, obviously, of both the company name as well as the symbol. But really, from my perspective, I think if you look at the strategic acquisitions they've recently made, I think they've made some smart acquisitions. One, they've bought Afterpay, which gives them exposure to the buy now, pay later services. But I think more importantly, acquisitions in the cryptocurrency space is actually what is driving some of the recent gains in the stock. Like you said, the stock's down 20% this year, but overall, what we've seen is some outperformance here over the last few months, and that's really what I'm paying attention to here right now. And I think the cryptocurrency initiatives are particularly interesting because obviously we see Bitcoin's near all-time highs again. We see a regulatory environment that's seemingly more favorable towards cryptocurrency, and you've seen a lot of analysts recently upgrade this particular stock and rate and reprice it in terms of price targets here to the upside. And investors are clearly starting to pay attention. You've seen the stock kind of bottom here in the low 50s, a couple of months ago, and recently it broke out here above some major resistance levels. It broke out above 60 back in May, came back to retest that and kind of confirm that move higher. And just a couple of weeks ago, it broke out above 65. Retested that again here recently, and it looks like we're going to continue moving higher here from there. My upside target here is around $85 on Block, and really this is rooted not just in looking at kind of what I like about the stock from a fundamental perspective and the charts, but if you look at the valuations, they're incredibly compelling. Block trades at only 14 times forward earnings, which is almost nearly half of what the industry median's trading at, which is 26 times forward earnings. If you look at expected growth, it outpaces its peers by nearly double in terms of EPS growth. Revenue growth is a bit higher than the rest of the industry as well. And more importantly, I think profitability is really what has surged substantially higher here in the last couple of years. This was a stock that was struggling with profitability just 2 years ago. Right now, we're seeing net margins north of 10-11%, which is higher than the industry average again as well. So I think for all those reasons, this looks like a very compelling time to relook at Block. I really loved this stock last year, but the stock took a big fall, earlier this year, and I think now's the right time to look back at Block again.
And when I thought of Block originally, I used to think how people used to deposit their checks in there. They have the Cash app that was sort of undervalued. And now you're talking about Block in a whole new way, with a buy now, pay later way to go with that Afterpay, crypto. The crypto part seems a little less clear to me. As you noted, you have a target that's above 80. I saw another one today also above 80 today. So you're right, the analysts are coming out, and not that you would ever be wrong, but the analysts are coming out and raising targets. It's just unclear XYZ. Is it going to be driven by this crypto part of the story, and what is it exactly? Do we know even?
From my perspective, it's really driven, for me, the compelling case about Block right now is the valuations, right? Trading at 14 times forward earnings, when you're looking at EPS growth that's north of 23, 24%, revenue growth that's around 11, 12%, just that alone, in my opinion, deserves to be trading at probably closer to at least 19, 20 times forward earnings. Net margins, like I said, are approaching 11%. These valuations made sense when the company, struggled to earn profitability here a couple of years ago, but that's turned around substantially here in the last year alone. So I think for those reasons, this is a stock that could easily be trading at 20, 22 times forward earnings to the upside. Even if you don't factor into, the cryptocurrency and buy now, pay later, just looking at the fundamentals of the business, this is, in my opinion, significantly undervalued. And then if you add on the narrative of Bitcoin, cryptocurrency and buy now, pay later, I think it looks like a much more compelling case for this particular stock at the moment.
And what about those other names in the group? I mean, we had just put up Toast and PayPal and others. Where do we fit in with those names?
Yeah, so this trades at a discount relative to those particular names, and I think if you look at those names I think PayPal's probably the closest peer to Block in terms of payment processor. Now, PayPal is far more exposed to e-commerce versus Block has a lot more from a brick and mortar perspective. And you look at consumer sentiment, consumer spending, which obviously was weak in the last couple of months. But if you look at the earnings report this particular quarter, you see Delta, you see JP Morgan, you see the major banks, they're all seemingly sounding that, the fact that consumers are seemingly turning a bit of a corner here with regards to expectations for the second half of 2025. And I think that's another part of what provides a compelling case for some of these payment processors, that focus on retail, focus on e-commerce, to potentially start trading at a higher multiple again.
All right, Tony Zhang, Chief Strategist, Options Play. Thank you so much. It's great to see you. And now it's time for the Chart Master, and we take a closer look here at a trade, and we want to hear a little bit about the trade. No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Trading the trending names every day. It's Fast Market. Ready for you, ready to go. I'm Kevin Higgs. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started,
Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to Morning Trade Live. It's time for the Chart Master, and Alex Coffey will take us through the fundamentals. Rick Ducat will go through the technicals, the charts for us, because we have some names to watch. So, Alex, let's first focus on American Express. The company reports its earnings tomorrow morning. What do we need to know about American Express, Alex?
Yeah, good morning, Nicole. This is a name to watch tomorrow morning when we get these earnings. A good look into corporate spending, high-end consumers, as well as travel. Some key categories to watch: airfare, dining among high-end consumers. But looking at the numbers themselves, 386 for the EPS is about a 10.5% growth rate annually if it hits that mark. 17.7 billion for total revenue, about an 8.5% mark for year-over-year growth. Now, it's still a company that's carrying, better than peer growth amongst this category, but there's still a ton of unknown whether or not, trade policies will weigh on spending going forward. So guidance could be key. Retail sales we talked about this morning were strong, so could bode well and could be setting up for what could be a better than expected quarter here in the second quarter for American Express. Analysts, I would say, are largely mixed on this name. You got about 10% in the sell equivalent camp, about, let's call it 35% in the buy equivalent camp, and then the balance in hold. So the vast majority are hold or neutral equivalent ratings, about 55% of them. But a slight tilt to the bulls over bears with about 35-40% in the buy camp. Definitely a name that will garner attention, but it doesn't necessarily always deliver big moves around its earnings event. Average move over the last 10 years about 3.5%. Expected move based off of options around 4%. So not a ton of volatility expected here, Nicole, but certainly one that will have a read through on the strength of the consumer, particularly the high-end consumer going forward here into the summer.
Yeah, and look, people are obviously using, you have the higher end folks, the socioeconomic bracket. We saw that with the premium seats on the airlines. I mean, the folks in the higher end still spending. We always watch Visa and MasterCard too. Tell me about American Express chart, please, Rick.
Yeah, we saw pretty much just a V-shaped recovery here. We had some high points back here near 304. This was the ceiling for a little bit, and our green line here, just very consistent, very pronounced resistance right around that level. Then we had our breakout. We made new highs at our red line around 326 or so. Our old resistance ceiling was tested. It briefly became support, but then the pressures were just too much for the bulls to take, I guess, here. We bottomed out around 220.43. During the tariff news announcements, a significant and notable low point pretty much across the board for many stocks here. From there, though, we recovered. We maybe even if pattern enthusiasts could see a reverse head and shoulders type pattern here, typically a more bullish type of pattern. It did play out to the upside, but we got stuck once again at our old resistance line 304, our green line once again here. Now we can see that price traveled upward here. Now, even though we did make some new highs above our old red line there near 326, we have faltered a bit here. We are holding on near the yellow 21-day exponential moving average here. Momentum waning around the 50 midline here, but you know, that's pretty common for a stock when it's heading into earnings for the momentum to slow down. So we'll have to just wait and see for this potentially large catalyst here in the form of earnings. So we can also see now volume node right around here near 320. That could be another resistance area to consider here. Also, our green line is where the volume picks up again. It's also our linear regression line, our line of best fit. So that area around 304 for support. And if we were to look at our long-term chart here, just really a pronounced shoot to the upside here after we cleared that level near about 180 or so. Things really took off. Long-term support here tested repeatedly at 220.
Thank you for that. And at 312 today, and I saw a lot of calls too here. You know, I saw 285 from HSBC. BTIG has 277 and a few more. Thank you for that. Let's take a look now at the next name here, Alex. KeyBank raising its Meta price target to $800 and keeps the overweight rating on this Mag 7 name. Some of your thoughts, it's at $700 today.
Yeah, as you said, about $100 in upside seen from Justin Patterson over at KeyBank. Adjustment of the price target up to 800 from 655, keeps the overweight rating. KeyBank expects Q2 revenue to come in at $45.3 billion and expects Q3 revenue guidance between $45 and $47.5 billion. They raised their 2025 and 2026 revenue and EPS forecast to reflect revenue momentum. And they are mindful that there are upward biases to CapEx and things adjacent to their AI investments, and they're still slightly below the consensus. But they don't necessarily see this as an overall issue for the stock, and they provide that their management articulates where it is seeing AI returns. So putting a little bit of pressure on Zuckerberg and team to, I guess, justify the big price tags that they're spending. But we know that Meta is not a name that's giving up just yet on that AI race. If anything, they're doubling and tripling down. Now, this is a pretty steep update to the price target, but it's nowhere near the street high, Nicole. That belongs, of course, to Ivan Feinseth over at Tigris Financial, $935 a share.
Really? I had him on yesterday. Wow, that is a big high price target. All right, well, Ivan's made some great calls. I mean, he was so right on so many of those cruise lines and many other tech names, so we will see. Let's take a look at the chart, Rick Duquette.
A lot of similarities between this and our last chart that we just looked at here. By that I mean we had a ceiling area here. This time it was maybe around 625 or so. We had the breakout. We established new highs. Then we had our V-shaped price action here. And you'll notice too, once again, that level near 620, 625, that came back into focus once again. That was our lows that we saw after a gap up that formed shortly after this earnings event here. Now though, price is once again stuck at these old highs at our pink line here near about 741. Couldn't quite make a close above it in this case, although we did make higher intraday highs. So as always, the close is typically regarded as being more important there in this case here. And now the situation looks maybe a little bit worse than our last chart here. The reason for that is because price was trending downward here. We have now failed to hold on to our 21-day exponential moving average, as well as another kind of like price ceiling here. 705 was where price got stuck. It's also where we started to have a more notable breakdown back here. But we've pushed below our trend line here, our blue channel. So some technical breakdown signs are starting to materialize here. We can also see that momentum, as we said, commonly starts to fall heading into an earnings event. But even before that, we saw bearish divergence on the RSI, and we saw the RSI break its upward sloping trend line here. So trending below that 50 midline that separates bullish and bearish momentum. if we were to consider some support and resistance levels, well, the volume node, according to our volume profile study, mostly between like 690 to 720 or so. That's where a lot of heavy trading activity was in the recent term here. So a dip below that level, that opens the door to retesting these old lows here near about 680 or so. If we were to push higher, you know, obviously those double top highs near 741, that would be the mark to beat. But, you know, one other theme I kind of noticed with these three stocks here is that the long-term momentum, as I said, short-term momentum can slow down heading into earnings. The longer-term momentum is still trending downward. We are noticeably below those old highs on the RSI here as we assess what's happening with this particular stock here. So a key supportive area to watch for as we go into earnings.
Okay, thank you, Rick, for that one. Last but not least, what's going on with Shake Shack? I see some calls here and it's under some pressure. I mean, I know it's reporting at the end of the month. Some of the analyst calls are lower than where we are. Some are higher. Some of the older ones are higher, but it looks like there's a bit of a struggle here. Alex?
Yeah, well said, Nicole. A bit of a disagreement here intraday from a couple analysts that updated their calls on Shake Shack. First one, Andy Barish over at Jefferies, downgrading the stock from hold to underperform, price target of 120. It is up from 100. Jefferies says the investor optimism around the company's near-term same-store sales recovery is more than reflected in the stock following the recent rally. And they say while there are tangible drivers, including menu innovation, that bring growth visibility, the promotional environment, high expectations in the stock valuation warrant the downgrade. On the other side, Barclays analyst Jeffrey Bernstein raised the price target for the firm on Shake Shack subtly from 166 to 168, but keeps the overweight rating. They say that they adjust their price targets in the restaurant group as part of a Q2 update. Comp sales re-accelerated through the quarter, led by value offers, with casual dining leading, quick service lagging. This again, Barclays. So disagreement, but one thing for sure, there's a lot of optimism around Shake Shack. It's just a disagreement whether or not, at least in Jeffrey's case, it's already priced in.
Yeah, well, I bought it at JFK and I finished it at Heathrow, and I thought that Shake Shack burger was delicious. Rick Ducat, tell us a little bit of the story.
A similar shape to our other two charts, but there's some important differences in this one here. So once again, if we were to backtrack, we can see that after a notable rally, price established a ceiling here at this red line near about 139, just below that region. We had our V-shaped price move here, once again bottoming out with the April tariff news announcements here. So then we had some other horizontal levels that came back into prominence. If you look here, 115, 128, our light green and dark green lines respectively. Highs before a gap, lows several times, ceiling, then we quickly broke below it, then consolidation phase. See, it's similar with our dark green line here. Notable low points here, but then that was the repeated ceiling that price struggled to break above. So now in this case though, Shake Shack did push above those old highs near 139, 140 or so. Not really any kind of big push to the upside though, kind of just meandering sideways after the breakout, holding on to support until a few days ago when we did start to break down. We broke below our trend line. We broke below our yellow 21-day EMA, and we can see that momentum showing bearish divergence heading into this event here now is once again going below that 50 midline here. So those were some areas that really stood out here. And when we do assess our volume profile study here, we can see a heavy volume node here centered roughly around that 125 area. So matching up pretty closely with our dark green line. 125 to 130 could be a supportive area here. And if we were to make another attempt at those highs, we can see our 139, 140 area, another volume node, also pretty close to our +1 standard deviation channel. To look at the long-term view as well, a similar trajectory for the weekly RSI, trending downward despite this short false breakout to the upside. And if you look back even further, you can see this level where we are now, that 140 level, all the way back here was a resistance point as well. So this is a long-term ceiling that the bulls have really yet to make a compelling push above.
And it was interesting, too. Thank you for that chart. And Alex, you talked about one analyst up, one analyst down. You were talking about Jefferies and Barclays. And as I look back here in the month of July, I saw Truist with a 150 target. That would be the one analyst up. And Loop Capital looking for 127. That's an analyst down. So really hard to say, which of the analysts will be correct. Good to see you both. Thank you both so much. Alex Coffey on the fundamentals. Rick Ducat there on the charts, taking us through three key names in Chartmaster.
And Bartle, you know your mic's on?
Our market meetup panel is ready. We've got to talk about some of the action that's happening here on Wall Street. We'll look at the healthcare stocks that are
getting
coming
nervous
under
about?
pressure, some of the tech names that.
Are you stuck? Tell me where you are and I'll see if I can help. We don't want nervous. We got pennant flag on Oracle. I'm going to go ahead and mute him. Can you hear me, M. Bartle? Okay. I went ahead and muted your mic. Your mic was on. QQQ just had a new high. We've got a double top on, we've got a breakout on SPY and SPX. We hit a pivot point area here on the SPY. Very hard resistance, both of them. SPY and SPX. If they break, we're going to do a double top. If not, you need to take profit here or scale out. Hello, YouTubers. Been a good day so far. I didn't leave the mop bucket out. Just in case you all are wondering, I own a janitorial business. I had a picture frame shop for a few years, and then I went to college and moved to Hawaii. And then I moved back to to play in a band, and I needed a job, so I bought a janitorial business so I could day trade stocks. I had to find a nighttime job. Then I quit the band and I became a full-time day trader. Cellmate tells all. I'll have to watch that, especially when you got the mob guy on. This ought to be a good interview right here.
If you're currently insured,
I'm gonna go get my hamburgers ready. So we got snake, breakout, pullback, higher, low, boom. Understand this W pattern? Some traders call it the W pattern, the professionals. I call it snake, breakout, pullback, boom. That's how I started noticing things. I got studying that W pattern. I said, what the hell? Why don't I recognize this pattern all the time? And then I got to watching it. And I said, it happens every single day. Snake, breakout, pullback, higher, low, boom. So if you had the patience to wait for the pullback, once you break out of the snake, then you got to see what kind of pattern forms. And in this case, we had a symmetrical 1, 2, 3, boom. If you have patience to recognize that, here's your high or low, just like that. That's called a symmetrical wedge. It's not a complete fallen wedge, but it's definitely a symmetrical flag. And that could keep you in a trade. Let's say you got stuck in a trade. You bought it premature, and then it dipped on you, and you start getting nervous. As long as you hold that double bottom, and especially if you get a higher low, you're in better shape. This is a Harmony setup right here. When you have an inside candle on, that's called a Harmony. And then you have the 1, 2, 3 breakout. And then it pulls back to the previous resistance, holds support, double top. So we're getting this is called squeeze. Then we'll go get my hamburgers made.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. We still got green on the screen. Let's start out with our roadmap. Coming up on today's show, we will shine a spotlight on the crypto sector as Crypto Week is underway in Washington, D.C. The disruptor today is CoreWeave after HSBC initiated coverage of the stock with a very bearish view. And for our 360 round, we'll dive into Pepsi's latest earnings and talk about the state of the consumer after June retail sales beat expectations. Speaking of those retail sales, those better than expected numbers, that helping to give momentum to the bulls today. Let's take a quick check on where markets are. Overall, you had a bunch of economic data coming in better than expected. You saw the NASDAQ
better than expected
today.
We're wrong again.
A win to the back of the bulls today. The S&P 500 grinding higher, up a little bit more than a quarter of a.
I mean, they were really wanting this market to be, they wanted to see them high inflation numbers. Wall Street did. They didn't get what they wanted. So today, are we excited to see what I'm having for lunch? Say yes. Who's excited to see what I'm having for lunch? God, Jim, that looks good. That looks real good, man. Angel says, nice. Nile. I mentioned Nile yesterday. Oh, jeez. Shares of Chinese listed stocks are trading higher in possible reaction to the U.S. easing chip export curbs. Nile's on that list too. Rob. I had to look for the news for that. So we got U.S. listed stocks include tech giant Alibaba Holding, Baba, PDD, JD, Baidu. And then you got the car industry with LI, Nile, and XPEV. So they all could be good swing trades right now. Jim Singh. Okay. When someone asks me to sing, I ain't gonna. I'll find a good one here.
Rodeo man, put my entry down. Got an old bullwhip and a new pair of spurs, and I'm gonna take your time. Oh, rodeo man. Oh, rodeo man. Down in the valley so low, hang your head over, hear the wind blow, hear the wind blow, love, hear the wind blow, hang your head over, hear the wind blow. Roses love sunshine, violets love dew, angels in heaven know I love you. If you don't love me, love who you please.
Always clean.
Put your
You're interrupting every clip. Hello, who's this?
Give my heart ease.
Emily, you picked me at a bad time, baby.
All right, no problem. But if possible, could you spare just a minute?
No, not really. I'm serenading my group. Unless you want me to sing to you.
Confirm once more if I can speak with you for just a minute.
Well, if you want me to sing to you first, I will. If you listen to a song,
I think we should discuss this some other time. Have a good day.
Oh, how rude is that?
My heart
Don't call up saying in the middle of a song, bitch.
supposed to be doing time. It's a goddamn vacation. What they having?
Well, how would you like an old-time prison funeral? Could you go for that? Just relax. He's gonna drop untamed in the Bronx event.
The Birmingham jail.
Right when I was getting ready to sing Down in the Valley, I get an interruption on my phone call and it ruined everything. Down in the valley so low. Today's lunch is hamburgers with mustard and cheese with stewed onions. And 3 tablespoons of cottage cheese. So now I'm going to pull back right around 4:36, Rob. They were a sneaky devil yesterday. The crowd's going wild here at the sports arena. Man, these hamburgers are really good with that onion. We're doing it for commercial on them in a second. Oh! Ooh. Well, there goes my white shirt. These puts just bounced 30 cents, but I didn't trade them. I'm gonna wait till I finish this hangers. Slash ES broke the top of the orb on the 30-minute. Them are really good hamburgers. I'm really impressed. We got a 1, 2, 3 bits, and we have a resistance right here. One, 2, 3. 1, 2, but 3. I eat healthy. Yeah, I do, Aringa. You want to come over and have dinner with me sometime? I'll make you something special. Okay, I've ate all the crumbs on my plate, so I'm going to go put this in the kitchen, get my water ready for my coffee, and then come back and do some trading. Slippers. Oh, I gotta put this in the mailbox. Today's the 17th. I still got till tomorrow. Yeah, but this is IRS. You got to keep up with your taxes. I'm gonna go throw these in the mail, and I'll be right back. I forgot about this. So I just had a thought. When trading stocks, you can't become complacent and expect the same trade to work over and over and over again. You got to put different. What's going through my mind right now that we're at all-time highs. What's going through my mind right now is chips have broke out of past resistance levels. So let's put up here, for example, NVIDIA. I'll do a couple of them. So I'm going to go to the daily time frame. First I'll go to the weekly. Damn. Toss is working fast today. So you see anything unusual about this last recovery on NVIDIA? In 3 years, we've not seen a recovery like that. This thing was at $10.81. Now it's at $173. So it's up over 1,700%. Last time we hit $3 trillion market cap, these fat cats called a pullback. They said it was way overbought. And they were throwing up a fit. Now we're at $4 trillion. I don't hear them throwing the same fit that they threw a year ago. Half a year ago. I don't hear the same fit going on. But the fit I'm hearing now is recession and depression and has nothing to do with Wall Street. Has everything to do with Orange Man. So they let politics interfere with their decision making, and it caused a lot of fat cats to sit on the sideline. Now, I've been very bullish in this market ever since Trump was elected because he's a business president. Very seldom do we ever get a business-minded president from the private sector. Usually, whoever president, they've been in politics nearly most of their life. Reagan was an exception. And you remember how we had a great run during the Reagan years. But he was totally different than what Trump is. We'll have a triple top break. So if I was to think that we're going to get a pullback on this thing, I'd put up the Fibonacci's. And I'd use my moving averages as support levels, but I'd want to match up my Fibonacci's. Always clean. Johnny, make sure you follow this line here. We're going to find out where it's coming from. Put it in the investigative team. Go ahead and transfer that call over there. We're going to catch these pieces of shit sooner or later. Tonight, line up about 3 hookers. Have them come over to my place. I don't know, I'm gonna go to the daily. Yeah, I'm going to say wait for the 9. In fact, I need to put that on here. Nine EMA. It's very unprofessional, James. Need to make a poll. Is Jim professional? Or is he unprofessional? American, am I very professional? Yeah, she was a secret admirer, all right. I wish I knew who she was. I know I met this one girl that was all over me one night at the bar. And I think it might have been her. Coins pulled back to the 200. Down in the valley, I thought I put an alert on the SPX. Yep, there it is down here. God. $15-minute. We got a head and shoulders on the 15-minute right now on the SPX. So we might pull back here. Who's with me? 3 white soldiers on the 15-minute. Back to the orb. Okay, Jim. Let's get serum. We're right here, man. I'm going to take a risk. The 62.75's at $3 if I can get it. Maybe get in now and buy a couple and then add on at the 3. These are the puts. There it is, $3. Give it to me. I'm gonna get lucky here. SPX Lotto puts July 17th. Strike 62.75 at $3.10. Blue Valley Saloon. Hang your head over, let the wind blow. Tweedly-dee-die. What was it? I've never been born or died when I was young. I never would have seen your sparkling blue eyes or heard your little lying tongue. All the good times have passed and gone. All the good times are over. All the good times have passed and gone. Little darling, don't you weep no more. down to 150.
See that westbound passenger train coming round the bend. It's taking me away from this lonesome old town to never return again.
All good times have passed and gone. All good times are over. All good times have passed and gone. Little darling, don't you weep no more. Jimmy Martin. That was Jimmy Howard. Okay, I added on here. A very strong breakout. Not what I wanted to see. Oh boy. Extend this to the right. See if we can drop below that pivot point. Wow, I might have to have a different attitude. Let's see what the SPY says. It definitely broke out. Dirty. SPY had 627.24 for some reason. Oh, that's why. Double top. So we'll see what happens here. This would be a hard resistance to break. 627.24. Could have been head and shoulders on the 5 minute. 6300s. RITM just hit 1203. Sure enough. Oh, uh-oh. Come on, baby. Let's have some good drama. I get to wondering if the people on CNBC and is lying, actually trying to lie to you, make you feel like trying to trick the retail trader by saying that they're very bearish. There's 220. Sometimes I wonder about that. I got 262 average. Then I'll go get my coffee. It's been fermenting for 20 minutes. Yeah, it broke the resistance. We want to see if it can maintain it now. 1202. If we can come back and curl down and then hit the 202 and bounce back up and break 205, you might get that other number you were looking for. $3. NVIDIA, new high. AMD hit the 200 for the second time. Yeah. Be nice to get down here to the 50. Looks like it's going to rain again. We've had rain about every single day this year, and it's just very unusual. Hear thunder? Got some sprinkle out there. Not complete wet yet. I need a big old drop. Okay. We're at support. Let's see if we can break it. Three black crows. The 6,300 strike for the calls. Let's see what this helps. Do a straddle. We're going higher. 6,300s from 450 to 505. I mean to $3. 250 to $3. The straddle's 450 to 5.
Act, in addition to having Bitcoin as treasury-backed companies holding Bitcoin, a company is just going live today, and Windtree Therapeutics, and they're holding BNB in their treasury. So they're looking at alternative crypto structures that they can buy in their treasury. So it's not just Bitcoin.
And then let's go back to the legislation that is making its way through policymakers this week. What's the most important piece of it? Is it the Genius Act? Is it around the stablecoin? Or is it the other piece, CB, I forget this. Yes, I have to learn all the acronyms now. Which is the most important piece of legislation?
Well, I think they're all important because it's going to define how this space is run going forward.
Cool.
So the
we got $1
Clarity
billion
Act
of
is going to
Ethereum.
define who controls this and who is the regulatory body, and that's important. And then the
I don't know about that.
CBDC Surveillance Act is going to make sure that we're not going to be buying this at a federal level to the point where we can manage and see what people are doing, something like what China does, where you can control people at a federal level. And then the Genius Act is to enable the world to have Bitcoin tracked to dollars, so stablecoin. Basically, that's going to enable people to do transactions around the world with no disintermediation. They're not going to have to pay banks from place to place and point to point. And so all of these are going to ultimately build this space, and they're all important. But the most important thing is that the conversation's happening and the regulation is going forward.
All right, the conversation is certainly happening, whether we're talking about here at the New York Stock Exchange. And I mean, look, that Circle IPO this year was a big deal, especially as it relates to the sector. Thank you, Barbara.
Thank you.
We will leave our conversation there for today. That's Barbara Goodstein, Managing Partner and New York Chair of R360. Thank you so much for joining us today on Trading 360. Download the free Schwab Network app. It's available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. I'm Diane King Hall. Stay with us. You've got Fast Market with Tom White and Kevin Hayes up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had a...
Dad, I got a question for you. I miss Grandpa sleeping with me at night.
All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Accelerate your market knowledge
and shift your perspective.
/ES 633-375. Tweezer top
of trading insights.
I'm Tom White.
I'm Kevin Hayes.
On the
Catch me
hour.
on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
If I only held
Good afternoon, traders, and welcome to Fast Market here on the Schwab Network. I'm Tom White. Got a great lineup for you today. We're going to talk markets, which are near session highs, and then we're going to discuss individual companies. And with some option strategies, we're going to cover Netflix, which is near all-time.
stock, I'd be a little richer today. I'd be able to buy my girlfriend a car. If I ever hold that stock, I might give my girlfriend a pair of socks. All I had to do was hold that stock. Jimmy's wishing for a pullback. He might sit here and have a heart attack. I got in at the very low. I slowed it way too early. Now I'd be up about 300%. All I had to do was hold that stock and let it run. Hey baby, let's have some fun. Now my calls are at $3.90 from $2.50, and my puts are down. My straddle is up $1.05. Oh man, can I stay alive? Should I sell my calls right here? Hey baby, they just hit 4. Do I want a little more? I think I'm gonna sell. I got out at 390. 6,300 strike. Hey baby, let's go have some steak tonight. I'm going to hold my puts, give it a little more time. I hope it drops below this white line. I mix rock and roll together. Let's trade a little better. Oh yeah. Booyah, booyah, booyah. Should I add on? I'll add my puts if we break below this line. And I'll get rid of the calls because I'm out of them. Market's very bullish. When I was a child, my family would travel Western Kentucky, where my parents were born. It's a backward road, often remembered so many times that my memories were gone. Take me back to Dad, still going. Meta reversing.
Some of the commentary that he made calling for a regime change from the Fed, and he said the hesitant.
I'm going to really load up on these when it's ready.
Kentucky, where my parents were born. When I was a child, my family would travel down to western Kentucky, where my parents were born. And there's a backwards old town that's often remembered so many times that my memories are worn. And Daddy wants to take me back to Muhlenberg County, down by the Green River, where paradise lay. Well, I'm sorry, my son, but it's too late for asking.
Seattle's coal train is hauled it away. We need some drama big time here. Drama. I want to see 6288. Average is at 26. I have 24 of these suckers. So 24 times. Okay. Well, got my nervousness out of me. Really should have loaded a lot of them up there at 150. At least 10 more, 12 more. We broke support, so that's where I piled in at. Jesus Christ. Always clean. This is Jim. May I help you?
Hello?
Yeah, what's going on? Hello? They don't want to talk to me no more. It's that James Howard. Don't talk to him. BMNW, that's triple bottom. I'm still in my puts. I'm holding, I've been in for a while. The 2 minute, we're at the 21 on the /ES, and we're at the 50 on the 1 minute. And the 9 on the 5. And a tweezer top on the 1 hour. A 30 minute. $24 times 25 is what? 24 times 25 bucks. Oh, God, 205. I'm even. I'm even. There it is, 63. Come on, fake news. Come out with a Trump tweet that ain't true. It's a major support. I either sell now while I'm saved grace, or I just hold on and take the big risk. What should I do? The candle right there is $25, $30, $25, almost 40 really. It went to 215. This is a 63. You know how I am about the 63. Randy, should I sell? Rob? We broke the 63. I'm going to sell this stock. You know what it's like being in the stock and being down almost $900 and then coming up and being up 600? You know what that feeling's like? That's a $1,500 swing in that real pullback right there. I know if I sell it, I'm going to really shit my pants in front of everybody. And I'll show you the stain when I get done. I'm going to give myself a B plus for persistence. Oh, boy, that was toughy. Big is the best. Size doesn't matter. Pretty close to my support. Well, I saved my butt on that one. Whoa. NVIDIA just had a pop. Jerome Powell leaves, this market will fly. Whenever he does leave, my time of trading, he's been the worst. The worst. And I thought smelling Yellen was bad. But I knew what she was about. And she made tens of millions of dollars by Fed chair. Her speeches alone were like 500,000 a piece. Janet Yellen made millions in corporate speeches. We'll be right back. I'm just taking my time. And the video is really on fire. I'd say 200 would be the next target. 175, and then 200. $175 and then 200.
That unique differentiation for them makes them kind of unique and a different look at it. And am I wrong there? Is that what they have that's unique? Because the numbers, revenue growth 61%, DAU increase 31%. I mean, this company is still growing. Now, it jumped, right, when it opened for trading and ran quickly to 230. It's come back a little down to earth, but it's still not cheap, but the growth numbers are big there, Megan.
Yeah, I think that niche that you described in terms of communities of users who are actively searching for specific topics and actively engaging with topics that they're interested in, that's an advertiser's dream. I would say it's most comparable to Pinterest, but it's text-based, right? And so this is even easier to target if you're thinking about programmatic targeting and the way that the company can utilize AI to reach users that are very interested in, say, hiking. And let's say you're selling hiking boots. Man, how great would that be to advertise with Reddit where they can post you right in that thread? And so I think that is the value proposition. And now they're improving their technology that's making it a bit more compelling to advertisers. I know that they've really been working on insights. They've really been working on conversions. And they also created a tool to allow these small and medium-sized businesses kind of unroll their meta ads and directly apply them onto Reddit. So just kind of taking a piece and making it easier to copy campaigns that may be going on elsewhere for larger platforms. And so little tools like this make a big difference, and we're certainly seeing that show up on our data. And then on the user side, we also look for that user engagement. And I think that there's one more chart that we brought for you guys today that shows the year-over-year change in visits to the actual Reddit platform. And you can see that here, and that's still growing. That's up about 6% year-over-year, not near as explosive as that ad growth that I mentioned prior, but it's still solid growth and solid momentum, at least on our front. Perhaps a bit of a slowdown there, but I'll also note that this is really focused on US visits, and international growth is a key component of Reddit's growth recently. I think international growth was up 83% year over year. And so a lot of that also is leveraged by AI thanks to translation and being able to expand a lot of these communities and auto translate into different languages kind of opens up Reddit as a platform. And so it's nice for us to see still strong engagement metrics for the platform, but also explosive ad metrics for the platform. So this is one that we're watching pretty closely. Considering just this near term, a bit of a pullback that we see, we think that this could be a really compelling earnings setup.
Megan, when you look at this, a lot of times for advertisers, and that's how they make a majority of their money, is about scale, right? They last quarter, daily active uniques is what they call their users, grew 31% annually to 108 million only. So that's a concern for me when you're trying to grow this. I saw that some of your charts saw explosive growth in Reddit as far as the use, but at the same time, isn't this about scale where they need to really ramp up those users to make it monetizable at this point, even though their average revenue per user, that was up 23% year over year. Is that what you guys are looking at, that they're still in the infancy stage of their scaling out, right?
Yeah, this is such a smaller player versus whenever you're considering a name like a Meta or even a name like a TikTok or Google, right? That scale is certainly different. You're on a completely different level here. But I think that Reddit is trying to do better in terms of leveraging technology, leveraging AI to start recommending content for people, so that instead of using a Google search hack with Reddit to find information about a product that you want to buy, you're logging into Reddit and you're staying engaged on Reddit and you're exploring other conversations and other threads. And so I think that that's the hurdle that the company is currently trying to get over. We'll certainly be watching to see if those engagement metrics on the platform level continue to improve or if they stall out. But at least for us right now, I think that the biggest disconnect that we're seeing is that we're seeing really, really strong advertising engagement metrics, and we don't necessarily know that the market is expecting those kind of numbers. And so this could be a nice bullish setup for traders that want to play that surprise element, especially ahead of earnings.
Yeah, not too many names in social media, down 38% from recent highs. So maybe the bar is low going into that report at the end of the month. All right, great stuff. As always, Megan, appreciate it.
Thanks, guys.
All right, that's Megan Brantley, VP of Research at Likefolio, breaking down the data. Well, you heard her, Kevin. Pretty positive data. The market hasn't liked it for the last few months here, but how do you want to look at this one from an example trade?
I want to give myself time, Tom, and I want to build a bullish position in this name. Do I know I'm right? No, I don't. I have no idea. But where the stock is, the numbers that they're putting up, if you want to build a bullish position, this is something you could do. I went out to the August 15th expiration, so 29 days, 4 weeks from tomorrow, Tom, and I'm looking at the unbalanced butterfly, which it's a bullish direction. You need the stock to go up for this to be profitable. If you don't think it can, this is not the trade for you. So, buying the August 15th 150 call, selling 2 of the August 15th 175 call, and then buying 1 of the August 15th 180 call. So a $25 long call vertical financed by a short $5 call vertical, Tom, gives you about just under 19 deltas long. You are long a little bit of Vega, but that'll change if it gets inside your strikes. You are paying theta. Again, that'll change if it gets inside the strikes. But
right hit my alert.
It was trading about 580. Now it's trading about 550. So it's trading a little bit less. This is one that gives you a full month for Reddit to move up towards 175.
All right, yeah, let's break this one down.
Only at
August
190.
15th monthly options. So you do have a month in this position, this example trade to the for upside exposure. Buying 1 of the 150 strike calls, selling 2 of the 175 strike calls, buying 1 of the 180 strike calls. So you can see there, it's an unbalanced call butterfly as opposed to the last one we looked at, Netflix, which is equidistant. And because of that, you're going to pay a debit for this. It's a little bit higher, but you've got full upside exposure on this example. If you pay that, we've got 580 debit. As Kevin mentioned, it's a little bit lower. The stock has pulled back here today over 1%. But the debit you pay is going to be your risk. So if you pay $550, it's $550. If you pay $580, like we've got here, $580. If you do pay $580, that takes your break even up to $155.80 over the next 29 days. So you need a move. That's over $12 above the current share price in there to get above that break even. But you can see all the upside exposure. Now, your profitability goes down at or near that 180 strike, but it's still nearly a triple as far as profitability if it does go up to 180. Got that earnings event on the 31st also to contend with. That might be some event risk, but the bar is low in this one, giving yourself some upside exposure here. But like I said, you do need that move to the upside. It needs a move, so expecting a rebound here, but aligns with what Likefolio's data is kind of saying at this point. All right, let's take another quick break here. When we come back, we're going to talk more earnings. We're going to talk American Express. This stock is just below its all-time highs. How well is the affluent consumer doing? We're going to talk American Express when we come back.
They're doing great. All you have to do is ask me. Use his mind. Is there anything people would like me to do different as a moderator? Any suggestions? Sing more? Circle just broke out. 2 a head and shoulders. Hey, there's my name, step name, Perry. Well, I wish you would shut this thing off. Franchise, could I have been a rock star? Would you come to my concert?
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses,
Yeah, I guess
and
I
more.
am.
All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network.
Here's a rare picture I want to show everybody when I graduated college.
Look at the markets here, which are near session highs as we speak. The benchmark S&P 500 up about 0.4%. Dow Industrials up 129 points or 0.3%. The Nasdaq 100 up over 0.75%, and the Russell 2000 up just over 1% in today's session. So we're starting to see some more momentum to the upside. The S&P 500 only 0.2% off its all-time highs, with the Nasdaq at its all-time highs. You can see here from the risk profile. Plenty of green on that screen, some red dots there, but momentum to the upside after positive data and earnings. All right, let's get into another stock that reports tomorrow morning, and that's American Express. This stock is up about 5%.
My parents, yes, and they're all my sister's the big one on the left.
Kevin, when you look at this name,
the rest of them are my nephews.
It's for the affluent, maybe consumer at this point, but they've got a loan side of their business also that might get overlooked. But with the economy doing pretty well, everybody employed at this point, full employment on the unemployment numbers. What's your take here on American Express going into this report? Because it feels like the bar is pretty high on this one.
Yeah, it does. That's everything you read. Everyone's concerned. Make no mistake, it's priced for perfection right now, even though it's down slightly off its high. It's kind of a similar chart to Netflix, right? It's not overbought. It's right in the middle in terms of overbought. So, but their numbers are growing, right? They're growing members. Their credit numbers are all pristine. They make money off the balances, not like MasterCard and Visa. They hold balances, so they're a different profit metric than those. Remember, they service the affluent, a little more affluent consumer, Tom. But here's my worry. We all acknowledge the recovery in retail sales in June. But what about April and May? Remember, it's a 3-week quarter. So we know that the Bank of America data showed April and May were lower. We know that retail sales rebounded from down last month. So if 2 of the 3 months were lower, is this something that you should be trading in a bullish tone? I don't know, Tom. It's a little dicey here. I get they could guide for a much stronger consumer in the future, but there's a chance with 2 of the 3 months kind of lower numbers for the consumer that it could hit American Express, Tom.
Yep, option market priced in about a plus or minus just over $11 move either way in the shares. So we're going to look at this a couple different ways. We've got 2 separate example trades here. First one is relatively neutral, Kevin, to take advantage of the higher implied volatility, the short time frame to expiration. So using that July 18th monthly options that expire in just 1 day, we're going to sell a short iron condor here. We sometimes call this a short iron butterfly because we're selling the same strike on this one. So in that July 18th, we're going to sell the 312.5 strike call and the 312.5 strike put, right? There's your short straddle, selling the call and the put on that 312.5 strike. That's basically at the money. And then against it, because we want to stay risk defined because anything can happen for earnings, we're going to buy the 297.5 strike put and buy the 327.5 strike call. So a $15 wide short iron butterfly. You're going to collect roughly, we've got $920 credit on this trade. That's what you can make on it, about $920 if it pins at or near that 312.5 strike. But it also takes your break evens on the downside to 303.30 and on the upside all the way up to 321.70 on this one. You've got about $580 in risk on that, and that's below 297.5 or above the 327.5. So Kevin, short iron butterfly here, collecting a pretty hefty credit, and you're either going to be right or wrong on this on tomorrow's opening, but you want just muted or consolidating moves here in this stock.
Yeah, you're playing for a lack of movement in this name, and you're selling this $15 call vertical, $15 put vertical for about $9.20. You're hoping to buy it back for as little as possible, Tom. It won't be zero. You're not going to make all this, but if it stays in this range, it could lose premium pretty quickly because you got 1 day. It's a tomorrow expiration. So yeah, remember, if you think it might move, this is not the trade for you. This is playing for little or no movement, Tom. But remember, you can move the strikes. If you think bullish or bearish, you can slide that straddle either up or down. But right here, you're playing for very little movement.
Yep, and because it's a butterfly and the price will move quickly because tomorrow's expiration. So if it opens up between those that 303.30 and 321.70 to the upside.
Oh, I was wondering what the heck that meant.
This is one of those trades because you're short the call and the put at the money. You're going to have assignment risk, so you're going to most likely want to close this when the market's open tomorrow. And the idea here is if it's between that range and it contracts in price, you buy it for less than you collected that 920 credit that you collected on. Now let's look at a different trade here, Kevin. If you want some inexpensive or less expensive way to play some upside here, but maybe playing for about that 1 standard deviation move, I looked at another strategy here, and this is the bullish example, right? You can always do a bearish example using the same type of strategy, but doing the put side. But this is a call calendar, 1 week wide, going out to the July 25th weekly options that expire in 8 days. Buy the 325 strike call, and then in the near term, July 18th options that expire tomorrow at the close, sell that same 325 strike call. So a bullish 1 week wide call calendar. You're paying roughly about a 95-cent debit for it. So there's your risk, $95 per spread. But you've got a nice wide range here on this one, Kevin. You're shooting for 325 to the upside, but maybe about 315 up to about 335. You could potentially be profitable on a trade like this. So it might have a range, but you definitely want it at or near that 325 strike, right?
Yeah, exactly. You're buying the July 25. You're targeting the 325 strike, which is pretty close to being in line with the expected move, Tom. This is one collecting a fair amount of theta. It's a bullish trade, so you want the stock to go up, but they're very forgiving. You want it to go up towards 325. You don't want it to go to 335 or 340, Tom.
You don't want that big, massive 2 standard deviation move to the upside, and you definitely don't want it to go down on a trade like this. But like I mentioned, if you're more bearish on this name where you think it's going to slide maybe 1 standard deviation, you go down to that 295 or 300 strike on the put side. It's about the strategy because you're buying a lower implied volatility level in those July 25th 325 strike calls, selling a higher implied volatility in the near-term options. You do have some assignment risk on that short 325 strike that expires at tomorrow's close. Also keep that in mind. All right, that's going to wrap it up for us today here on Fast Market, but stick around right here on the Schwab Network. Next Gen Investing's coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Jenny Horn.
Oh, Jenny.
Woo! Always, and we have a lot to look at today, especially as we are firmly in the green across the 4 major averages. And today, something special for you all, because we've talked about the divergence, the rotation away from into maybe some of these smaller mid-cap sized names. Russell's outperformed. The NASDAQ has been somewhat of the weak spot today. Both of those indices, though, Alex, are higher, leading the 4. So It's been a rare day of strength in specifically the NASDAQ as well as the Russell.
Yeah, it's a good point. Let's call it about 70% of the S&P higher and about 70% of the NASDAQ higher. So it's widespread, broad-based equity strength today. Now, the moves are subtle. If you were to look at a heat map, there's not going to be a lot of really bright colors on the screen. But what you're going to see is a lot of colors on the screen in the shade of green. And that's what you see here. Obviously, it helps that NVIDIA, Microsoft, Oracle, Broadcom are green on the day, and obviously some of those brighter colors are obviously smaller boxes, so not moving the index much. All in all, a good second to last day of the week. You had strong earnings out of TSMC, which we'll talk about. You had strong retail sales, way strong retail sales relative to what they had been, and jobless claims inching lower. So macro front, strong consumer relatively. Inflation, not as bad as expected, and jobless claims, not as bad as expected. Painting a pretty nice picture here in the middle of July.
And it really is for a month that already historically has closed out, of the last 10 years on a month-to-date basis, all 10 of those years have been higher for the month of July. So it's been a phenomenal performance so far. It doesn't look like it's right now seeing anything that could really get in the way of this momentum. Obviously, headlines will come as we see them, and we will be watching.
Nothing will get in this rally unless we have fake news like yesterday with the firing of Jay Powell, or fake news coming up with something stupid, or you idiots on CNBC tariff this, tariff that, inflation this, inflation that, and I don't see any at all except my frickin' hamburger. You hear me? You people have been wrong. Now, your squawk not as bad as CNBC. But with this new chick you got on here, I question your accuracy anymore. I want Caroline back.
We'll talk about it sort of in the middle of this segment. The story's very clear. They're tied together. But talk to me about why other than the fact that Tesla rivals these names, what's sticking out today about Tesla? Because I see a name that's down 50 cents. Might as well call that unchanged for Tesla. It's about as quiet as I've ever seen it.
I know in Tesla, I do always feel like is worth noting to see like the ways in which it really doesn't trade at all in any correlation to like the headlines we see out of the broader auto space. I mean today, like even Rivian's catching a
Tesla doesn't have a minivan. Who gives a shit?
So pretty much directionless.
Who wrote this?
We did see the company launch its own robo-taxi service back on June 22nd. Shares have fallen 9 times and risen 8 times as we entered this morning's trading session. So that just goes to show, very directionless. The average daily move has been almost 3% over that span, but shares have stood at around 322
Benzinga, of course.
before the robo-taxi launch. So investors right now, I think, are waiting to hear from Musk. Tesla does report its earnings on July 23rd. Along with earnings, any update
July 23rd, Tesla earnings.
On the robo-taxi service, including, I think, primarily how fast it can expand and how safety monitors will be allowed to continue to leave within the vehicle. We'll also be looking for that update on the lower price Tesla model that was promised for later this year. So no one has seen the car yet. Investors are, I think, hoping that it could help arrest some of these sales declines. All that to be said, though, a name that for all of the headlines, all of the political blowback from Elon Musk and all of the tensions we've seen him somewhat cause between him and, of course, the president, Donald Trump, it is amazing to me that you could look over the last 2 weeks or so and say we've been pretty much directionless.
Yeah, this is something I can't believe I didn't see this last year, but I saw a Benzinga article this morning. It's sort of the ancillary fallout of autonomous driving.
I bet you Buffett regrets selling that.
Warren Buffett being asked about what's the
BYD.
impact of fully autonomous driving on the insurance business, for example. And he was like, well, let's just say, this is Warren Buffett talking. He's like, let's say that accidents gets reduced by 50%.
He said Buffett.
That's going to be great for people in terms of safety and driving, but that's not good for insurance companies who are charging premiums based off of accidents being a greater risk. And so there's going to be fallout down the line in so many different ways from this type of technology and these type of things when they ultimately get rolled out and launched. And this is what you're going to have to think about as an investor. So I know it doesn't really tie in totally to what we're talking, but it stuck out to me, and I thought it was an interesting way to kind of think and start thinking about things when we're thinking about when things roll out. Yeah, that's great, but what's the impact elsewhere? The same way, yeah, Uber was a great service, but look what it did to taxis. The same way is going to be, what's the fallout for insurance companies? And not that anybody's going to have, tears lost for insurance companies, but just things to think about.
No, it is, and it's also like a major sector.
See, this when Uber started doing its business, I remember the headlines were just constantly: woman gets raped by Uber driver. Woman gets raped by Uber driver. Woman gets raped by Uber driver. When they first started. They were totally against it. Hillary said that, what'd she say? She said when she was running, I forgot what I even call that now, the economy. I used to be real good about this. What do they call it? Freelancing. Like YouTubers, and that was before YouTube, but what do they call that? Gig economy. That she did not support the gig economy when she ran for president. And I was going, what? Me? I've been doing gig economy ever since I was selling weed in high school. Gig economy, when you try to go out on your own and make a business of your own, instead of be dependent upon factory work or the government paychecks, the welfare system. Go out and do something with your life. And she was totally against it. Pizza delivery guys, working on commission. Me. And I've had 5 or 6 people approach me and say, Jim, will you join my Discord and we'll pay you? And I said, nope. I'm going to do this for free. And finally I went in one room and we charged a little bit, but I never benefited from it. I said, keep it. I don't want it. I don't need it. I don't need to charge. Sometimes I wish I would have, but I probably would have never had a following. Because now all these kids are out there charging in their Discord and stuff.
Coming together to try to, basically directly compete with the robo-taxi offering of somebody like Tesla or even Waymo, depending on the market. But makes a lot of sense. It's going to be whoever can do this fastest and whoever can do it quickest and most efficiently, and also in a way that's capital efficient too. Because to your point, it's expensive right now to make these cars, so they're going to want to be able to do this in a way that isn't more expensive than just paying.
That is true, and I will think this will have some growing pains, as we did see in the entirety of the EV space.
This circle, man, I'll tell you what, that was a good trade today.
We didn't see it turn a profit for year after year. Then finally we saw consistent profits, and that's when it joined the S&P 500. So disruptive technology oftentimes can take a while, but I do think hugely encouraging, at least for Lucid's case, that it's up 40% plus on the session, giving back some of that in real time, but still, hey, a 40% move for a $3 stock. We're in need of some of this upside. Uber today, next name, which is not really trading on necessarily its own specific news. I'd definitely say it's tied more closely to everything involving Lucid. But actually, what's amazing about Uber is right now we are pacing for the longest losing streak since May of 2022. So now down 7 consecutive days. I mean, now retreating about 7.5% from highs. So we were at all-time highs in this name. We're still off lows by 65% roughly, but and again, we're still up 49% almost on the year. It's just been kind of interesting to see some of the reversal and all that strength that has propped Uber up and put it as an outperformer on the year for the majority of 2025.
Yeah, I hadn't realized the streak that's building in the wrong direction for Uber. It's been a really nice winter, though. It's probably due for a little bit of a cool-off period. It had one back in May as well that lasted really the duration of May and June. Had that quick recovery early in this month. But one has to wonder, is this stock becoming pretty fully priced? Again, this is now consecutive, what I would argue, pretty positive stories. One with the Baidu news, and now this one with the Lucid partnership and Neuro partnership. Yet wasn't enough to boost the stock shares. $90 a share, though. If you would have told investors that's where Uber would be trading at the very onset of this year, I think they'd be over the moon with that.
That is true. So yeah, pullback still at healthy levels, still actually above its 50 and 200-day moving averages, although getting dangerously close to that 50-day moving average as far as its recent pullback. Last name today fits our auto conversation pretty nicely. That is CarMax, although I will say mostly the most unique amongst the group, but still a 0.7% move to the upside today. Benchmark initiated coverage with a buy and a $75 price target, saying the used car company is poised for a rebound. And I thought this was also pretty well illustrated by last week. Morgan Stanley did issue a note that highlighted inflated used car prices could actually be a boon for these dealers. We saw data from the Manheim Used Vehicle Index that showed prices jumped nearly 2% month over month in June and about 6% year over year. So the huge jump in prices related to the effect of tariffs on sales and tight supply for both new and used cars, in their opinion, bodes well for the entirety of the used car space. So there's also this pre-buying notion where we could see some of these cars bought ahead of the removal of those EV tax credits in September. But all things considered, Benchmark does see a really compelling story. They also said a setup of
big drop on Circle
and self-help levers. So I liked that alliteration they used. So analysts overall do see this as a benefit of at least the pricing environment of the auto landscape.
So not necessarily a knock on CarMax, but I'm going to tie this in with Carvana, which has certainly seen different performance and we'll set Tesla off to the side, but you mentioned Rivian, you mentioned Lucid earlier about how, hey, these companies aren't making money and, it's a risky investment perhaps because of that reason. But I would argue also, what are you hoping that those companies become one day? You'd hope that they become Ford or GM. In terms of scale, efficiency, profitability, those haven't been great investments over the years. The same could be said in my mind for Carvana. What are you hoping Carvana at one point achieves? The scale of a company like CarMax. But look at it, it's not a revolutionary business. It's buy cars for slightly less than you sell them for and do it a lot of times. It's a very consistent business, especially in stable price environments and an economy that allows for people to upgrade their vehicles.
If it wasn't for Biden's inflation, Carvana would be worthless. They made a godly amount of money on used cars during COVID. New cars went up 15 to 20 grand. You had the strikes. They have to pay them union workers for their big $120,000 salaries a year. Did you notice that? Everybody went on strike once Biden got in office. Why? Because of inflation was up to 25 to 30 to 40% overnight. Man, look at the drop on this sucker. I didn't see that coming. I should have. don't know if I can handle looking at that anymore. I could have got some of that, baby. Yeah. Well. I want the 250 cheaper. 230.96, brother. Oh no, let's raise the alert up here. 232.40.50.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate
I wish I'd have held them
ready to
babies.
tackle your trading questions, no matter how complex.
I'd been
Plus, get 24/7 live
more than
access
$6,000.
support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Let me see here.
Trading the trending names.
These things are
every
expensive
day.
right now.
I'm Tom White, host of Fast Market. Ready for you, ready to go at 12 p.m.
These are the ones I was in
Eastern on the
earlier.
Schwab Network.
So if we drop, let's see where.
Welcome back to Next Gen Investing. It's now time to take a look at two names with earnings still ahead this week, Netflix as well as American Express. So both names that definitely have a consumer focus. One definitely takes a bit more of my money than the other.
The
but we'll start off
250
with Netflix,
strikes.
which has been a really nice performer on the year. For that reason, actually, I think there's a bit of concern as we go into a relatively high bar for their earnings print. Joining us now
Goodbye,
is our
Jimmy.
chart master, Rick Ducat, to discuss Netflix. So,
I love your breast.
Rick, walk us through the latest and greatest, because Netflix, I know the argument's being made, it's gotten expensive.
That's one of the toughest things is assessing when a potential drop might come after a lengthy rise in valuations. But that's also one of the most difficult situations to be in if you're wrong too. Never try to catch a falling knife.
Okay, I think I just triggered my
Step
alert.
in front of the speeding train to the upside, I guess, but it's really hard to
Yep,
tell.
yep,
Nevertheless,
yep,
so if we were to look at Netflix here,
Let's go.
we can see that this stock has been traveling upward in a channel type shape between our two
where are you?
blue dashed lines there for the most part. Just recently, though, it started to break down. We hit our highs around 1341 or so. That's our peak that we hit on the intraday basis there.
Okay, get ready.
But from there, we
250.
have traveled below that trend line of our blue channel. Now, you could make the argument more that we have a white downtrend in play there. We are starting to give up our yellow 21-day exponential moving average as well. That comes in near 1261. Looking at the RSI as well, our measure of momentum, a bit of a mixed picture there, because on one hand, during our channel rise into those highs, we saw some bearish divergence. RSI was trending downward and making worse closes, while price was making higher closes, suggesting the pace of the gains was slowing down. And in this case, we had a bit of a fake out. We had a break above that red trend line, a resurgence back into that overbought area, and then more of a breakdown here. Now RSI is near that 50 midline. As we head into earnings, pretty common for momentum to drop off though. So I'm not sure I would make too terribly much of that, but still holding on to a key support point right now. Major catalyst coming up very soon.
Okay, so with that being said, as we typically look at names on the day of earnings, it's oftentimes we can see momentum start to wane. We can see like correlation also start to lose some of its focus. So all that being said, when we don't have a ton of indication on the session to go off of, how do you utilize the charts and the technicals?
Right, so you can try to do several things when you're looking at downside levels for potential support before you have kind of an uncertain event like this here that could change things. So one way to do it, look at our technical studies here, look at our volume profile study, for example, our blue bar graph on the right side of the screen that shows the heavy trading areas. You can see there's a couple of standout spikes in activity near about 1220 or so and about 1195, 1190. So those are heavy trading areas that the bulls may look to step in at and make some plays at here. You can also see that that's around where our orange 63-day exponential moving averages are longer term EMA there. Support during uptrends, resistance during downtrends, that would be the thinking. And in this case, it does happen to line up with that volume node near about 1190. So that would be one notable confluence to be on the lookout for. To the upside, though, one area that comes to mind would be 1445 based on our +1 standard deviation channel. We take our linear regression line there, our blue line, 1 standard 5 area. Certainly not a brick wall that price will stop at, just one potential way traders can try to gauge where they might find resistance.
Okay, so a lot to I think about here, especially as we are up about 1.4% on the session into this print. Appreciate that, Rick. And now as we do look to trade
320.
Netflix, Alex, for example purposes, as always. The name's expensive. We've been on a pretty nice run, but all that to be said, I mean, we're moving to the upside today. Options markets are implying still volatility. I believe you found the stat of the average move is roughly 9% or something ridiculous.
9.25%
That's
going
ridiculous.
back to 2014. Has not been up 4 quarters in a row post earnings. It's on a streak of 3. It's done that 3 separate times on that time
for a
frame.
gyro.
But interestingly enough, the current one-day implied move is around 7.5%. Last time around, it only moved 1.5%. Does feel like the bar is pretty high, but a pretty high confidence that they're going to at least post pretty good numbers. So perhaps that sets up for something that's actually a little bit underwhelming. The market certainly seems so. If it normally moves 9.25% or has the potential to, and it's only being priced to move 7.5%, that's certainly undercutting it this time around. So I looked at a neutral strategy, short iron condor spread, expiring tomorrow. $200 difference between the 2 short strikes. That's how expensive this stock's gotten. Looking at the 1150 short put, the 1350 short call, and then $5 wide wings. $1.50 credit would be 30 cents on the dollar of risk, Jenny. Chance to make $150 on $350 in risk. Your break-evens would be $11.48.50 and $13.51.50. So now that the numbers out of the way, it's a neutral strategy. Looking for something inside the expected move. You got 1 day to expiration. If this stock
could get out here at 320, 330.
In front of whatever the next numbers were, in this 1,200, this 100-point range of 1,200, this one has a chance to be a really nice winner.
Okay, yes, we're looking for hopefully some more of the same here for Netflix shares. But now our next name today is American Express. And David also gives a really great read oftentimes on Forex as well as cross-border travel volumes. And there's a lot of good reads, I think, from the more affluent consumer that can be gained from American Express's earnings. So I always watch this one very closely. But Rick, walk us through the chart.
Right, so this one had kind of this V-shaped recovery that we've seen in so many stocks across the board here. In this case, though, we have once again been halted at the previous high
arm's a little sore here. I got
there from early in
you got pulled
this
muscle
year
in
in
there or
January.
something.
That was the high point near 326 or so. Our second attempt at breaking those highs about in early February failed. That was then paving the way for that downside price activity there, eventually culminating with the April tariff news lows near 220. From there, though, we had a pretty sharp rally. We crossed above that green line near 304. That represented a pretty persistent ceiling from earlier on our chart there, and once again proved to be resistance a couple times. But in this case, in the second case between May to June or so, it looked more like an ascending triangle type of price activity there, where we had price bouncing up against the ceiling, but also increasingly higher lows going along the low parts of the price action here. Eventually, we did get the upside breakout, but perhaps to the disappointment of some of the bulls, we were not really able to make much progress beyond those old highs on a closing basis. We did make some intraday highs, but the closing highs would be much more important here. So for now, trending lower, breaking below some of our support lines, breaking below our yellow 21-day EMA, and momentum also showing a similar slowdown like our last chart. But as I said, it's kind of common for these things to take a bit of a breather as we head into an event risk situation here. But for now, price holding on for the most part, quite near the highs.
Yeah, so a lot to look at here, especially as we are modestly on the session. We're up about 0.6% today. We have pulled back from recent highs, but a name that has been fairly resilient in spite of the U.S. consumer, which, I to quote Kevin Hinks earlier, do not doubt the American consumer, which seemingly has done quite well, especially after hearing from a lot of the big banks. So all that being said, now when we zoom out, big picture, what else are you watching for American Express?
Right, so when we look at our other studies that we typically look at in this segment, our volume profile study and our standard deviation channel study, the first thing that comes to mind is that around where price topped out, it would have looked different at that time, but that now is around where our +1 channel would come in, suggesting that would be relatively extreme price if we were to reach that area right now. And that also lines up quite closely with those old highs. So that area, 325 to 330 or so, at this point in time, that could be a potential resistance area. But on the way as well, you can see we have our volume spike there, right around that 320 level, a heavy trading area corresponding with some of that trading area from previously where we hit the highs. That would be the slowdown point for price to work its way through and pave the way for the breakout to the upside. But then to the downside, we can see there's a much bigger concentration of trading in that shaded area between 290 to 305 or so, 295 to 305 perhaps. That also includes another of our indicators, our linear regression line, our line of best fit here based on the closing prices. So that's the idea of fair value that some traders use. That lines up right with the edge of where the volume starts picking up. So that could be another supportive area to watch.
Okay, yeah, so a lot to consider here as we go into American Express's report. Appreciate it, Rick, for all the technical help. And last but not least, before we go, as we do look to trade American Express now, for example purposes only, Alex, like we've said, a great read on the consumer, has pulled back pretty substantially as of late, but also at least we're now about 4.6% from highs, while also remaining about 42% and some change off lows.
Yeah, it's a nice trending stock, right? We got a lot of things this week that suggest more of the same could be in store. A little bit of a pullback recently, perhaps.
AMD's pulling back.
For a neutral to bullish strategy, maybe the bar is a little bit lower that it's pulled back a little bit. So neutral to bullish strategy, selling next Friday. So Netflix, we looked at tomorrow's expiration. This we're going a week out, a little bit further, just to get a little bit more options premium for this short put vertical. It's a 300, 297.5, $2.50 wide short put vertical. So break even, $2.99.
They can go lower.
Like 50 cents for this spread. It means you can make $50 on $200 in risk. Elongated Z risk profile.
The two support levels.
If you just cut off half of what we had for the Netflix risk profile, that's what we got for this one. No upside risk. Stock goes higher, stays where it's at.
There's one there, and here's the other one here.
If it does go lower, there is risk to the downside, obviously.
So if this doesn't hold, it'll drop down to the next one.
$299.5.
Maybe even here at the head and shoulders. Oh, I've already done that. Double bottom.
You got a pretty nice cushion, but you have to go all the way through the end of next week.
Okay, and so this name obviously has earnings on tomorrow morning. We have Netflix today after the close, so a bit of a difference of time frames there, but we'll leave it there for at least the chart and trade portion of this show. Coming up next, time to look at another name that has already reported, being Taiwan Semiconductor, which is rallying on the back of some results that were clearly able to please the street. We're up about 3.7% on the session here.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your number one
Carnation.
full-service wealth management skills in the biz.
He's the best.
Seen something from Schwab?
We're having technical difficulties. We're experiencing technical difficulties. Jimmy's still in the circle. I got one for you. I got a perfect song for this.
How to use AutoQuote Explorer. First, start a quote.
I was standing by my window on a cold winter night when I saw the earth come rolling in or to carry my mother away. May a circle be unbroken by and by, Lord, by and by. There's a better home waiting in the sky, Lord, in the sky. I went back home, home was lonely, for my mother, she was gone. All my family there was crying, for our home felt sad and alone. Will the circle be unbroken by and by, Lord, by and by? There's a better home waiting in the sky, Lord, in the sky. Undertaker, Undertaker, won't you please drive slow? Or that lady you of our hauling, Lord, I hate to
let you go. And circle the unbroken by and by, there's a home waiting in the sky, Lord, in the sky. Yeah, let's do it one more time. Waiting in the sky, Lord, in the sky.
Knockoff drugs like compounded.
Who can't sing like Randy Travis? I sure can. He sung out his nose. Round circle, be unbroken. Break the 9 EMA.
Jim, what's up? What's up?
Look at 8:36 a.m., baby.
Let me see.
Yeah.
Got me in a circle trade?
Well, I called it, baby.
Let me see.
And then you give me a kiss for apology.
All you said was, oh yeah, you did say you're scalping. Yeah, yeah. Okay.
Where's my kiss? Where's my kiss? Okay, bye-bye. Okay. Look at the SPY, head and shoulders. We're at $3.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free.
We're 3050, yeah.
Welcome back to Next Gen Investing. It's now time to discuss the latest right now we're seeing as far as analyst noise regarding Starbucks, which is getting a downgrade today out of Jefferies. Joining us now to talk more about this is Dan King Hall, the host of Morning Movers. So ironically, Dan, I went to say upgrade because I saw that we're higher. We're up 0.3%, but this was a downgrade, clearly. But so walk us through the way this analyst and the sell side really feels about Starbucks as of late.
I know. Starbucks shaking it off right now, but look, the stock has little changed year to date. I mean, it's had a run up on a year-over-year basis, but Jeffrey says, you know, where it is now does not make sense. They've downgraded to underperform from hold. They've got a $76 price target on Starbucks, so that implies downside more than 15% from here. They think that recent rally in shares, that rally that we saw of more than 10%, is just disconnected from fundamentals from the point of view of Jefferies. They've got valuation concerns here. They point out that Starbucks trades at 38 times forward earnings. That's above the peer group. They call it just unwarranted given their visibility into earnings and even the strategic viewpoint they have. They question the priorities that Starbucks has right now. They think there's too much emphasis on hot beverages and the in-store experience, although I would say I personally do like the in-store experience better now that given the changes Brian Nichols has made. But Jefferies doesn't agree with that viewpoint. They think there's not enough focus on cold drinks and drive-through growth. I can see the point about drive-through, especially. That's been, you know, kind of a key driver within the industry. And so they say no compelling evidence of improving comps or margins for Starbucks here. And they think there's just some significant headwinds coming for Starbucks when we're talking about both labor and technology and the cost of the investments that they'll have to make on that front. And they think that'll put pressure on margins and earnings, guys.
Yeah, and I think that this will be one where we continue to watch and see how its evolution really hopefully impacts its financial results. I agree though, Diane. I'm also still a fan of the in-store experience. I love that they gave us back the option to get our own straws. And I know it's small, but it's still something to consider. So yeah,
It feels like the old Starbucks. I like it.
It does, and it feels like I can finally grab like my sugar packets again. And again,
yes, I don't have to ask, can I have some more or whatever.
Exactly, and I'm like, I know these baristas are already slammed with the extent of these orders, so you know, let me do it more myself, so I don't have to bother these people, because I'm also of the same thinking. But appreciate that, Dan King Hall, for all of the wonderful insight as always. Of course, the host of Morning Movers. Now we'll shift gears, but just slightly, because we're looking at the broader retail space as we are now joined by Jerome Ortiz, the Director of Consumer Research for Alsec. So thank you so much for being with us here today. Jerome, walk us through the headline that I saw of your report.
You're ready to squeeze. This should be the last chance here.
For the first time this year. Thank goodness, but finally some good news to discuss.
We're waiting. Come on, circle. SPY double topped, close to it. Oh gosh, man, look at SPX double topped. Dang, I would have put a put there. Sure enough. Oh well. You wouldn't believe how much these calls are. That I had earlier. $305. Spread's getting wide here on Circle. 295 to 320. I don't know if I like that too much. Break it.
After several quarters of contraction.
So consumers are still gravitating towards experiences over things. So if they have to spend their discretionary income, that's where they would prefer to spend it. In fact, when one particular resort that stands out is MGM Resorts, who, according to our StarMine data, is likely to beat earnings estimates and post a positive surprise throughout 2025. And when we look at the restaurant sector, that's expected to continue to do well in terms of same-store sales as well compared to the retail sector. So what we're seeing is that consumers went out and they, summer is here, they went out with their families, and even for the report today for June retail sales, we saw very strong restaurant retail sales numbers, and that is expected to continue for 2025 as
this analyst
remain.
Will say the same thing every year. There's a lot of people out there that can't cook for themselves anymore. They just can't. I don't think I've ever dated one girl that could cook. Maybe one. Marcia, but that'd be about it. Laura couldn't cook. Every time she got in the kitchen, man, I'd have to go in there. And she was real proud one night. Brought me a chicken dinner, and I just sat there and looked at it. I didn't know to tell her that it's not cooked yet, that you got some raw meat in here, but I went ahead and ate it. Just to make her happy, because she went such a hard time to cook this dinner. But I've always held it from her. God. I'll never forget eating that chicken that night. Ugh. I said, all you got to do, honey, is just turn on the timer, put 4 minutes up, and cook each side for 4 minutes, and it'll be perfect. That's all you got to do. It's real simple. I am at a 310.
Trading at Schwab is now powered by Ameritrade, giving traders even...
Rob, I hope your new wife can cook. Or can she? Hope you tested her out first. She can, but we have a maid. Cup and handle. Plus a 1, 2, 3. Whoops. I'm going to show you something here on SPX on the 1 minute. We have cup and handle. We have a triple top. And we have an ascending triangle. So I have 3 bullish flags. Now triple top is rather iffy. They can go either way. But if we break past resistance, it'll be it'll be bullish. If we don't, we'll pull back. And I gotta get me a little bit of water in me. A chai tea maybe. So you got triple top, cup and handle, and a 1, 2, 3, and an ascending triangle. Actually, it's a symmetrical flag. It's more like a symmetrical flag. Rob. It's not quite an ascending triangle. It's also a head and shoulders. So you got all kinds of little patterns there. You got a head and shoulders. You got a symmetrical flag. You got an cup and handle, but not quite there at the ascending triangle yet. And then you're going to have a double top. So I'm not sold yet on a breakout, not at all. Plus we're getting to that time period where it kind of slows down. You want to be careful time.
How long does it take you to plan a site structure? The answer is too long.
Jimmy wants to buy put here. Will it be going against everybody? Circles are now at $3.10. I'm still in Circle. I've been in it for a while. I'd just like to see a nice little breakout piece. TSM hit my resistance line on the orb. On the weekly. Thing ain't gaining much. Well, if you don't do something soon, I will get out. You see the double top there, Rob, on your SPX. We are now at 320. I think we can do it. $325. It's tight. The squeeze is tight now. The spread 320 to 330, and it was a lot bigger earlier. So something's going down. Ooh, took my eye off my trade.
Here, why don't you take my seat? As he's taking me. Excuse me? Fuck you. Hold it, please. Here, why don't you take my seat? As he's taking me.
Fuck you.
Excuse me?
Fuck you.
Hold it, please.
What's going on? No! Stop!
Always Clean Janitorial, may I help you? Do you know you just interrupted me between a Sylvester Stallone take here, and it really pisses me off? It's like taking somebody's seat. I would advise you to call someone else.
Here, why don't you take my seat?
Good job, Stallone. Okay, we had the drama SPX pulling back now at the double top. Cup and handle. So how would you find the support on this one here? Does anybody know? You want me to show you? You got two options. You got the head and shoulders. You want to set an alert right here on this here body of that candle. And you want to get your order ready. It could hit a double bottom right here and stop and have a small little bounce and then come back down and retest this here head and shoulders. We're at 325 on 330 on circle. That's how you do it. Don't ever doubt the wash. You understand? Can we break it, or should I sell it? That's the question. So today's Bible verse, this is revealing Jesus. $3.20. Back to 330. The tax collectors also came to the baptism. Teachers, they asked, what should we do? Don't collect any more than you are required to, he told them. Luke. So I always ask a liberal, I said, so if you like taxes raised, why don't you pay more than what you're required to? If you want higher taxes so bad, won't you take care of it? Because I don't want higher taxes. There's 355. Whoa! I'm up $100 a contract. What happens when you're up $100 a contract? You do, you're right. You sell it. Rob, may I have an A+, please? Oh gosh. I hope I ain't got something wrong with my... I know what I can put on here. Well, that's some smelly stuff. Wildflower CBD healing stick. Okay, well, got out of that trade. That was a nice $600. Well, Darren, Richard? I'm gonna go get some water and I'll be right back and get my tea started. Then try to do something else different here. Oh, I know what I was going to do today. I forgot all about it. You see. Yeah, I think I'm going to take off. I forgot all about it. I was supposed to leave here at 1. I've had a good enough day today where I'm gonna go shampoo a couple cubicles. Ah, look at that thing go now. Probably leave another 600 on the table. These things, this circle is very bullish right now. When I get to my shop, I'll show you my machine. So I'll be gone for about an hour.
Just this week, North America sales Jones exited. That's on top of some other key members of the executive team. So that might be, cause some consternation here for investors. And if you look at Q2 deliveries, those were down 13% year over year. So a lot of headwinds for this company at this point. What kind of commentary are they going to make as far as...
Before I leave, Rob, SPY's setting up now for a 1, 2, 3 on the ascending triangle. Same as the SPX. If this thing comes back up and does a triple top and breaks its head and shoulders, you could get a breakout. If not, I'd be looking at that 200. But right now, I'm going to go ahead and get on out of here. I forgot about this. Oh, man, I can't believe I forgot about that. See you later, Embarto. Are you Mexican? Yeah, I'm still at 64 years of age and working hard labor. One day I'll have to say goodbye to it. Travel the world. Here's your ascending triangle set up. You ready? It's now or never. This is your last chance. And I'll see you all later. I hate to leave. I'll turn this volume up. Somebody can talk to you while I'm gone.
Seen decelerating sales. Now, if you look at the report, they beat on EPS, they beat on revenue, organic sales growth of about 2.1% in the quarter. That was a little bit better than the street expected. And then looking at guidance, now they still expect EPS to decline by 1.5% in 2025, but that's better than the decrease of about 3% that the street had, or that the company had previously forecasted. So that's a little bit better. They did see international sales start to resurge at this point, but North American sales are still basically in the toilet at this point. But the bar was really low going into this report, Nicole, so I think that's why you're seeing maybe some short covering on top of the positivity in this stock. It's still down about 5% so far this year, down 15% over the last 12 months, so it's still been under pressure, but seen a nice pop here in today's market action, and I think some optimism coming back in from the options traders, because we did see some bullish call activity. And this was all the way out in the October 150 strike call. A trader bought 3,000 of those calls. Paid an average debit of about $3.70, so that break even of 153.70 over the next 92 days is about 6% above the current share price in there. So you do need a continued move, but I think the key thing is this trader gave themselves plenty of duration, right, until these expire in October. And call volume is about 5 times normal daily average volume. Not surprisingly, with the stock moving this far up to the upside. But yeah, taking more bullish bets in here that the rebound that we're seeing today may continue.
Okay. Look, I mean, we did see a nice jump. I saw that 6% jump was the biggest increase for one day here since March of 2020. But thank you for that trade. And what about Albemarle and another bullish trade you found? Wow, the bulls are out today.
Yeah, this one's actually leading the S&P 500 today as it tries to reach all-time highs. But Albemarle up 8%. Still down about 11% so far this year. They got earnings at the end of this month on the 30th. They developed and manufactured those specialty chemicals, focusing on lithium. Maybe some of this Uber news pairing with Lucid might be one of the reasons that they're catching a little bit of a bid. But they, that earnings event is not supposed to be spectacular. They're supposed to lose about 84 cents per share on a diluted basis, and that's down significantly from the profit of 4 cents that they saw in the same quarter a year ago. So I think expectations starting to ramp up here in Albemarle, and got a couple price target hikes over the last couple days out of Wells Fargo and others, thinking that the business might start to improve, especially if EV sales start to improve. But catching a nice bid here today, and we did see some call activity in here. Call volume is about 6 times normal daily average volume that we've seen over the last week of trading. So yeah, a lot of call buyers in here today. One that stuck out to me was in the September 80 strike calls. Trader bought 15,000 of those, paid an average debit of about $5. So the break even for this trader where they start to profit above $85 over the next 64 days. That's about 11% above the current share price. So you're going to need to see a continuation of this rally for this trader to be profitable. But yeah, leading the S&P 500 to the upside, and call buyers are out in full force here today, Nicole.
Okay, Tom White, great to see you today, and thank you for all of those on Options Corner every single day.
Thanks.
Tom White, thank you. Coming up, Lucas Downey on why summer dips could be buying opportunities when the watch list returns.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Welcome back to the Watch List. I'm Nicole Pedalides, and we're live on the floor of the New York Stock Exchange. It's a record-setting day on Wall Street, at least for the NASDAQ. Our next guest, Lucas Downey, co-founder of MoneyFlows.com, is with me now. And look, you can't deny what a V-shaped recovery we've had, but you anticipate that there are sometimes days where we have a pullback. And are those opportunities? Tell us more.
Hey, Nicole, good to see you. Yeah, it is not popular to talk about a potential pullback with stocks screaming day after day. But we have a proprietary indicator that looks at money flows on over 1,000 stocks. And right now it's been overbought, as you can imagine, for 25 days. And what we've noticed over time is whenever that line starts to fall from out of overbought, which we're not there yet, stocks tend to struggle. And it's nothing major. But over the next month, 2 months, stocks are basically down around 2%. And that's all indices. So the note today was to tell people to prepare for a low liquidity August. There tends to be volatility. And then obviously September is a seasonally weak period for markets.
So you're going to pick and choose what names to get into here? I mean, how do you decide what's a good buy on a dip?
Well, what we try to do is we look for outliers, right? Where is the money flowing? And a great case in point would be Meta Platforms. This is a name that I've owned for a number of years. First thing is you got to think big themes, right? What is actually working? AI. Meta has all this data and they continue to just grow their earnings. What was interesting about Meta is their last time that they had earnings, this is back in April. Just remember how worried the whole world was about earnings. They basically were saying that they were going to guide even higher. Their CapEx was going to go above and beyond what people were expecting. You can see analysts have been very bullish on this name. So this would be the type of company that you would want to be looking for on any type of pullback.
What's interesting is you talk about when the S&P gains X, then the 1 month later it falls this. 6 months later, you may see a surge of this. I mean, is there a theme here? I mean, it's hard for me to read all that. What's the real takeaway here?
Well, the other part of today's message was looking at the steepness of the rally. I mean, we are in a historic time. If you look at the lows set in April and you look at the recent peak, the market climbed 26% in 63 trading days. So I was very curious. I went back through history, looked at over 4 decades of data, and I only found, get this, 20 periods where the S&P had gained 26% or more over the same time period. And here's what was so interesting. A month later, stocks are basically flat. They're down about 0.6%, but they have never been lower 3, 6, 12, and 24 months later. And if you look at the periods that this includes, you're talking about the global financial crisis where stocks screamed out of that bear market. It also happened in COVID. And those are the analogs that set up for what is happening today. We had forced selling in April. Everybody prepared for a Great Depression. It didn't happen. And so now everybody is re-risking. And so months from now, we believe stocks are going to be meaningfully higher than today.
Understood. I mean, so when you mentioned Meta, do you have a few other names you can share with me today?
Yeah, another name that we've been watching is semiconductors have been super hot, a name that I've owned for a number of years and continue to buy on dips, Lam Research. So as AI continues to just gather steam and devices continue to get smaller, these are the types of companies that are going to win and they're going to lead. Just last quarter, back in April, they gave earnings. They set their expectations well above the street. Those are the types of companies you want to be betting on any type of pullback. And we know semiconductors can get very volatile, especially heading into earnings.
Yeah, so you have Lam, and how many more are there? Let's hear the rest.
Well, another one, Taiwan Semi, great name. We've been very positive on this stock. I think if you wait for this one to come in a little bit, they just had tremendous guidance, so the stock may continue to drift a little bit higher over the next coming days. But again, think big themes, big AI stalwarts in the industry. You need to be thinking about companies that are not super expensive on a forward PE basis, but these are the types of names that we're going to be focused on, and that's where the money's flowing.
Yeah, I mean, overall, so much of this is based on sentiment and how people are feeling, and sometimes you feel down when the market sells off, but that's your opportunity, right?
That is. I mean, people were worried about yesterday. There were rumors that, they were going to get rid of Powell and the stock market sold off and then it rallied back. So there's a lot of false starts as we're in the summer. You just got to be careful, focus on great stocks, buy on pullbacks, and that's how you're going to win.
Yeah, understood. When you look at the different indices, the tech-heavy NASDAQ at a record again today, it sounds like you definitely lean towards some tech, right?
Definitely leaning towards tech. That's where the earnings continue to get raised. If you look at what analysts are expecting for some of these large companies like a Meta, like Lam, I mean, the earnings continue to the earnings board just keeps going up, up, and up. And as long as analysts are bullish and they continue to raise their numbers, stock prices are most likely going to follow that.
All right, Lucas Downey, great to see you, co-founder of moneyflows.com. Thanks for joining us on the show. It was a good conversation, Lucas. Thank you. And James Stemmert is standing by. He'll discuss the global opportunities in a new AI-led bull market, why he thinks you better get in there. We'll explain.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on the Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network. Welcome back back to the watch list. I'm Nicole Petalides. We're talking about the New World Order, and here to explain, James Demert, founder and chief investment officer, Main Street Research, is here with me to talk about some of the global exposure that he is favoring at this point. What does this mean, the New World Order?
Thanks, Nicole. Good to see you again. And it is a new world order. And I always say markets really respond to government policy. And we have a new world order and government policy here in the United States. And that's forcing big changes overseas. And we think that's what's driving the difference between performance of stocks in the U.S., which have done nicely this year, but foreign markets have done way better. And so we think a lot of that's based on this new world order of policy.
So the Europe is always the one that people always say, oh, I was investing in Europe, it's done so well, I'm going to continue to invest there. Is that sort of what you're thinking for Europe in particular?
I think Europe particularly, but I think if you look carefully, we can talk about this, it's sectors in Japan or India. A lot of foreign markets have been neglected for a long time as U.S. markets have been deemed exceptional. And I think that's about to change.
So these areas, Japan, India, Europe, you would still have money invested there because you still think that the way it's lined up and policy is not really changing here. So they're going to continue to benefit because they're changing some things that they're doing?
Yeah, and I think that's a great point. These policies are not going to be changed in a hurry. In fact, we think they're multi-year. And what's really interesting is even though stocks overseas have gone up more than the U.S., they're still fundamentally very inexpensive relative to U.S. equities.
But you do think we still have room to run here. I saw your year-end price target was 6,800, right?
Yeah, 6,800. I think that seemed far away when we were at 5,000 just a couple months ago. But now we're in striking distance, and we think we can get there because in the United States, you have this sort of not too fast, not too slow economy, we call Goldilocks, which is a great setup for certain equities, particularly for technology, which will probably lead us to that 6,800 level.
So let's talk about some of the catalysts that will drive U.S. growth. I mean, what do you think will work for investors?
Yeah, I think investors, really importantly, should be careful here. You've got an economy that is running not too hot, nor too cold, but we're going to be very sector specific and try to avoid the tariffs if we can. So in this kind of environment, technology tends to do quite well with rates not moving upward and economic growth somewhat resilient. What I think is really interesting, and we're seeing it this week with earnings, is that the financials, there's a big bull market in the United States in financial stocks, and that's really, they're discounting all that deregulation that's coming their way. So in the United States, we'd be very specifically overweighting tech. In fact, U.S. really owns the AI space, if you will, globally, and in the financial stocks.
I do want to talk about some of the names that you have highlighted here, but our last guest from BlackRock was talking about iBit, and they were saying that they recommend 1 to 2% of your portfolio with some exposure to Bitcoin. Are you hearing more and more of that? Do you think that sounds pretty good or not necessarily?
We would agree with that theory. It is becoming a more institutional phenomena. Institutions want to own it, and we would suggest that the 1 or 2% allocation is probably enough.
That's probably good. So when we talk about some of these names for energy, you had GE Vernova, which had a nice move today.
It sure did.
GE Aerospace and GE Vernova. GE Aerospace went to a 25-year high, pulled back, but people are profit-taking too. Tell me about some of the names that you have picked here. You have Palantir in technology, NVIDIA, and energy, GE Vernova, and some others. Tell me some of the names here.
Yeah, GE Vernova, Palantir, NVIDIA. In the United States, if we're just going to focus on that, all share one thing in common. We are in the early stages of a very real AI tech revolution. We need more AI chips, where NVIDIA comes in. Companies like Palantir are using those chips to build these robust platforms. So we want to make sure we're going in that direction. And let's all face it, there's not enough energy to drive all this AI, the EVs, and the crypto. So we need companies like GE Vernova to help us build the grid.
Yeah, you did. Abroad, you had Checkpoint, that's Israel-based, right, for technology. You are still looking abroad. I see a few names that you have here that are based abroad.
Yeah, there are technology companies that are attractive overseas, not quite as much of an AI bent, but companies like ASML in the Netherlands, SAP based in Germany. There's a whole raft of companies that are related to AI there. And we think, again, the price earnings multiples overseas are significantly less than what you're seeing in the U.S. So there's a valuation very compelling.
When you look at the geopolitics of what's going on here, do you have big worries? Do you have sort of base case of, for investors who call you and say, look, I'm worried about what's going on in Israel and Gaza and Palestine. I'm worried about Iran, Ukraine and Russia, blah, blah, blah. I mean, what do you tell them?
I've spent half my career worrying, and I'm still a 50-50 worrier today. And I think that's because there is a lot going on. It's a complex world. Those Mideast tensions, if they were to extrapolate, that can tend to disrupt the business cycle, which is the big risk for stock investors. So you want to keep an eye on that. We use stop losses as a way to mitigate downside. Another thing that I think is important is our fiscal spending here in the United States. It has been out of control for a long time.
Right,
and,
decades.
And if we get our U.S. debt gets downgraded, we think that would create a very significant decline in stock. So we want to keep an eye on those, use risk management tools.
Right, understood. I mean, there's still worries about the dollar, whether or not the dollar stays as the reserve currency, if it really gets devalued to help with our debt somehow, and then people move more to crypto. I've been hearing a lot of theories. Did you hear that theory?
Yeah, and
does that have merit?
I think part of the reason people are going to gold, going to crypto, is this feeling, and they're not wrong. The U.S. dollar has declined quite a bit. There's a bit of mistrust now about U.S. policy when it comes to foreign investors. And I think that's driving some of those changes that you're seeing in the value of the U.S. dollar, making it much more expensive for us to go overseas and have a vacation.
Let's talk about earnings. I mean, we have Netflix later today. Did you have a Netflix thought?
We do. We're big owners of Netflix, have been for a long time. Our feeling is they're going to meet or beat expectations. I mean, that business, they have a moat around it. They have a tremendous market share. That is still growing. And they started having this pay for advertising or pay to play, which has been very accretive to earnings. So we think those numbers are going to be good.
Okay. James E. Demert, founder, chief investment officer at Main Street Research. Great to see you, James. Thank you so much for being with us today. Still ahead, we bring in our panel to discuss retail sales trends, the outlook, what you need to know, shop till you drop. Shoppers are really keeping this economy afloat. We'll explain. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Retail sales coming in hot. Well, you know, what's going on here with retail sales? Because last month when we looked at May, sales there had tumbled. But we saw a snapback today that wasn't necessarily expected. Our panel is ready. Zach Waring, equity analyst at CFRA Research, and Lisa Martin, Futurum Group research analyst, are both with us. So when we think about the consumers and what they were doing, the idea here was that they sort of loaded up, and then in May they took this breather, and then we saw sales tumbling, and now we have this bounce back. Zach, what do you make of it?
Yeah, it's a lot of uncertainty, I think. I think a lot of companies are, were ordering ahead, in anticipation of the tariffs, and then some of that ordering cooled off to kind of wait and see. I think there's just a lot of uncertainty in the data too as well. And so it's kind of hard to, take them each month alone. I think you kind of have to look at 3 or 4 months together to get a better picture.
So consumer spending remains strong, as you said, and the tariffs are still a risk, which I think most people would talk about. Lisa, what do you think is going on here?
The Census Bureau just released data, Nicole, this morning. This is hot off the presses. We saw, if you looked at first half through May, we saw a mixed bag. But what we saw in June, as you mentioned, was retail sales coming in strong. Core retail sales, that eliminates sales of cars and car parts and gasoline, but it rose 0.6%. So what we're seeing in June from a rebound perspective is higher prices aren't necessarily hurting spending yet. Of the 13 categories tracked by the Census Bureau, most of them showed gains in June. In fact, retailers saw miscellaneous stores with the biggest increase, followed by motor vehicles, parts dealers. Sales rose up 0.9% for both home improvement stores and clothing and accessory stores. So June was healthy overall. A good, I think, momentum to head into second half.
Yeah, and do you think that continues, Lisa? I mean, you said it's good momentum to head into the second half. Is this a catalyst? Does this continue in the second half?
It could be. What we just saw, last week with Amazon Prime Days was really interesting. It was 4 days versus 2. But I think the June retail data reflects what we're already seeing, is that as consumers are making purchases sooner to potentially counteract the tariffs that are potentially coming. The one, as a marketer, I will say the tariffs messaging has been consistently inconsistent. But if we look at Prime Days, Amazon generated a lot of buzz, and they do. But what they also did was, over 4 days, they wouldn't say any numbers yet. So they're saying billions were sold across millions of products. But the air cover that Amazon generates for Prime Days benefits the Walmarts, the Costcos, the Targets, the Best Buys. So all of them had competing promotions, and ultimately the consumers win. So we're in good shape, I think, in mid-July to see what happens when the clock ticks August 1st.
And Zach, what do you make of it? I mean, you're watching names like Lulu, Deckers, Abercrombie. We do have everybody talking about tariffs. Tell me your thoughts here.
Yeah, I think you're going to start to see this creep into margins a little bit in Q2, but I really think you're going to start to see an impact in Q3 and Q4. You had a lot of these companies order 6 months in advance or more, so a lot of the tariff impact isn't going to be seen until the second half of the year, and you just haven't seen it yet. So I think you're going to wait and see, but I think a lot of it's been priced into a lot of these companies. I think a lot of these companies are down 20, 30 or more percent over the last 6 months, and I think now I think as long as margins hold up relatively well, we think you're going to probably see a 10% impact to margins at least from these tariffs, at least in the apparel and footwear space. But I think that's been priced in, and I think the multiples kind of reflect that.
And so these names like Lulu, Deckers, Abercrombie, they each have their own story too, right? About innovation or where they're expanding or how they're doing it. Would you say these are picks? Do you have buys ratings on these?
Yeah. So I actually have strong buys on these names. Lulu, Deckers, and Abercrombie, I think, are right for the picking here. I think they traded half of what they normally do in terms of valuations. I think it's mainly because of the uncertainty. Investors are just a little worried to get back into these names, with tariff rates anywhere between 10 to 40 or 50%. And I think we'll settle somewhere, maybe 20-ish%, or even lower, which I think, these companies would rebound off that news because, earnings have come down, multiples have come down, the expectations are extremely low. So I think as long as you don't get the worst case scenario here, I think these names look really good. Abercrombie's done everything right over the last couple of years. They've seen sales grow 15% over the last 2 years. Lululemon's growing internationally. So you've got international growth that's going to lead Lulu higher, I think. And then, Deckers has been great with Hoka, and they've really performed well. Even UGG has participated in the growth over the last 2 or 3 years. So we think these are quality names. They have great balance sheets. And I think multiples have come down enough that I think it's pretty much risk-free here unless you get the worst case scenario tariffs.
And Lisa, are you worried about headwinds for this group overall? You said economists say meals in bars and restaurants tend to be the first thing when people are trying to save. Tell me about some of the action that you think could change, and will it?
I think that it could change. I think there's a very high likelihood there. Some of the headwinds that we saw, bankruptcies, we saw Joann's Fabrics. This is starting at the end of 2024 into 25. Party City, Rite Aid, Big Lots. We're seeing job cuts, a correction of the overhiring during the pandemic, Nike and Walmart cutting jobs as well. The tariff uncertainty obviously still persists. But what I'm hopeful for is some of the tailwinds that we're seeing. And being that I'm here with Futurum, I got to talk about some of the technologies because the retail industry has really done a great job in digitizing since the pandemic. It's really shifted to this data-driven, hyper-personalized experience for individual consumers who want convenient, relevant, omni-channel experiences that are frictionless. So we see technologies coming into play here that are very, very positively influential. Automation, AI, specifically generative AI. We even see retailers that are leaning into Gen AI, like Amazon Alexa Plus and Rufus that they did with Prime, are seeing higher conversion rates. We're also seeing retailers that are leaning into customer data. That should be a catalyst to create those personalized shopping experiences that help us fill our carts more, are actually doing better. So at the end of the day, retailers should focus on leveraging technology, find the right data that can predict customer needs, help them better understand the customer, better forecast for seasonality, and navigate privacy regulations. I think that's going to be essential as we go into this tariff uncertainty, ...
Yeah, and I also like some of the points that you have, the factors at play. How much are they spending? Do they value experience over possessions? I want to get to that in a moment. And also, I was thinking, Zach, you were talking about in the employment picture, and it's still pretty steady. Do you expect that picture to change? As long as people have jobs, they'll be spending. Does that happen in the second half of the year?
Yeah, so our base case is as long as consumers have jobs, we think they'll keep spending, and they've proven that over the last 4 or 5 years. And we don't think the unemployment market's gonna pick up at all. We just our base case is if they're employed, they'll spend. There'll be fluctuations here and there, but I think across industries right now, and especially durable good industries, you're more worried about tariffs. The U.S. consumer has proven time and time again over the last 3 or 4 years they'll spend. So, I think front of mind for us is definitely tariff picture, and we want that to be, get some clarity, right? I think as long as you get clarity from the tariff picture and you get some deals done, I think, investors will take that and move forward.
Yeah, and a lot of these companies, as you noted, Lisa, really became digitized during COVID. They started to do order online, pick up at the curb, very convenient, and that's one of the elements here. I mean, let's put aside the names that filed for bankruptcy. I think that's a very Rite Aid and Joanne stores. You have them listed here. I remember all these Big Lots, etc. But I think the factors at play about these 5 factors, I don't know if you have them handy, but these are very interesting, how people behave.
Yeah, the behaviors, Nicole, are super interesting. We're seeing discretionary spending. We are seeing people with higher income households. They're leading the charge in discretionary spending for things like travel, entertainment. So above all, we're seeing people prioritize experiences over possessions. I know I'm in that category. There's a growing spend on, preference for spending on experiences like dining out, as we talked about. There's an uptick in dining out data in June, which was kind of surprising. We're also seeing influential factors like social media. It's playing a bigger role in influencing online sales and purchases. The convenience, as you mentioned, is definitely a factor. Consumers are valuing convenience over and being willing to save time and effort, but also sustainability. We're seeing a lot of consumers really lean into, hey, I'm willing to pay more for eco-friendly products because it benefits the globe and all of us in it.
All right. And Zach, a last quick thought.
Yeah, we really like companies that are digital and that are leading in that social media marketing, right? Those grassroots campaigns. And we think, Abercrombie, Lulu, and Deckers are doing well in that.
Okay, great to see you both. Zach Waring, Lisa Martin, thank you both for being with us. A key day here as we follow up on those retail sales and the behaviors of folks. It's the people spending that are keeping this economy going for the big picture. Thanks for joining me here on the watch list. I'm Nicole Petalides, every day here on Schwab Network, 9 a.m. and also 2 p.m. Download our Schwab Network app. It's free in the Apple App Store. Tune in 24/7, schwabnetwork.com. Right now, the Dow's up 275, and S&P at 6,300. Can we break 6,302? This could be another record day, folks. Keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward.
Find the next trend.
From every click to every tick.
There's no fear of missing out on Next Gen Investing.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
It's 3 p.m. on Wall Street, and this is Market on Close. I'm Marley Caden. With an hour left in the trading day, let's take a look at where the markets stand right now. We did have the NASDAQ touch a new all-time high. The S&P creeping up towards another one right now at that 6,300 mark, up 0.6% right now. The NASDAQ up 0.75% at 23,079.39. As for the Dow, green on the day as well, up just over 0.6%. And the Russell, our winner again. They're really doing well. The Russell up 1.2% at 2253.97. As we look at some of our futures products, we'll check in. The dollar stronger on the day at 98.43. Gold down about 0.5% right now at 33.43.90. Crude oil up almost 2% at 67.65 a barrel. And Bitcoin still north of that 120,000 mark, up 0.3% right now. Now it's time to take a look at a few stocks that are on the move today. Joining me is Jenny Horn, host of Next Gen Investing. Quite a few for us to talk about today, Jenny. So, of course, let's start with the big one. Taiwan Semi reported their earnings earlier and having a pretty good day in response.
Taiwan Semi, I think, is marking such a stark contrast with what we saw from ASML yesterday, because that was a pretty substantial move to the downside. And I think there's always the fear of, like, what does this mean then for the broader chip earnings as we really start to see them kick off really into next week? But Taiwan consistently echoing that sentiment of enthusiasm. I mean, we saw a 61% profit surge to a record high fueled by their AI chip demand. The world's largest chip manufacturer has benefited from this mega trend towards AI as it gains from producing the advanced processors for its clients. But also did highlight that right now third quarter revenue between around 31.8 and 33 billion, which would mark a 38% year-over-year increase and about 8% higher from the prior quarter at the midpoint. So hugely positive. We did see from their CEO, the company expects now its full year 2025 revenue to grow by about 30% in US dollar terms, supported by, again, the unprecedented strong demand for AI, and also the high performance computing division, which does encompass their AI and 5G applications, drove those second quarter sales, contributing to now about 60% of their revenue, which we saw that share of HPC revenue was up 52% from the same period a year ago. I mean, these are staggering numbers for a company that is as large as Taiwan Semiconductor really is. They benefited from all of the advancements in AI. I mean, from products from Tesla with its autonomy, as well as like Apple's iPhones. NVIDIA is the client you tend to think of most, but has its hand in basically 90% right now of the production of chips within the entire globe. So this is a huge read. 75% of it's derived from North America. I think this could tell you the AI demand boom is not going away anytime soon.
Certainly not. You know, and knowing that 75% of their business is in American companies, did they cite any headwinds or any potential like tariff concerns that they're keeping an eye on in their guidance?
Well, so they did say that right now, looking into the second half of this year, they have not really seen any change in customer behaviors, but they did say, however, we understand there are uncertainties and risk from the potential impact of tariff policies. Did not really go into like specifics on that, which I think has been the tone consistently, but U.S. export controls have also restricted their own business with China, of course, as well as that of key clients of NVIDIA and AMD. But I do think that thawing tensions between now Beijing and Washington are only hugely encouraging for Taiwan Semi, who's like unfortunately stuck in the middle of like the two parents that are fighting right now.
Yeah, absolutely. I mean, it's certainly NVIDIA today seeing a pop, taking the NASDAQ up with it as they're going to sell those H20 chips to China. So big move there. Also, we got PepsiCo earnings today too.
Bit of a different story with PepsiCo. So yes, a name that I think is a great example of like lowered expectations can sometimes lead to a nice pop in share price. We're up 7.75% today, did actually say its business remained resilient during the quarter. They logged higher revenue despite this small drop in volumes. If you look at actually their North America volumes, there's a lot more to be excited about. As overall second quarter volumes in North America fell 1%. And about 2% across their beverage unit. We saw volume growth in Latin American foods as well as Asia Pacific foods helped offset this lower food volume across Europe, the Middle East, and Africa. And their CEO did say they're trying to effectively navigate this very challenging environment. And for that reason, still seeing, some growth on a year-over-year basis. 3-month highs, though, in share prices today, as they do still expect this organic revenue to rise this year, as well as earnings to be at least flat on a constant currency basis. So not seeing further losses, which is encouraging. And Forex has been a bit of a headwind for this company. As we know, the weakening US dollar plays a huge role when you're basically a company as globally exposed as PepsiCo is. But I was actually surprised to see their beverage unit be a bright spot. I've been giving all the credit to Frito-Lay because that's obviously where my interest lies. But PepsiCo was actually, as a beverage brand itself, did better than I think feared this quarter.
Yeah, certainly the street agrees with you, up almost 7% on the day. And as I'm looking at our next top story, they are also up 7% on the day. Unity Software, got not one, not two, but 3 positive notes today.
Okay, and Unity Software has been on quite the nice run, as we've seen. The sell side give them credit for that, but also just the overall performance of the share price has been hugely optimistic. This one, it catches my radar every single day because of the massive volume and also just the massive surge to the upside. Look at this name that has been on a pretty nice run, like you said, 7%. Wedbush today with a price target raised to 39 from 31.50 with an outperform rating. Following right now what was an advisor call with Wedbush as well as Unity, where they said they basically are able to continue their conviction to the upside on this name. UBS also with a $33 price target raised from 22, so a more notable jump at that firm. And Morgan Stanley, with I'd say maybe my favorite note of the bunch, said that they have right now observed this marked improvement in the commentary from Unity's advertising customers in recent weeks. They now believe that Unity Ads is delivering no less than 15 to 20% uplift on their installs and purchases. And they do believe that their restructuring, as well as just their reinvestments in the last 18 months, have produced now a more competitive ad product. I think that simply put, you could say any involvement with AI and ads has been a winning recipe as of late, but Unity, every single day has huge volume and a big move without even necessarily news tying itself to it.
Yeah, in the 1 year, we had the 1 year chart on the screen a little bit ago, up 101%, year to date, up 62%. Just a really impressive upward trajectory here. And like you said, on huge volume. Today, they're almost 3x average volume today. But one more big story to get to. We had a lot today. Different responses from the 2 companies involved. Uber down on the news just slightly, mostly flat, but Lucid up 5%. So what's happening here with Uber and Lucid?
So, okay, Uber, Lucid is really, I feel like, the primary beneficiary of this story. As you're seeing, as you just mentioned, in share price, Uber today not making a move to the upside. Lucid soaring, though, after this self-driving partnership that was announced with Uber as well as Nuro. Lucid will, of course, be providing the cars. Uber will be the ride-hailing network, and Nuro is the self-driving technology. Uber does plan to deploy about 20,000 or more of these Lucid vehicles that are equipped with this Nuro driver over a 6-year period. The news release, though, indicates that either Uber or third-party fleet operators will be owning those cars. But mind you, pricing for the cars wasn't disclosed. Lucid does still definitely fall in that luxury space. So this means their Air sedan starts at roughly $70,000. Their cars go significantly higher as far as just baseline price, depending on what model you're looking at. So investors might be expecting that this service could be a high-end offering, but that's a lot of cars for Lucid. It's expecting to produce 20,000 vehicles now this year. It still loses between $220,000 to $330,000 per unit, which does include the broader implications and just cost of the growth of their business, sure, but all this to say, Lucid produced about 9,000 cars back in 2024. So to fulfill this partnership, they have some big orders to fill. Production needs to step it up. And robo-taxi services are exciting, yes, and expanding, but could also still be disruptive to Uber's traditional business model, which I think is why you're not seeing the rising tide lifting all boats today. Uber lower today, well, Lucid's up a whopping, 38 and some change percent.
Yeah, I mean, really an interesting play because, like you said, such a expensive vehicle. I mean, in the luxury category. So it is interesting to think, is this a new sort of black car offering? What is this going to look like for the customer? You know, as so many people seem to be moving into the, Uber X category and the lower, and controlling where their spending is and moving into experiential. It'll be interesting to see how this all plays out.
I know, I hope it can get me into a Lucid because I've only seen them on the road and I'm like almost gotten hit by a few at this point because I want to be inside of one so badly. So I would love to be, give me all of the pilots, the tests. I will get into a Lucid vehicle someday.
Well, at some point over the next 6 years, there may be 20,000 of them on the road as a robo-taxi. You've got a shot, Jenny. Well, thank you for joining us to break down all the top stories today. A lot to cover. And now we're going to switch gears here, move to the macro side of the market. We'll welcome in Michael Green, he's a portfolio manager and chief strategist at Simplify Asset Management. Michael, thank you for being with us this afternoon.
Thank you for having me. I'm glad to be here.
Oh, I'm glad to. I'd like to just start with, overall takeaways on the day. We saw the NASDAQ hit a new all-time high as I'm looking out at the S&P now at 6303.27. So, a bit of a record day again.
Yeah, I mean, it's turned into a relatively strong day. It is being led by high volatility stocks, which are up strongly for the year. There's a lot of short covering that's going on. The reports that we received economically this morning were relatively strong. Certainly the Philly Fed was one that I commented was eye-opening in terms of the broader strength associated with it. And we are seeing that largely play through with cyclicals outperforming defensives, high quality underperforming low quality, et cetera. So this is very much an affirmation of, some positive growth surprises.
And what specifically about the Philly Fed stood out to you? Most of the discussion today has been about, retail sales, but I'd love to get your takeaway from Philly Fed.
Well, there was a dramatic change in the new order expectations, which is really one of the critical components that I watch for economic activity. This is echoing changes that we've heard in other surveys, and broad growth surprises have actually been trending slightly higher. We're not seeing the negative effects of tariffs that many had been concerned about. The offset to that is that there's very strong pricing expectations, higher for prices paid than prices received, which suggests there could be potential hits to corporate profitability. But clearly, this was just a much stronger report on the new order side. It came in at positive 15 versus, I believe, expectations of -1. That's a big move.
It certainly was, and as we're starting to look more and more for inflation and tariff impacts, we did see some in CPI. Are you feeling as though once we get more clarity on this and we get farther into our journey in this tariff conversation, we will start to see more of that? Or is it going to be much of the same where we aren't getting a lot of inflationary reflection in the data?
Well, I think the critical difference between tariffs and the inflationary impact that we saw in 21-22, 21-22 was a surge of income and demand as the world reopened after COVID, with people flush, particularly in the United States, with the stimulus and benefits received associated with COVID. Staying at home, they were able to save significantly more money. Money was transferred somewhat, unthoughtlessly, let's say, or without thought.
I'm here.
Today what we're seeing is very different. This is effectively a supply chain disruption, a reordering of it, and so it is a relative price shift. And the real question basically boils down to what's going to happen to the prices of goods and services that are being tariffed versus those that are not. If you are introducing a tariff or a tax on consumption effectively, that is going to depress the relative demand for those goods in unit quantity.
No, it's not. Let me tell you something, you idiot. We had 21 to 40% inflation during the Biden administration. Did that stop people from buying? No. So you're just talking trash. And we've not had any kind of inflation at all. You red-headed piece of garbage. If you're going to complain about inflation, why didn't you do it 3 years ago when I had to pay like double for my trash bags? 100% increase. Lysol, $3, 35% increase. Automobiles up 25 to 30%. no complaints back then. So shut up. Okay, I got it over. Every time they bring this chick on, man, it just pisses me off. Oh, we missed the run. We were worried about inflation and stagflation. And the market still keeps going higher. Okay, I'm done. My rant's over with. I was in a good mood until I seen this idiot and her. I'd say Intel's about ready for a push to the upside. Just by looking at it. We've been in this Darvis box forever. You'll get some kind of news. Okay, get me riled up. Get this guy off of here before I bust my monitors. How long are they going to carry on with this? It's been about a year now. Every single day. What do I think of Nile blasting off? I think that it's probably due. China's been a sore eye for a lot of stocks, and we kind of put the damper on them when it comes to the chips under the Biden administration. And Nile, I've traded this stock from $2 all the way to 60, and I like it. I like the company, I like everything else. So we've already had a good run, about $1. So it's already up 25% in 6 days. So I think it needs to consolidate for a pullback and then jump in the trade. Now we're going to pull up the yearly time frame, and we're at the 200 SMA, which is a hard resistance. Here at I had 435, but now it's at 440. Right there. And that's a double top. So you got a few major resistance levels here. If this can get back to around $4, I think it'll be a good buy. 410. I'd probably set an alert just above 410, right around 416. That's what I would do when it comes to Nile. Did you get that, Martian? Set you an alert right around 416, and if we break 440 and build momentum above it, you should be able to get this easily to 523. $5 would be a very hard resistance. And then if sales pick up, I like Nile. So right around 416, $4.10 will be your support channel. And resistance to break is right around, let's just go ahead and say 450. If it gains respect at 450. I wouldn't jump in, I wouldn't chase it. I'd wait for a pullback and then jump in it if you were going to go long. But with the easing of the chips, I think it's going to allow Nile to run. Not real big, but it definitely. China was being pumped before Trump got elected because Trump would be good for China. You had smelling, yelling over there, spouting off her mouth, threatening China with Taiwan, and that was a big old curve in the ball too, why a lot of China stocks went down. But with the CHIPS Act, I mean with this chips being open to China again, I think it's going to be a good thing. We're on the top of the Kettner channel cloud. Is that idiot off here yet? Let's see what else they got on here.
We captured $540 billion in new ETF flows in the first half of this year. And when you think about where that money is going, it's going largely to U.S. equities, where we've seen $190 billion in flows. And I know your previous guest was.
I don't know, I just don't like this girl, man. I got to change my attitude about her. She came on a little bit too strong for me. Bank of America had a nice little rebound today. What's it, UAL? Dang, I didn't look at UAL today. Dadgummit, that misses me off. We had a fallen wedge. What time is it? 6:24. I gotta watch SPX here for Power Hour. So if we don't hold the 63 here, I'm getting puts. But not until then. Do you think so, Rob? Say yes.
shovel semis that are out there in the small cap market that are benefiting from what's happening in the biggest companies.
Right. Do tariffs play in terms of the raw material importing?
I guarantee it, if I was a fat cat, big dog, I'd be the #1 trader out there. I'd have the biggest hedge fund. I'm going to turn it on here. First thing it spout off, tariffs. These people don't understand we're $37 trillion in debt and over $136 trillion in unfunded liabilities. Okay, get ready. As far as I care, we tariff them 100%. Circle's at 350. Well, the SPX, they're cheap. These calls are cheap. What's going on here? Oh gosh, man, this looks like an opportunity. 6,300 puts if we dip. Let me see what a straddle does. No, let's just go with a single. So these are the 6,300 puts. Okay, here we go. Let's give it a shot. Now this is risky. $245 for the 6,300s. That didn't work. No. $2. I got $2.45 and $2 and I got 6. Okay. Looks to me like I screwed up. Not good. $1.45. Now I got 12. $184. Jimmy Crack Corn, I don't care. Jimmy's got 12 and he don't care. What the hell? Oh, okay. There's $192. Keep going. Drop, 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 drop. I'd get out now. 210. No, not 210 now. Next time it dips, I got to push the trigger. Well, I like the 6,300. Man, them 62.75s are at 27.90 calls.
There's some possibility for some fluctuations here. 31,000 calls, 19,000 puts for open interest here. In terms of the range of the calls, 35 to 40 is where most of the activity. That 35 level is the highest by far in terms of the open interest. In terms of the puts, that's our expected move there, by the way. And on the put side, 30 to 37 is the range, but the highest, once again, that 35 level. So really an important level. That's where our green line is on that chart. That's where most of the options activity is for tomorrow's expiration.
Yeah, I mean, and certainly not far off from where we are right now, trading at 34.67 right now, coming into earnings. As far as any notable trades, were there any for SLB today?
The biggest quantity trading was in the July 18th, August 15th contracts here. It was a spread that was done. It looks like it was a 35 strike call, like if it were an opening trade, it would be a call calendar at an 80-cent debit. So like a $200,000 debit total, but not really clear if it's an opening or closing trade or if it's some kind of rolling trade. Either way, it was short the July 18th calls, long the August 15th calls.
Well, Rick, we appreciate it. We'll get their earnings tomorrow morning at 9:30 Eastern, but thanks for breaking that down for us. That's Rick Ducat, our lead market technician here for the Schwab Network. And coming up, we'll keep the options discussion going with the team from NASDAQ as the NASDAQ 100 hit a new record high today. Stick around. Market on Close. We'll be right back.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please.
But there's a...
Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Is it? Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we?
No can do.
I'll get out here.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services.
21 more minutes left.
Anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Where's this?
Accelerate your market knowledge
and shift your perspective into full view. Real-time example trades, a full hour.
The energy company.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market
is
ready for you, ready to go at 12 p.m. Eastern.
Environmentally clean.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms.
Now it's
Best of
awarded
all,
in engineering
you can ask
procurement.
questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
$2.10. Think profit. $2.10.
Welcome back to Market on Close. I'm Marley Caden. It's now time to shift our focus to the NASDAQ 100 and welcome in our next guest. Joining us in studio right now is Kevin Davitt, the head of index options content at NASDAQ. Kevin, for you to be in studio with us. The NASDAQ just hitting another all-time high for us and has had such incredible strength over the past few months. What do you see as, I guess it's a twofold question, the catalyst
what I've noticed here lately?
But also any potential concerns?
I've been working on it.
There have been a lot of great days because we continue to make new all-time highs over the past couple of months. I think there have been...
Can anybody tell me what I'm working on here lately? Any difference? Should be very noticeable. Anybody? That's right. I'm writing it longer. Correct answer. I could have got out of this thing earlier. And I got, I've been riding my trades longer. Exactly. Magnificent got it right too. Look at that. There they go. 265. I'm sitting in them longer and I could have made them darn 2,400 times. 24 times 40 is what? Equals 24 times $40 equals $960 I left on the table with that candle, 2 candles. Who is that guy on the microphone? He sounds just like Dick Clark and Superman. Netflix earnings tonight. Yay, Rob. BlackRock was our chance yesterday. Today's 17th.
Now, this low volatility backdrop has really benefited NDX options in particular. I have one other visual that compares average daily volume in index products. So
that reversal
what we're looking at here. That base on the far
on
left
the calls
is average daily volumes across 2024. And the blue line plots relative to that NDX volumes throughout this year, and the other two are S&Ps and total index options. So I'd like to call attention to the middle of that. In April, amidst that very high volatility environment, we did see a pullback in NDX options volume. What we have seen since there is, I think, a testament to the exposure of the index writ large. And relative to average daily volumes last year, NDX volumes are now, based on the current month, up 40%. And comparing to the whole index options market, they're up 6%. Nothing wrong with 6% year over year growth. But I do believe the market is expressing a view and using these index options to say, here's what I think over the next week, here's what I think over the next year, and that's super exciting from the role I'm in.
And the market is expressing that, positive sentiment. And as we've seen some of the earnings come in, I think 88% have posted beats. So it looks like we're moving up. But you mentioned tariffs earlier, so I do want to touch on that too, as far as the NDX. Do you think that the markets have become almost desensitized to this tariff talk and even potentially some of these geopolitical issues? Because market response has been, a term we've used quite regularly, has been surprising.
No, it has not been surprising, you stupid
for a good
chick.
Interview for me just to say yes. So the term I've sort of bandied about is inured, that the markets do seem.
Goodbye. She's got to be a big liberal. They're surprised, but the market's not. We haven't had no evidence of inflation at all, girl. More revenue is coming in the country for once. We were giving billions upon trillions away.
Even like a fraction of what we saw in April, having something that counters that from a price standpoint, from a hedging standpoint, could be valuable.
Well, stick around because we're going to talk about Netflix very soon, and then we'll be covering their earnings when they come out. But that's Kevin Davitt. He's the head of index options content at NASDAQ. Thank you for being with us, Kevin. We appreciate it. And coming up, we'll close out this market session. We'll get the big picture from our team at Charles Schwab. Stay with us.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs.
Okay, we got
plus a wide
7 more
variety of
minutes.
Futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Market on Close. We have just a few minutes left in our trading day. That means it's time for the big picture. We'll welcome in our team from Charles Schwab to do that. Joining us is Liz Ann Saunders, our Chief Investment Strategist at Charles Schwab. Liz Ann, thanks for being with us as always. I'd first just like to start with your thoughts on today's action. You know, we're seeing yet another record for the NASDAQ.
And you're shocked.
So the momentum trade is still in full force.
You're still worried about tariffs.
Move off the early April lows has had a lot to do with the retail trader. You see that
It's a lot to do with the retail trader.
Not only done well.
See, this is it. It has everything to do with the retail trader. Retail trader has control of the market. Do you believe that or not? Now, I said this years ago when we first started trading, and nobody would believe me. I mean, I got into fight after argument after argument after argument. That before you know it, and this was back during COVID, when we first got hit with COVID, and the retail traders came out. I said retail traders will take over and be a leading indicator for the market to come. So all I've heard here lately in the past 4 or 5 months is that Wall Street wants to bring the market down. They want to blame Trump. That's just it. They want to blame Trump for the crash in the market, so we could elect more liberals in there and start printing more money, tons of it, like we did the last 4 years. Over 14 trillion over budget in 4 years. So this chick gets on here, and it's not the first one I've heard, that the retail traders are the one that's controlling this run, and it's their fault. Their fault. It's our fault. Because this market's rigged. That's why these people became billionaires. They'd run it up, and then they'd get behind the closed doors, 8 or 9 of them, say, let's short the market. Let's get that narrative out there that we want to short this market and buy the dip, because, we can't keep buying this going up and up and up and up and up. Retail traders come in and buy the dip. So, I debated, I got 2 or 3 of them. And all I heard was, was dark pool this, dark pool that. The institutional traders follow the dark pool on this and that. And you had no clue in the dark pool what they were buying, if they were buying puts or if they were just buying it and scalping it like they do every single day, in and out. Big blocks come in, they run it up 20, 30 cents, and they get out of the trade and sell it. So I never could fall for the dark pool stuff. Now, if you were a day trader and you looked at it, in a day, and you could use that. But people were wanting to use them as swings, and I just couldn't get into that. A lot of institutional buyers. So now and then when the retail trader first came out, they were wanting to throw us in jail, saying, is this legal? That the retail trader can get in here and trade with us. And they were getting mad because I think they even knew that one day we would control the market. There's a lot more of us than there is of them. We outnumber them. Maybe not in money, but in numbers we do.
Was a signal, but I think that there is some complacency here too. We'll just assume that the market will dictate what the administration, how far they're willing to go. Unequivocally, I think any significant.
And I was complaining about all the printed money, and that's what they loved. They loved that trillions that Biden printed, same as Obama. Trump did the same thing. He printed 10 trillion. Obama did 11 trillion. Biden printed 14 trillion.
Good point there, Liz Ann. Thank you for striking that for us. That's Liz Ann Saunders from Charles Schwab. We appreciate you being with us as always. Coming up, we're getting ready to ring the bells on today's record-breaking session for the...
I considered myself a good trader when I said, when Obama started office, I said, you watch, the Dow will hit 20,000. 8 years later, we stopped right at 20,000. But I didn't think Trump would run it up. I was wrong about that. But then COVID came, so I had to kind of drop that thesis.
Articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
Alrighty.
Accelerate your market knowledge
and shift your perspective.
Okay. Okay, well, not a bad day. Eventually, we're going to have to pull back. But I heard from a lot of analysts that the second half is going to be the bang of the year. And we've already had the recovery, so I'm gonna have to think about this tonight. Come in tomorrow and just avoid Schwab when this chick comes on, because I don't think like her. I sent a message to Schwab. Get Caroline back. I traded so much better with her on there. I mean, I trade good with this chick too. I just do the opposite of what she says. If she starts to be very negative. Why? Why is the market going up? Why? So I'm going to get out of here and enjoy a relaxation period. Got a long night tonight. Oh, I was going to go see my accountant. I need to go see my accountant now. So let me go take care of that. I forgot about that. So I'll catch y'all later. I gotta get my paperwork straight. Yeah, I gotta do that now. Anybody have an accountant in here to help with their taxes and stocks? We'll catch y'all later.